It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform to over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
We're back.
It's like
We're
deja
back.
vu all over again.
Yes.
Yes.
Like Yogi, I think it was Yogi Berra.
I think so, yes.
Yeah.
He said that. He was a coach. He was a baseball coach?
Yeah, he was a baseball player and coach, yeah.
What year was that?
Long time ago. Long time ago. Old Brooklyn kid. Yeah, Yogi. Yogi always had silly things to say, like deja vu all over again, meaning, deja vu. I get you, guess.
Yeah, me and Nikki, we're more Yogi Bear.
Yes, I got it. I got it.
Hey, boo-boo.
I must have him on my mind because I saw a post about Thurman Munson, which was a catcher for the Yankees, number 15, and he was my favorite player. He died in a plane crash. So it was like kind of that same, not
Who's
the
the one
same.
that missed the ground ball at first? Wasn't it a similar name to that?
Bill Buckner.
Buckner.
Old Cubby.
Yeah.
Yeah.
I don't know why that came.
That's okay. Anyway, how are you guys?
Good. How are you guys?
Well, I was hearing on the break about your golf game, so please. So you're country club material?
Yeah, well, no, I was saying because I played some golf on Sunday. It was at Midlothian.
If you know, you know.
Country club, private. It's just not my scene.
Wow.
It's just.
But you're an Aspen guy now. You got to be a country club guy now.
I know.
So
I'm trying to.
These are your new people.
I'm trying to blend in.
Yeah.
It's tough. It's tough, though. It's not.
It's like Anne Hathaway in The Princess Diaries.
Yeah.
That's what I think when I think of him, Anne Hathaway. That's exactly what I think of.
Well, she has to learn how to become the Princess of Genovia.
Yeah. I feel the same way. I'm trying to turn into a princess. Yeah.
Mm-hmm. Right.
But it's it's just not.
You're not princess material either.
Yeah.
Aw.
Yeah.
But get your glow up.
It was fun. It's a different vibe. It's
Sure.
very,
Maybe if it were warmer, it would have been easier for you to relax, but the weather was not great.
That's true.
You were fighting off hail, you said.
It was hail. It was rain. It was a little bit of everything. It was like 45 degrees. So it was.
It wasn't warmer out there because usually you go out west, it gets a
We
little.
actually did have a pocket of sunlight, and I was making a joke. I was like, "Oh, this beautiful country club, it has, its own
ray of sunshine.
It's
sure.
got its own.
Got the VIP weather package.
Yes. But overall, probably not the best day to be golfing.
Yeah.
But it was fun. It was good to get out. It was first Chicago round. I had one a
Yeah.
couple weeks ago, but
Are you going to take lessons?
I say that
Have you
every
taken
year,
lessons?
but I've taken lessons.
Yeah.
I've taken lessons.
I need to do like a string of 5 lessons.
Yeah.
Yeah, that's when they can really screw you up for the whole year.
Yes,
and then the
exactly.
following year, you'll be better.
Well, I figure
It takes a year.
if I do a couple of them, it'll you'll fix the screw up throughout it. If you do one, they mess you up and you're just totally screwed. So you have to do 3 of them so they mess you up, and then by the end of it, you're like, okay, I got it now.
Totally makes
Figured
sense.
out what they were trying to do.
Totally makes sense.
Or you could just be a woman and then men will just offer to teach you.
Yeah. Just go to diversity.
I know. It's annoying though. I'm like, are you a professional? What are you doing?
No,
I don't want to swing like you. It's a no for me, dog. But anyway.
Yeah.
Bat, how was your weekend?
Weekend was good. It was a really nice weekend. Didn't do anything special, but it was a nice weekend. Plant, putted around the house kind of thing. I said, you know what? I don't care that there's a frost warning for this morning. I'm going to plant those plants. I don't
So
care.
you planted stuff knowing that there was a frost warning?
Yeah.
That's cool.
Yeah, you got to throw caution to the wind sometimes.
Or you just light your money on fire?
Yeah. They make it.
Yeah,
They're not that fragile. I'm not looking at orchids outside or something like that. They're not that fragile. So I did that, which was very, very nice. Watched some hockey last night.
Playoffs started.
Yeah, playoffs started.
Who is in it?
Well, I watched more of the Buffalo Sabre game more than anything else because we got a lot of Buffalonians.
Okay, they played the Bruins, right?
Yes, and they should beat the Bruins. I mean, they're big favorites against the Bruins, but they were down by 3 goals with not a lot of time left. I think they scored 4 goals in 10 minutes or something like that.
That seems like a lot.
Yeah. So it was good. It was good for them. I got a couple of guys on the trade desk texting me a little bit, so felt good.
Oh, because they're Sabre fans?
Yeah. Oh, yeah. Come on, Buffalo. That's we got a lot of
Buffalo
Buffalonians.
fans.
Oh, yeah. We do have the Buffalo Mafia here
Yes.
in the office,
yes.
so I try to avoid them.
Yeah.
Yeah.
We put away the tables, all the fold-up tables.
We did put away.
We hide the fold-up
did
tables
have
in
to
case
hold-
they get the itch.
Yeah, that is funny.
I think the Canadians won too. Also, I think that's
As a country or the specific team?
against the Lightning. I think they were underdogs. That's why I mentioned it.
Oh,
I think
okay.
they were the only underdog to win last night. But it was fun. Anyway, it was good. It was good. Good weekend. Vinny had a nice hockey game. He had 2 penalties, which was good. Got his name on the scoreboard.
Oh, in the sin bin.
Yeah. We won 3-1, which was good also.
Now that he's the biggest on the team.
He's one of the biggest, if not the biggest. Yeah.
Is he really?
Penalties.
Yeah.
How did that happen?
Because he's on the JV team, and a lot of the a lot of his old teammates are playing like lacrosse, so they don't play. So spring hockey is kind of a steppish down in talent, and you got some of the kids that are coming up from lower grade coming up to them, like he was last year, kind of thing, and now he's the big guy on the team. So it was good. It was good. It was fun. It was fun. He has fun out there. So
2 penalties though. Don't they like? Is
no, they
he out
weren't
for the next
majors
game?
or anything like that.
No, I know, but don't they have like wasn't it usually like if you were too aggressive or had too many penalties, you had like a suspension? Or,
Yeah, but it's not. They weren't majors. They were just
Isn't
minor.
that the point of hockey? Is to get the penalties? I'm so
No.
I'm so confused.
No. It's to almost get the penalty.
Yeah.
That's the point. You want to almost get the penalty.
not get caught.
Yeah. One was
It's
questionable.
not a
One
penalty
was
if you don't get
blatant.
caught.
One was really bad.
All I know about hockey is from smutty books, so I don't. Whatever. I don't care.
Yeah. So that was my weekend. It was good though. It was good. No complaints whatsoever. Weather could have been a little better, but we can always complain about that. Can't control that.
Nope.
Which was good.
Good times.
What about you? Did you go?
There we go.
Starved Rock?
Jinx.
I did go to Starved Rock.
No way.
I did. I went camping on Saturday. I left Saturday morning, and so I was there for one night.
I knew
So
when she said
I knew they were open.
she was like, "Oh yeah, they're open, and this is when they open for the season." I was like,
So, but because I go to Starved Rock a lot, but I've never camped in that campground. And then I hiked Matheson State Park because they're like across the street from each other. So I'd never hiked at Matheson, but it was really nice. It was a really nice hike. Not crowded at all. It was muddy, but it's fine. I had boots on, and I like walked across a log across a river to go see a waterfall. Like, shut up! It was free. They don't charge. Like, it's great.
So if this was a reality TV show and you could bring one thing,
survival item.
yeah, like what would you bring?
What I was very.
I want to make sure Vinny has it when he goes. That's
I was very comfortable. It did get really cold at night, so just make sure you have like the gear and stuff. But the campground was pretty full. Like a lot of people were camping, and it was breezy, but sunny and cold.
So you don't have
Saturday.
a special knife or a flint or anything like that we would make.
I do have a nice folding knife. Yeah. But I didn't use it.
Yeah.
I just went on a hike.
Stay warm, young man.
Yeah.
Is what
It was
I'm
just
telling
on a hike. It was a marked trail. I was not doing the Appalachian Trail.
Yeah.
They do that on on Naked and Afraid. Have you ever watched Naked and Afraid?
Sure.
One where they're like fully naked out in like some.
That one's
random place.
crazy. Yeah.
It's insane.
Yeah.
But they always have like you can bring like one
Yeah,
item.
one-
Yeah, you have
I was
like
asking.
three. Yeah.
There's like one guy that has like this huge machete. One guy has like this bow and arrow, and then there's a guy that brings like a fishing net, and they're like, "Oh God, this guy!" Like,
Right, or the guy with like the fire
you. Then they
starter.
needed the fishing net.
and then the
But
fishing
the
net is the
fire
best thing to
starter,
have.
yeah. It's like the weird thing. This guy's like, I have a cup, and
Yeah.
you're like, what?
Yeah.
And then he's like, does everything with the cup, but yeah. That's too
Makes
funny.
sense too.
It does make sense, but no, I'm happy to help Vinny if he
Yeah,
ventures
no, I'm
out.
being serious. Yeah. Gotta go to the expert. Ask an expert.
Something-
Maybe you can phone a friend or something like that out there.
Something like that. But we got a great show for you today. A lot of really good content headed your way here on Tasty Live on this magnificent Monday morning at the top of the 8 o'clock hour with a little research corner for you where Kai presents his outlook of the market for the weeks, and already just crazy moves up down in the markets. But Kai's going to be in to give his forecast at 8 o'clock. And then at 8:40, the Skinny on Options abstract application. Dr. Jim in the house. 3 benefits of being a bear.
Oh,
Hey, your preferences are your
there
preferences.
can't be much more than that.
Did Tim Knight
more
write
than
this?
3?
Who wrote this?
I don't know. I don't know what happened. He'll probably spin it and say, no, don't do that.
I don't consider Dr. Jim to be particularly bearish.
He's not. No.
Okay. Oh, okay.
Did I say Dr. Jim? I meant Mr. Tim Knight. Did I say?
No, you said Tim Knight. I said, but because it's a Dr. Jim
got it,
segment,
got it.
I said that I don't.
I thought you said I was all right, Spike.
No.
Yeah.
All right. It's all right. Then at 9 o'clock for market measures, Kai back again, part of the Zero DTE series. We have a weekly Zero DTE breakdown, performance in a strong rally.
Yeah.
What is that going to be about?
Well, we're going to be looking at the Zero DT performance over the last week, which, the market is up like a bazillion %. So it's obviously been a tough week for Zero DT trading. But we're going to take a look at each one of those trades and just kind of show what craziness has happened. And he's got a couple new little metrics that we're going to incorporate as well, which will be fun for the future. Kind of looking at like quantifying how much mean reversion there is on a day-to-day basis. So, really just looking at how unusual it is to have these just kind of one-sided face rippers where there's kind of no chop. So it's a cool one. Should be a good one. Yeah.
And then we have around that 9:20, 9:30 time frame, live from the trade desk, Quentin in the house, Q, counting down all the top trending tickers over at Tasty Trade, and Mr. Ryan Grace on the crypto side of things. So that will be great to hear from. But hey, in the meantime and in between time, if you want your daily dose,
Sure.
maybe it's my theme music. Let's go.
Our leading story, breaking news,
Breaking
across the wire. Our leading story, top story, just in.
In today's headline, this just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's 420. Yeah, it is.
Yeah, well, you knew it.
Just take a look at Tilray from all-time highs. Just poor Tilray. Hot stocks. Just
Hey, the OG face ripper, squeeze stock was Tilray. Way
No
back
doubt.
when.
Back in the day, which
Not
seems like
back in the
forever.
day, but in recent history.
Yeah. Well, that's back in the day.
Yeah.
I mean, where our history is so short these
Yes.
days. But you could look at CMG with their buy one, get one, right? Isn't that today?
yes, the burrito. Yes,
Yeah.
we wear a hockey jersey. So yes,
Yeah, basically unchanged at $35.
Buy one, get one. That's basically double meat.
there you go.
Get the double meat.
It depends on what year you compare those burritos to, because they're
That's true, they're-
really smaller now.
This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Also, good luck all of the runners today. It is the 130th Boston Marathon. So
Isn't the Chicago Marathon coming up?
the Chicago runs in October. Boston
really?
runs in the spring. Yeah.
Oh,
it's always near Patriots Day.
Shows how much running I do.
Yeah, Boston is like one of the elite
Yes.
races, and it's a difficult course. I am told. I do not run. But good luck to all the runners today. You're all winners. But any earnings for today?
UNH, one of the more popular names. I don't know, Halliburton, Triple M, maybe MSCI. If you look at that, I'm not 100% sure, but that's about it. Not too good.
Okay.
UNH.
I believe so, right?
Oh, yeah, tomorrow morning. Yeah.
Yeah.
Okay.
GERTX.
Yeah, GE, we don't trade that much, but
Yeah. Tomorrow we
Aero.
start off with some of the airlines and
Okay.
after
following
the.
that.
Yeah, you got UAL this week
Tesla
and some
middle
other
of the
stuff.
week. So
Yeah.
Yep.
Hey, well, the NASDAQ has scored its longest winning streak since 1992 as the historic stock market comeback continues. The Dow has led with Friday's rally of nearly 869 points. The NASDAQ Composite and NASDAQ 100 have been among the biggest stars of the stock market rebound this month. Let's talk about the indices and where we are to start the week.
Crazy Sunday
highs.
morning, right? A Sunday night opening for the E-mini S&Ps opened down around, I don't know, 70 handles or something
I
like
thought
that.
this was the one they'd surprise them because it's
too.
been so easy to just buy the Sunday
Yeah.
dip.
Yeah.
And then this one,
They just
more
marched
the same.
higher. They've taken back half of their loss. They're down 30 right now.
Yeah, it's
71.30 and change on the E-mini S&P.
Yeah.
71.
Volatility not moving.
Yeah, volatility not, well, up 36 cents, small, but yes.
Yeah, it's nothing.
Yeah. All night. I mean, like
Yeah.
even right after the opening, even the S&P's opened on their lows, volatility opened on its highs, volatility selling
Oil
off.
was up
Oil
5 or
on its
6%.
highs. Now oil still up $4.
I'll get to that.
$4
Patience,
and change,
grasshopper.
but yes.
Yeah.
What about the Russell? Russell's super strong last week.
It's the weakest of the group today, but again, it's a very muted. I mean, just the news and the headlines over the weekend felt not great.
Sure, yeah.
And, it felt like the MO of just buying the dip would maybe be tested for 24 hours, and it doesn't. It's more of the same.
Yeah.
The dips do not last long.
Well, the thing that might have been the instigator of that dip was that the U.S. Navy on Sunday fired on an Iranian container ship in the Gulf of Oman, and the Marines later took custody of the vessels. Then Iran's Revolutionary Guard fired on a tanker on the Strait of Hormuz on Saturday, and then all things are escalating. The ceasefire, the tentative ceasefire between Iran, U.S., and Israel is set to expire on Wednesday. What are crude oil markets doing?
Kind of. I mean, you still have a 5% move, but we talked about how like a lot of this news, which would have had a huge effect, 5% is still a big effect. But what had oil done prior to that? Oil has been very, very weak going into this kind of weekend. And any kind of news you would think would go higher. If this news had happened with oil on the other side of the coin, meaning last week it had caught itself a bid.
100, 105.
It would have been up $10, $15 from lofty levels.
Yeah.
It seems like all the first news is going to be a little bit muted unless there's a lot more of it, coming, in the following days. So,
I mean, we've been conditioned for the taco.
That's what I'm saying.
I mean, like the market knows the same thing we're thinking.
Yeah.
Yeah. It's tough to get any sort of velocity to any of these moves when everything is quickly reversed. So I think that's more of what you're seeing today. It's just nobody's really buying the fear.
Yeah.
And so, whether that plays out or not is the big question here. But oil at 87 and change, it was down $10 on Friday. Like it's right in the middle of that. It's you're in no man's land.
Yeah.
It doesn't scream peak fear, peak problems. Like it's high, but not that high.
Yeah, no, you're 100% correct. And volatility has been contracting in there. I mean, it closed at around 69. I'm looking at OVX, CGI, semicolon CGI. Remember, that was trading around 90-ish or so. We'll see how it opens this morning. I would expect volatility to be bid in there, but we'll see how it goes.
Okay.
Yep.
Hedge funds share of Treasury market, of the $31 trillion Treasury market, recently climbed to a record 8%. Apollo Global Management chief economist wrote in a Friday note detailing the trend. Investors now have one more reason to be worried about the world's largest debt market. Let's talk bonds here.
Bond market's not saying that. At least the 30-year hanging out at 114 and a half. It's had a pretty, volatility expanding on the way up a little bit here, coming back into the radar at the higher end of its smallish range.
Yeah.
I don't know, I don't know if this is the disseminated market or are these those kind of like loans to bank kind of problem that they have. I don't know here.
Mm-hmm. Yeah, bonds have been. They've been stuck here.
Yeah, they've been stuck. That's what I'm saying.
In the range, and I don't know if we have any Fed things coming up, but
no, it's a pretty quiet week. You will have your University of Michigan consumer sentiment kind of stuff come out, but on the economic report front, it's relatively quiet this week.
Yeah, I think from just a market perspective, it's the focus is on equities and oil, and that bonds have had two-sided action. I mean, they've been in the 113 handle, it's been a buy. In the 114 and a half, 115 handle, it's been a sell.
Been a relatively tight range. I don't know. Yeah. And currencies, have been doing the same. They've been having a little two-sided.
Yeah, dollar's been a little bit weaker.
Yeah, a little stronger this morning, but yes, weaker relative.
Hey.
You're going to get there too?
Yeah. Stop front running my stories. Put it up on the board. You can put it up on the board. Yes, dollar rebounds as Middle East tensions reignite. The dollar headed for its highest level in a week at the start of Asian trading on Monday. Also, earthquake reported in Japan this morning, triggering tsunami warnings, but there hasn't been any reports of property damage or loss of human life, but something to keep an eye on. Maybe a 7 point something on the Richter scale.
Oh, that's big.
Yeah. That's an earthquake.
Ooh. Scary.
Currencies. Now, go ahead.
The dollar, it's getting a little bit of a bounce today, but over the last week or two, it's been pretty weak. You're getting a huge move in equities, which I guess can be some of it, but
going back to the beginning of April, it was starting to get real weak, right? It had some strength going into that, then it got real weak for the last 2 weeks or so. Today it catch a small bit. It really hasn't gone anywhere, right?
Yeah. We've got some long dollar exposure. Gold and silver are both a little bit weaker, but they've bounced off the lows. Gold's like 100 points off the low. Yeah, I don't know what to think on currencies right now. The stuff that Glenn put me in, mixed bag. I've taken some off the table. The Hungarian, I forget the currency name. Do you remember that one?
Oof,
I don't know.
Yeah, he gave
Bundi.
something. Yeah, I took a couple bucks out of that. I just took off a British pound short delta position as well. But yeah, haven't
The
been
forint, the huff.
Forint. There you go.
The huff.
Yes, Huff is the
Yes.
the ticker for it. HUF. Yes.
Yes.
So I took that one off the table, but yeah, currencies have just not been my focus.
Okay. That is valid.
Too much else going on. I mean, you've got, V bottoms again in the market, and you got market at all-time highs.
Semiconductors going absolutely bananas.
Yeah, currency backseat.
I don't have a story about this, but just because we're talking about the dollar, what are the metals doing this morning?
So gold was down like 120.
Okay.
Yeah.
The low, it was 47.52 was a low. We're now at 48.
Bigger move than the equity market was having, gold.
Yeah.
On a percentage basis.
Yeah. It's had a nice rally back, which is kind of contrarian to what you would think with the equities going nuts. But the dollar being weaker, maybe that's like a long gold position. But gold and silver have both been relatively strong. They're giving back a little bit of the move today. But we're much, much lower on the Sunday open. I wish I bought them.
47.50, just rounding. It's 48.30, still down $50 right now.
Yeah.
Okay. In other news, AI chip maker Cerebras has filed to go public. I know, Cerebras.
I would go with that.
Yeah, Cerebras. Got it in one.
Cerebras sounds like a
Cerebras, yes.
T-Rex type ancestor.
Sorry, Cerebras, which provides cloud-based access to chips that can run AI models, has filed to go public after withdrawing plans for an IPO in 2025. The company's revenue grew almost 76% last year. OpenAI loaned Cerebras $1 billion and has received a warrant to buy the company's stock. Do with that what you will. Add it to the tally.
How quick things change. Like a week ago, everybody was like, oh, yeah, maybe we wait to go public. And now we're back at all-time highs. Everybody's like, yeah.
Turn those machines back on.
Turn the machines back on. We're coming public.
Yeah.
It's amazing that's switched so quickly. But yeah, there's just a lot of empty black hole of capital that needs to be filled with capital coming later this year. It should be very.
Isn't it amazing how the wallet's always there? Kind of scary.
Well, but it wasn't. Like 2 weeks ago, the wallet wasn't there.
Do you want to guess what this company's valued at?
Sure.
70 billion.
What do you say?
Probably more than that.
I was going to say, it's got to be triple digits, 120.
It says 35 billion here.
Wow,
Google. I don't even know.
This must be fake.
Could even be less.
Yeah.
It says their Series H in February made them worth like 23 billion. So their IPO target is 35. So that seems so cheap.
Yeah,
That gave the insiders 8 chances to get out.
Yeah.
I don't know if that's enough.
Right. Yeah, I don't know.
Might be a buy now. I don't know.
If you're an options trader, you are either going to love or hate every part of this story. That is that Google is in talks with Marvell to build AI chips.
Oh, boy.
Of course.
Oh, boy.
Marvell up $8 right now.
Sure. Alphabet is in talks with Marvell Technology to develop 2 new chips aimed at running AI models more efficiently. The news came out on Sunday. One of the chips is a memory processing unit designed to work with Google's TPUs, and the other the other chip is a new TPU built specifically for, of course, AI.
Yeah, Marvell all of a sudden went from chopping around at the 90 handle to almost 150 now. And
Without a downtick. I mean, we just talked about the bonds from the beginning of April. This is a stock that was under 100.
they got scooped into something else too.
Who, Marvell?
40%.
Yeah, or has it just been Google?
I don't know. I can't keep
But
track.
they had like that's the point. Is it's impossible to keep track.
Right.
'Cause they're all like,
and it's all interconnected, and
it's just a circle of like, Marvell is now the hot one for the week.
Sure.
We have some short delta there, but we're we have some long delta across the board in some of these chips, but it's getting less long because of the moves that you've had. Stocks like AMD, has V-bottomed all the way back to highs. AVGO is at 400 again. I mean, that took 3 or 4 sessions. It's been a wild run.
Intel is the it girl of the summer.
Intel does not go down. It's crazy. I mean, we poo-pooed Intel for years and years and years, and now it's at just under 70. I mean, it's unbelievable.
Like Intel is doing that scene from Pretty Woman. Excuse me, do you work on commission? I came in here the other day and no, okay. In other tech news, sad to report, Meta plans its first wave of 8,000 layoffs on May 20th. They intend to conduct the first wave of sweeping layoffs planned for this year on May 20th. The owner of Facebook and Instagram, they're going to lay off around 10% of their global workforce, or close to 8,000 employees in that initial round. They're also planning further layoffs in the second half of the year.
Probably more to come in this space. I mean,
Meta's down about $6, but it had itself a rally. Well, listen, everything had itself.
Didn't they lay off another 20,000 4 months ago?
Again, can't keep track.
Yeah, it was something like that. I mean, I think these are going to be.
I don't know. Zuck's pushing hundreds of billions of dollars into AI, and these are the consequences. So.
Well, yeah, it's probably a little glut.
Yeah.
I guess a lot of tech layoffs. That's what I'm reading. Yeah.
But Meta has been super, super strong.
Usually this is bullish.
You had about a week to buy it in the 500s, and now it's at nearly 700.
Oh my goodness.
Yes. It was that's the story on some of these. Is it looks ugly and it looks like they're going to zero, and if you blink, you miss it.
I guess 8,000 is 10%.
Yeah, I said 10%. Yeah, they have 80,000 employees at last check in December. In other tech news, Amazon stock is peeking into record territory as the AI script has flipped to positive. Investors are closely watching Amazon Web Services, which analysts see showing strong growth through 2026. Shares of Amazon moved into that record territory briefly on Friday, just a few months over fears that the tech giant's massive spending on AI triggered a major sell-off. Stock rallied as much as 2.6% on Friday. Fun story, though, Amazon's Blue Origin, they got a contract to send a satellite into orbit, and they put it in the wrong orbit. So it's too low. So the rocket came back, right, but they're going to have to do something, and they were like, what happened was
made a little calculation mistake. It went to the wrong spot.
Carry the one.
Yeah.
So they're not quite coming for SpaceX's crown. But what are you doing in Amazon?
Down about $2, $2.48. A small move. IB rank of 55. Earnings coming at the end of April the 29th. 9 more days.
Amazon's another one where the news was just hammering Amazon is missing out. Like it was almost Apple
sat in 200 for
people were calling for Jassie's head. Saying,
not Jassy.
Not Jassy. And then all of a sudden it's back at the highs in a week. It's pretty incredible. On that Blue Origin news, ASTS, which we have some short premium on, but we had some short delta because it's been moving higher, which is AST Space Mobile. It got taken down in that news. I don't know.
Oh, whose satellite that was?
Yeah.
Maybe. Yeah, I don't know.
There was something along those lines. So the stock's down 15% here this morning.
That is funny. Tesla set to report their earnings this week. They announced they are expanding their robotaxi service in Dallas and Houston. Howdy, y'all. The EV maker said Saturday that they would be rolling out robotaxi service to mark further expansion in the U.S. What are you doing in Tesla?
Tesla always makes our top 10 list, if not the number one.
Yeah.
They're hanging out just under 400, down about $2 this morning. I mean, everything's down around 0.5 percentage point to 0.75 percentage point. I thought it was going to be more than that this morning. It'd be interesting to see how the market behaves to this. But Tesla hanging out at 398.5.
Yeah, but it had that one day last week that it was up $35 just on. I don't think there was any news. The market was moving higher.
Yeah,
but it's one of those stocks where it's so momentum driven. I mean, you saw on Friday and into Thursday the 400 strike calls traded like a billion times. There were it was even hard to see on like the volume on the trade page, but it's just such a momentum move. Like you got to be careful of that in Tesla. I mean, you get these 40 or 50 handle face rippers after the stock stair-stepped lower from 500. And then all of a sudden you're right in the middle.
I just want to see a robo-taxi navigate. I believe it's in Fort Worth. Someone in the chat can correct me. But I think they do like regular cattle drives, like up the street, like actual cattle, because it's part of the history of the air, like driving the cattle to market. And I want to see a robo-taxi just
navigate
steer down a steer. I don't
Kind of cute. You can put those big horns on it, like they would do on the old caddies.
Just curious, like, did you guys think this through? Eli Lilly is in advanced talks to acquire Colonia Therapeutics for over $2 billion. The deal could be reached as soon as today, and it could include additional payments tied to Colonia meeting certain milestones. That's according to the Wall Street Journal. Lilly also seeing success with their pill form of their GLP-1. What are you doing in Lilly? I know it's kind of hard to trade, but a $2 billion deal. Like
$2 billion. I don't get out of bed unless it's $10 billion. Are you kidding me?
I'm so sorry.
$2 billion? This is tiny. Do we have a ticker on that stock?
I don't think so.
Colonia? I know. I kind of want that to be my new stripper name.
I don't think
that's
so.
a good one, actually.
Right? I like it.
Yeah, that's a good.
I tried looking for it. I couldn't find it. But Lilly, always on our top of our leaderboard for active stocks, not trading wise, but biggest movers of the day. When I go to, let's see what's making the market go higher or what's making it go. Lilly's always there, but it's really just a stock play. Can't trade any options there. The market's just too wide. 925, maybe down about $2. So far, we have not been able to find a stock that's moved more than $2, and it's always to the downside.
Yeah.
Okay.
Yep. Yeah. Have not been looking at Eli Lilly all that much, but healthcare stocks have been relatively strong.
Yeah, UNH has earnings. That would be the one that you could trade. 923, down about, you guessed it, $2.
Yeah.
Cool story. On Saturday, it was Record Store Day. Holiday shoppers have Black Store Friday, but if you are a vinyl lover, then you probably participated in Record Store Day. 380 new and limited edition vinyl releases hit record stores on Saturday, from Bryan Adams and Nico Case to Talking Heads, Wiz Khalifa, and of course something from Taylor. But vinyl sales, this is a crazy stat. I know this harkens back more to your era, Bat, but in 2025, vinyl sales topped $1 billion. In 1999, it was only $19 million. I collect records.
This is not the way to track it. So you have to track this with the wooden Apple.
The crate sales, the milk crate sales.
If you get crate sales, then you know that vinyl sales are going to be strong. That's how.
I think this is great that there's still a love in newer generations for vinyl and for all artists. But I started collecting records.
I know that I don't. I mean, obviously, I can't hear. Period. But I can't hear the difference between vinyl and. I guess digital music sounds a lot. Like I don't feel the softness or that.
Sure, I think there's a warmness and richness.
Yeah, I don't get it. It's just like drinking wine. It's either good or it's bad. Like I don't taste the current or anything else like that of the wine. I can't hear.
So you don't own any records, and Vinny hasn't gotten into records yet.
It's funny you say that, because we had a conversation last night that JP wants to buy his mixing machine that he's used 2 times, possibly 3 times.
Is JP a friend of his?
Yes,
okay.
yes.
So what are you going to lose on that? Like 40%, 50%?
Yeah.
Cool.
Average.
Half. That's not that bad.
He says his computer's too old and it needs an update.
Oh, yes.
Sure. How about you, Nikki? You got the hi-fi set up in your bachelor pad?
No, I don't. I just have the Bose, sound bar. But I figure that after this, you'll order something from like Wayfair, or you'll have some Amazon,
I just got a ding.
Table.
She already ordered it.
Did you get it already?
Yeah.
Do you have Rufus hooked up to like your voice, like so you can be like, here, order it?
No, but we'll get it.
Yeah, you get one of those. Yeah. No, I don't. Do you?
No.
Do I have what?
You have a vinyl player?
I have a record player. Yeah, I got it a couple years ago for Christmas.
Very nice.
But it's
Handful of records, or you got a
record?
You got a Apple crate
No, I have a stand. I just bought a stand on Amazon for. I buy Taylor records at like Facebook, but there's rare.
Those
like,
have to go for a.
They like the original Lover in Paris sessions, the original ones and the Orange Reputation Taylor record is like $1,200.
Wow.
Yeah, like
I'm not buying you that.
kind of crazy. I know. It's crazy. But here's something that is crazy. I don't know if you've ever been driving in our parking garage here in our office, but there's like a little Mini Cooper with like a
the dude wipe.
The dude wipe, right.
Guys. The dude wipe guys.
I don't know if the dude wipes, if their office is in this building or close by or... but they're good at like guerrilla marketing. So I saw this. So female influencers, of course, get PR packages, from brands. But there's guys, men can be influencers too. So this guy got a PR package.
For business.
This guy got a PR package. See what was inside. Watch this.
Okay, so I just got a PR package from Dude Wipes, and it's important to me that you see what I'm seeing right now. Mind you, this is for a product that they call menthol wipes. Watch this.
New menthol infused butt wipes are here. Buckle up with the extreme clean menthol.
Pretty good. They have fun.
Don't show that to me ever again.
I'm gonna use these on my ass. Okay, so I just got a PR package.
I'm thinking about this. I don't know if I want menthol.
You don't.
Oh, it's not menthol?
No. It is It is menthol.
You have that look in your eye.
That one is menthol. Maybe,
right.
Yeah, save a new one.
Yeah, I would say.
I think that's a play on words.
Your menthol, don't do it, fellas. Don't use dude wipes, but don't use the menthol.
Yeah, I don't know.
Oh, I got you.
Yeah,
okay. They got me for a minute because I don't know if I want menthol.
Try it.
Maybe it's a tingling sensation. Maybe it's cool. I don't know. I don't know. I don't know. What's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with we'll take a look back at last week. Take a look back at Sunday too. We'll make a 90 seconds Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with, look back at last week. Before we do, going forward for a moment, I forgot to tell you and Vanessa earlier, Sonny's going under anesthesia. It's my dog this morning to get his teeth cleaned.
Ooh. All right. That's good, though. I mean, because Zoe felt a lot better once she got her teeth fixed and cleaned. So this is good. Even though Sonny, he's still a spry.
He's only 7 or 8 years old. I mean, the other one's 13.
Young guy.
Yeah. So, anyway.
Shout out, Sonny.
That's our big news. Yeah. Mm-hmm. What do you got for us looking back at last week? It was kind of a crazy steady week in hindsight.
I mean, it was by the dip at any point throughout the week. We
started the week, I don't know, 350, 400 handles lower than where we ended the week. Pretty close.
Yeah, after a 400 point.
After a 400 point move, right?
It was not. I was not expecting.
On Monday we talked about sideways chop, and we had anything but that. We had chop, but it was straight to the upside.
Yes,
it was. It wasn't like a violent move, but it was a stair step move, which is, I think, one of the hardest ones to trade.
Yes, it was
stair step higher, stair step lower.
Yes,
hard ones to move.
And we'll see that in both the Zero DT research that we have coming up at 9 o'clock with Kai. Those trades were pretty much all of them were blown out. I think he had 2 winners of the bunch here to start April. But last week was one for the history books, and we have a full weekly recap as well that we'll get through. Friday going into the weekend, though, it was kind of surprising to see the strength that we had. I thought maybe you would get more of that weekend risk, like market kind of flattish, volatility expanding, oil kind of on the move. You had absolute opposite. It was just a face ripper to the upside. Oil closed near the lows. Volatility, I mean, the VIX was below 18, I believe. The VIX got to 17 and change. Which was, I mean, that was crazy. Yeah, 1748 was where it closed. It got as low as 1687. I mean, that's unbelievable.
Yep. In a very short period of time. I mean, 2 weeks ago it was 25 and change. Looking at VIX.
Yeah. I think the Dow is the only one that is not yet at all-time highs. I think the Russell the Russell made new highs. Did the NASDAQ get there too?
NASDAQ, even the S&Ps, Russell, everything but the Dow.
Yeah. So across the board, I mean, just unbelievable. I was not expecting to say all-time highs 2 weeks ago. I was expecting there would be some time for that.
Yeah.
I was looking for a bounce, not exactly a face ripper V bottom to all-time highs, but I guess next year in March we'll be able to do this again. It's like the third time we've had a March V bottom, March into April. It's unbelievable. Next slide here. So looking at some of the Mag 7s, Tesla had an incredible day, closed right at 400. You had Apple bouncing back. Meta is near 700 again. I mean, we joked about having a week to buy it below 600. That was pretty much it. And then it was just off to the races. Had a couple days, it was up $30 or $40 last week. I mean, it's back to middle of its range. Google is, I think, at new highs.
If it's not, just to go show off, I think it's down about $2 this morning. So
340 and change. I mean, that was one. You blink, you miss it. NVIDIA had another huge move to 200. Nobody wanted that at 170. It's now at 200. Microsoft is another one that has looked better than it looked prior to last week. We had joked that Microsoft was the one that was the selling into strength. We opened at highs. By the end of the day, it was in the red. It actually put together a handful of days, and it's back to the mid 400s right now, 420. perfect because today's 420.
That's today's date, 420.
And then Amazon, face ripper to the highs that we've seen in the last year or so, around 250. It was crazy how fast things moved.
Yes. If you blinked, you missed it, like you said in the very beginning.
You missed it. It was crazy.
Yep.
When we look at the sectors themselves, so it was the story of the market. Pretty much buy anything equity related, sell anything energy related. Energy was super, super weak. Oil got to what, 81? Is that kind of low?
I think it traded
Or did
under
it go below
80.
that? Yeah, it got to
It was low as under 79.
Yeah.
Just a couple pennies under 79. It's 86 right now.
Just an incredible move there. The energy stocks, like if you look at like an XOM or CVX, they've given up a lot of their move, but bounced towards the end of the session there. Tech was really the story. Semiconductors have been just on fire. SMH is at new highs, was making new highs basically every day last week. But Friday was much the same as the rest.
By the dip in SMH, it's down $1. It's only been up 70 handles in 7 days. Seems like 7 days.
I thought this was the one where they would give you a little bit of pain today, but
even the S&Ps are trading near the highs.
Seems to not matter.
Of the session, down 22. Nothing day so far. Unbelievable.
Mm-hmm. When we look at the biggest movers to the upside here, so you had a little bit of a bounce back in some of the stuff that's been very oil correlated, negatively correlated, RCL and Royal Caribbean in there for the cruise lines. You have some of the airlines like UAL is in there. Delta has been relatively strong. Your Love has been relatively strong. You got some of the squeezy stuff like Carvana was in there. You got like Coherent, which was added to the S&P 500. You had some of the chip names going nuts. I mean, it was just a strong day across the board. You couldn't really miss. It was everything is up.
It was good and better if you were a bull last week for sure.
Yes.
Depending on what you did. Yep.
On the downside, kind of not the stuff that we focus all that much on, besides Netflix, really, which had a huge move after earnings. Kind of a surprise there to see it down that much. It was down greater than the expected move to the downside, which was kind of surprising with the way tech has been looking. It was right in the middle of its range. You figured, Netflix was kind of due to catch up to the rest of the market, much like Meta, Microsoft, Amazon, those stocks that were kind of like less favored in the AI space. You figure maybe Netflix would have had that move. It did not.
Traded down to 95. It's 97 right now, unchanged for the day. For the 2-day period here. Got up to around almost 110, 109 or something like that. You do remember back in February it was $70, $80, something like that.
Yeah.
Back to the middle.
And then it got its $2 billion cash infusion from Paramount.
From their attorneys, they got a $2 billion from.
Well, the attorneys probably got half of it.
Yes.
Dow, CF, you got some of the fertilizer names that have been caught up in like the secondary part of the blockade of the blockade now. You have some of the oil stocks, VLO in there, material stocks, you have Albemarle in there. But it was really oil names were the weakness on Friday. Anything else was having a pretty decent day.
Yes.
We would look at the heat map. It was a strong session outside of energy names. Got a little bit of weakness in some of the memory stocks. Those have been, I think they're just kind of momentum to either direction. Your Micron, SanDisk, STX, WDC, those things have been kind of like uncorrelated to everything else. You can see here, it was a strong day across the board. You even had some of the defensive stuff like Walmart and Costco, which has been kind of the safe haven of the move lower. Those were even getting a little bit of a bid along with the financials as well. It was a face ripper of a week.
It was
just an incredible one for the history books. And we even talked about it's 99th percentile week. So you don't get those often. I don't think many people played for that sort of move.
I'm just going to pick the three big boxes on that top left there, NVIDIA, Microsoft, and Apple. NVIDIA trading near its highs. It was near its lows 2 weeks ago. Yeah. Apple and Microsoft are still, Microsoft especially is in the third lowest area that it's been recently. Has caught a bid, but it has nowhere near its all-time highs. As the market is at all-time highs, I'll just mention these as leader. Apple too. Apple's higher, but it's not near its all-time highs. Yeah. Interesting market here across the board. But let's take a quick 90-second break. All I'm trying to say, I guess, is those Mag 7 are leading, but not the leaders of this move.
But we've talked about this for the last couple of weeks. It's like they catch a bid, and the rest of the market's going to move that way. And the story was RSP and like equal weighted S&P over the last couple months leading up to like kind of the start of the Iran war, and all those Mag 7 stocks were kind of lagging the group. And the story was
equal weight is near its all-time highs right now.
RSP. If you have a catch up in the Mag 7s, we're 10% higher. If Microsoft is up, 30 or 40% from here back to where it was prior to the move lower, if it's at 500, what's the S&P at?
Oh boy. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with
Firm and Send.
That's correct. Emails. Yeah, viewer emails. We'll be back in 90 seconds. See what's on your mind. This is Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Niggy, we are back, son. And you know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send on Monday, 4/20. But before we do, let's take a quick look at the market here. Even the S&Ps are down 23.50.
Can't stop, won't stop.
Can't stop, won't stop. If you look at where they traded down to, they were under.
That is just an unbelievable chart. You just look at that and just, it's so green.
Yes, they've actually outlawed red candles. I don't know how that one's
So
snuck
if you
in there.
switch that to weekly, it's almost more jarring than that.
I refuse to.
If you put that on a weekly chart, it's just like it's unbelievable.
NASDAQ.
The meme. It's the meme. You know, the green bar meme where it's the guy like selling and it's like going down and then it just.
NASDAQ down 76, Russell down almost 20, Dow down 200, volatility up by 40 cents. Again, 25 handle move on the E-mini S&Ps. You would expect it to be met with, yeah, okay, that's a decent sized move from this highs that we've had here. But when you realize that overnight we were about 70 handles lower than that, you got to say to yourself, I'm going to watch what's going on here today. Bonds are down 8 ticks. Bitcoin, weak and staying weak relative. Now it's had a nice little rally here, traded almost up to 80,000, 79, just under 79 was the highs. It's around 75.5. I'll round down there. Ethereum down a little bit more than Bitcoin, down $113. Oil up 470. About $1 off its lows, which is still high by about $4 from Friday's close. What do you think about oil here? Is it hanging in there to you? It seems like it's hanging in there to me. I'm not an oil bull, although I do have a trade for option trades today that I'll be taking off, which was bullish in oil on a diagonal spread I stole from you.
I have a little bit of long delta in oil now. I mean, the move lower was
fast and furious,
euphoric. It was amazing.
Yeah.
And they killed out of the money upside risk. So if you had USO calls anywhere, they went from $3, $4, $5 to $1.50
to worthless,
in
basically,
pretty
right?
much one session. And the same with some of the oil stuff that we were doing with ratio spreads in like MCL or CL. We've done the Super Bowls where you sell a put spread to buy a call spread. Even those sort of trades worked to some degree because the volatility came in so much that the downside put spread didn't really move. So that's been unbelievable. I was a little surprised. I thought Sunday and the news over the weekend and just like the happenings of the flip-flopping, I thought today would be like kind of a trap. You'd buy the open on Sunday and then we would have a little bit of a lower open into the session as well as higher oil. Like I felt like it was kind of like a pain day where if you were a late trader to the taco and you were doing it this weekend, they'd finally smack you. They'd finally kind of humble you a little bit, but that is not.
But no, best laid plans of mice and men. Gold.
This is going back to Dylan Radigan. I am thinking too much.
Yeah.
Do not think.
Right. Just trade price. I say it all the time.
It is just. You watch the price.
Gold down $60, 48.20 or so. Again, doesn't give you the whole story about 70, 80 handles lower than that last night. Silver down more this morning, $2, almost twice as much as gold. Trading about $1 off of its lows, about $1 off its highs. Net gas finally catching a little bit of a bid. It has for the last 4 days or so. 2.7. I'm going to let it go right there, and we'll get to confirm and send your question on Monday. 420, your sister Chandler's favorite day.
Of course.
If you put on a debit trade, do you still aim for 50% of max profit or close roll at 21 days? What about if the trade isn't working? When would you close it? A lot of questions inside one question here. So the whole premise here is on a debit trade. How do you handle it?
So of course, there's a variety of trades that fit into this category. Like there's a difference between, a long call spread, long put spread, and a diagonal spread or a calendar spread. They're all debit trades, but they're very different trades. So I think the one thing with debit trades, and especially if you're doing something calendarized like diagonal spread, crab trade, calendar spread, there's a time variable that is hard to put a strict mark on, right? So when you sell a put, you have a defined amount of value that you can capture. It's really easy to kind of say, okay, at 50%, it doesn't make sense to hold that position and have diminishing margins of return while still having the same amount of risk. With a debit trade, a diagonal spread or a calendar, there's a lot of variables there. And so I think you have to be a little bit more subjective. I think it goes to kind of, the movements in the market. Like if you got long delta via call diagonal spread in anything last week and the trade moves dollars, you got to consider taking that position off. I think you have to be a little bit more flexible in general with the debit trades, just because there is that time variable that is very hard to quantify.
There you go. I can't add any more.
I wish I could say 50% was like the target, but there's too much of a variable there that you have to trade it more than set it and forget it.
Very good. Next one, please. It's much more of an active trade than the short premium side. Yes, I 100% agree with you. That's a good way of putting it.
Ooh, a bat versus bat throwback. When watching the old Where Do I Start bat versus bat series, Tony mentioned you like to have 1 to 2 beta weighted delta to Vega ratio. He goes on to state the Knicks account has about 300 short Vega exposure, so he's looking to get his beta weighted delta to about 150. Since this was 10 years ago, does that same ratio principle still apply? And do you continue to usually carry short beta weighted delta like it was mentioned in the episode?
No. I mean, markets move, things change. You certainly, at all-time highs the way we are now, if you had more of a neutral to bearish stance, come back to this like we had 10 years ago. But everything changed. This is why it's so hard to put something in a box. Like opening mechanics on strategies, you can put in a box and they don't change too much. Macro view on a full portfolio, I mean, if you were sitting like this for the last 10 years, you really didn't benefit from the move that we had to all-time highs. So I'm gonna say no.
Yeah, I think ultimately, like the
unless you tell me what your bias is, and then I'll say yes.
If you want to lean short, by all means do it. It's not. I'm a little bit more optimistic, and I tend to lean a little bit longer delta in the market as a whole. I think also, the short premium component here is great, and we've had huge swings in volatility, which it's been advantageous to not only be short volatility, but to have some convexity to your positions. And that's just how the market has been. 10 years ago, it was there. If you bought options, you probably didn't make any money because everything was such a small move day to day. It was like you had to, the big moves, we're talking like 20 handles on a downside move. Mm-hmm. You needed to have some short delta. So I think to your point, like there's been, you gotta trade what's
move, things change.
Yes. I mean, when the VIX is at,
we'll get back to this.
Yeah. When the VIX was at 10, it was a way different market than what we're looking at now. Mm-hmm. And VIX at 10 was the market being up 5 points every day, like,
clockwork.
Mm-hmm. Nothing moving. VIX 20 gives you big moves in both directions, which allows you to be a little bit more flexible with your trading, not just like kind of setting and forgetting.
Good job out of you. Next one, please. When markets gap up or down on the opening, okay, let's discuss something like that. Do you immediately fade it?
I wouldn't say immediately, but I mean, historically, that has been a pretty decent trade. I think being too, trying to, time the markets here has been a tough trade. So, selling at higher prices, that sounds great in theory.
Yeah, I mean, again, this is another one. Like, I don't know. Like, if I could certainly say that the move that, like on Friday, I faded the opening on Friday. I thought that enough was enough, 12 or 14 straight up days in a row going into a weekend with
the gambler's fallacy.
Gambler's fallacy, but I'm not rolling from yesterday, right? Yeah. So I started, and it didn't work. Cover and move on. Then see Sunday's move and go, God, I had them. I was just a day early, and now we're basically unchanged, higher than where I sold them. I'm like, this market is just amazing. So I don't know. You know what I mean? Like if we had, consecutive down days and we have a big down opening, I usually feel like that's a capitulation.
Yeah.
But it's
harder to quantify that on the upside.
That's correct.
It's momentum. There's bigger moves, relatively speking.
This move this morning is crazy.
Has surprised me.
It is, and now you got oil selling off a little bit here. Just
Did we get an early taco?
Made a new low.
Yeah, because E-minis moved.
Still up $3.
E-minis moved like 15 handles on whatever that was in the markets.
Yes.
And volatility is still very low.
Yes, down up 40 cents, but down $1 off its highs. Next question, please. It's you.
On Wednesday, the VIX futures were up small on the day. At the same time, ES was up about 75 basis points, 0.75%. I thought volatility only went higher when markets go down.
There's a couple of nuances here, too. Remember, Wednesday was VIX expiration, too, so the VIX futures rolled there. It doesn't have a big bearing on this question, but it is something to put in the background there. And you are right. I mean, volatility usually goes down when the ES is up 0.75 percentage point. I would say that volatility would probably be lower. That being said, it's about 80 to 90% of the time, and you are going to get moves like this, and you'll get more moves like this as volatility continues to go lower. If volatility continues to go lower, at some point the moves in volatility just get to be a lot less, because how low can risk go? I mean, there's always going to be risk in the market. There's always going to be some premium to pay for risk. That's our edge when we're looking to sell premium. So yes, you are right. 80 to 90% of the time, 85% plus of the time, you would expect volatility to go lower when the E-mini S&Ps are going higher. But again, it's not every.
We've had a news-driven market too, and the weekend has been kind of where a lot of things happen. So just
this is Wednesday, middle of the week, not necessarily the weekend.
Sure. But into the like the dynamics of this market up, vol down. Sometimes it's influenced by just outside factors, news, potential, that sort of thing.
Awesome. Let's take a quick 90-second break and come back. We got more Tasty Live after this with an option job. I'm back in 90 seconds of Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's options. Jive. Nikki, we are back, son. We got an option jive. Go. Even the S&P's down 19.
Let's do it. Little recap of last week.
I'm feeling a little menthol.
Oh, I saw some people mentioning like spins on it. Like there was a Frank's Red Hot.
Gotcha.
Like hot wipes.
Gotcha.
That wouldn't be fun.
No.
Last week, crazy week. Let's do a little recap here. So you had the ceasefire on, ceasefire off. Sunday night you had the panic off. Taco Tuesday. There's this
on Sunday.
This way, that way, up, down, sideways. The S&P gained 4% and the Nasdaq gained 6% on the week. Those are the actual numbers, right? Despite whatever you're seeing or hearing from anybody else, it's the market is all seeing, all knowing, and was up pretty significantly.
Oh, great one.
Oil fell sharply midweek. We went from 103 to about 79. So,
which slide are you on here for this?
Just the first one.
Go ahead.
We just went to the first one here.
Thank you.
We had a huge move in oil, 103 down to 79. We haven't had that there was calls for 150, 200. That's kind of been the MO on the upside. I still think the most painful thing would just be higher oil prices like this mid 80s to mid 90s for a sustained period of time. It would smash everybody's thinking of just, all the supply dynamics, all the, straight open, straight closed. And then, on the
only thing that matters to me was gas when it was 95 was 446 from 350. And now that oil is back to, I'll round and say 85, it's 86 and change. Gas at the pump has not
425.
Still 446.
You got about a 10.
Hasn't moved a penny.
Yeah.
If it moved $5 to the upside from 60 to 65, they raised it at the pump. Movement down, no.
Yeah.
No move.
No, I filled up my tank in the suburbs yesterday, and I think it was 425. I was like, oh, it's cheaper than I did last time. But the last time
you get remembered.
Last time was 450, and oil was at 115.
That's the point I'm trying to make.
It was that is for sure how it goes here. The VIX dropped to 17.5. That was kind of low print. Absolutely shocking. I mean, that was just an unbelievable move in volatility. Volatility just got hammered last week. Just incredible. So this week you have a whole bunch of things on the docket. You have the ceasefire is supposed to expire on Tuesday.
That's Taco Tuesday.
But that's Taco Tuesday, so you know that's not going to happen. So I'm sure there will be more news dropping throughout today, if not already dropping right now. Other than that, no FOMC earnings, or you got a couple names like Tesla, ServiceNow. Some of the service stocks are reporting earnings. Those are going to be pretty interesting because those stocks have just been killed. I think there's some interesting upside there if it's not as bad as everyone thinks. The pendulum swings back the other way. When you look at the index level, I mean, it's just been unbelievable. You don't see these numbers like this very often. 4% to the upside, 4.5%, 6% on the NASDAQ, the Russell 5.5%, the Dow 3.2%, the Dow the weakest of the group at 3%. Unbelievable. Historic couple weeks in the market here. One for the history books.
One for the history books is right.
Expected move for this week, 99 handles on SPX. Just incredible. It's made even in the middle of last week because we actually hit the butterfly at the end of the day. You remember we did the 115, 135, I think. It expired at like 41, I think.
You did
So it
the
made like a
100, 115, 7140, right?
We did.
In SPX? Yeah, I just looked.
Yeah. So
we closed at 7126. So 15 would be perfect.
Yeah.
You had $15 wide, so you had $15 worth of room to the upside. You were inside that. You made yourself a couple bucks on that trade. Nice trade. Yep.
But we were looking at iron condors and saying to ourselves, I don't know if I could sell this $3.50 on the 20-point wide.
Right.
You've been used to, with volatility high,
twice as much as that,
being able to sell $5.
$5, $6, yeah.
And so the game gets harder when volatility contracts. And I think that's going to be, the big difference for a lot of people is stuff that you were selling for $3, $4, $5 is now going to be marked at $3.50. And it's the same probability. I mean, all the probabilities, are the same. That doesn't change. It's just where that risk is and how much you're getting paid for that risk. That's really what changes. So it's going to be tough for those 0DT traders.
Yep. Well, they're going to just have to expect less, right?
Yeah.
On opening.
Be more aggressive with your management. Last week, it was a vol crush across the board here. So you have IVRs coming down across pretty much everything. Bond volatility low. Gold has come in despite the rally higher. Gold and silver have had some weird changes in volatility. It's been very whippy, but volatility actually expanded into the big downside move that you had in both gold and silver. And that has kind of contracted into the bounce that we've had in those assets, which is contrarian to what it usually does when gold and silver go higher, volatility tends to expand. We have not seen that. Crude oil volatility come in very, very significantly as well. I guess you got a little bit of added volatility in Bitcoin, but it just hasn't been the story.
We'll have Ryan on later today. We'll pick his brain.
Biggest movers of the week. So you had Robinhood moving on I guess it was at lows, but the PDT rule being finally abolished, or at least coming soon, hopefully middle of this year, that we'll have a lot more info on that. We will be the first mover.
Now, if Robinhood was 140 instead of 70, you wouldn't have had, in my opinion, this is why I talk about price, you probably wouldn't have that big of a move, that 30% move in Hood. Like it would have been 4%, 5%, 7%, something, but not 30.
Oracle had a huge move. I mean, that was up like what, $30 last week?
Yeah.
I mean, it went from like the 140, 150 handle up to 175. You had Coinbase moving on some of the moves in crypto. I mean, you got Bitcoin at 75,000, so it's near the higher end of where it's been trading. On the downside, you have some of the oil names, some of the fertilizer names, some of the stuff that has just been tied to the war and kind of the limitations there with chemicals and oil. Those have been kind of the names to the other side. Crude has shown a whiplash pattern. We're now quantifying it as, or we're labeling.
At least we have a name for it.
Whiplash pattern here. I think there's just been some craziness there. Up 12%, down 13%, down 13%. Just huge moves across the board. It goes back to 2020 when we were seeing the similar volatility, but I think it's its own animal at this point. I don't know if you can compare this to any other time.
I don't think so. That's why it's hard to look back at things. There are so many different variables. Size of the moves just by the price of the product, the volatility, what the climate, the environment was, what were past moves going into that move. I mean, it's good to look at. It's very hard to quantify for future results.
For sure. So last week's 4.5% rally was the 98th percentile in the last 10 years. The 2-week return of 8.3% was the 99th percentile, and the 3-week 12.8% was the 99.8th percentile. I mean, this is one of one. Mm-hmm. COVID rebound was the only other time we had similar type moves, but I think it's good to put the context there that this sort of move was historic. I mean, it's very. I would be hesitant to believe anybody that played for this on the short term. I think that's
Caught all of it. I mean, we were by default, just by the nature of our trading, bullish at the bottom. Now we were bullish before the bottom too. I mean, so a lot of these trades took a lot of management to them.
You don't hold the 1,000 points. You take 500, you take 700, you take 800. You think it was the craziest thing you've ever seen.
500 or 600, I thought I was a genius.
Yeah.
Now I've missed this. Thought I was going to get a little bit of an entry this morning, but man, you really got to.
You're never going to catch all.
That's why the hardest pull to make is usually the direction that the market goes.
Yeah. So you had moves across the board in basically everything. I mean, 17% move in Taiwan. You have, we were 12% across the board. You had a huge couple weeks here.
Again, a good thing to look at. You can't trade the Nifty 50. I mean,
No. I mean, some of these, like we've talked about the Kospi, which is Korea. EWY is kind of that.
Sure.
The way you can get some exposure there.
Yeah, sure.
FXE for, like an FXI for China, if you want to look at China there. But this just showing how incredible the move was across the board here. All of these moves are in the 3, 4, 5, 10 standard deviation here, about as rare as you can get.
Next one, please.
In terms of earnings moves,
These
banks
take a back seat, don't they? When you got a market that's moving like this,
for sure. But it was a mixed bag. I mean, you had TSM, ASML, which are two of the bigger chip companies and bigger components in SMH, going the opposite way of the ETF. I mean, it just tells you how volatile that space has been in both directions. You had Netflix down 10% on a week and a couple weeks where the market is up 12%.
Yeah.
I would not have had that in my book.
No.
Morgan Stanley to the upside, but you had, Goldman Sachs down and then it rallied kind of back. You had Wells Fargo down, JP Morgan was flat. You had Citigroup up like 8 or 9 handles, $8 or $9. It's been really, on the earnings front, has been very hit or miss, more so than in past times. If you tell me the market's up 12% on the week or the last couple weeks, I imagine that anybody that reported earnings had a relatively good move afterwards, regardless of what their numbers were. It's surprising to see that really wasn't the case.
Agreed. Surprising.
As we look at just the overall earnings snapshot, and this doesn't change all that much, 49% winners in terms of moves to the upside, 51% losers, average return of negative 0.2%. It usually hovers right around 0. And so we are right there. Not a shock to see. This week, you do have a couple of big names, UAL, United Health. Those are tomorrow morning. UNH is tomorrow morning. United Airlines after the close. You have Boeing and Tesla on Wednesday. Boeing before the market opens. Tesla after the close. You have Lam Research, IBM in there, ServiceNow, some big names coming on the board here. AAL and Intel later on in the week, but interesting week for earnings.
Very good. Let's take a quick 90-second break and come back. We got more Tasty Live. After this, we've got the opening bell. It's about 90 seconds. Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts.
Nikki, we are back, but late back. There's the opening bell. New producer, first day with his hands. Unbelievable.
You can't get good help anywhere.
Even the S&P, son, down 12. Didn't think I was going to see this last night.
Sold a little MES. A little bit.
Just now, you sold MES. Yeah. Good. Push that through. You sold them at 71.52 and change. They're trading 71.51 right there. NASDAQ down 7.5. 3, 2.
Up, go green. Got it.
NASDAQ down 5, Dow down 40, same as it ever was, Volatility up 20 cents. Bonds are 114.22, up 3 ticks. Bitcoin hasn't really moved. Ethereum hasn't really moved since the last time I quoted. Oil's moved, making new lows, up about $3, still up. What?
I was just really hoping we were going to get a higher print in oil, and I could do like some ratio spreads or
I hear
we're just not there. The $3. I need like 90 again.
You want 90 in,
on the oil futures for me to trade USO after or do something like crude future or something. It's just not there, and volatility isn't there as well.
No, volatility is not there in oil. We'll look at the volatility futures in just a minute here, see what's going on. I'm talking about the option pricing on there and see what's going on for there. I put on a calendar or diagonal spread in your favorite USO. It hasn't moved really that much, to be quite frank with you. You need a little bit more movement in oil. What else is going on here? Let's take a look at /CL OVX there. I didn't say semicolon. Trading around 85 and change. It did get down into the low 80s a day or so ago. Still at the low end of its range, the middle of Friday's range there. What do you see here, son? Let's take a look at what's moving this market to the downside. Meta down around $8 or so. RCL, which was one of the leaders in the clubhouse, to the upside, right? Down around 4.5. Google down around 3.5. Amazon down around 2 in the orders. GE, which has earnings tomorrow morning, down around $2.20. You look at GE markets. I'll go to May. They're untradeable. It does have some volume on the options that have been around. Remember, after expiration, you get $5 wide strikes, and some products you'll get dollar wide strikes. You'll see no open interest because they just started today, so they might have trade in them, but no open interest, because open interest is what's left over, unmatched trades. That's GE. What else do we've got? Amazon down 2 and change. Lilly, which is always one of the leaders. Meaning movers, up or down $3. On the other side of the coin, we got SanDisk up around 7. IBM, which has earnings later this week in a day or two, up $3.70. Tesla up $3. So kind of a mixed bag of tricks with even the S&P is down 11. You would expect that. The market moving about a 0.25 percentage point. You would expect it to be a mixed bag of tricks. Agreed?
I closed out of a silver strangle. Volatility in there coming in pretty significantly. We sold that middle of last week, so I was just taking off some risk. And then I just closed out of a Uber. We did a strangle, and I just bought back the puts into the move that we had higher, and now it's down a little bit, but volatility coming in. I took like 50 cents out of that strangle. I mean, it's nothing to write home about. It's just I'm trying to lighten up my position.
Trying to make $1 out of 50 cents, right? I mean, that's all you're really trying to do here.
Yeah. I mean, nothing's really moved all that much from Friday.
No,
so it's not.
Nothing has moved much from Friday at all. You are 100%
Like not a lot of things that nothing's really changed from Friday, which was a relatively light day from a trading perspective because it was just up and then sit. Like there wasn't a lot to do. If you were short volatility, it helped.
Yeah. No, you're right there. Yep, you're right there. And I'm taking a look here. Even the S&P is down 10, down 9 at the high end of its range since we've been open for just a couple of minutes here. Taking a look across the board on some of the positions that we have. No real outlier moves one way or the other, right? When you look at your P&L going across the board. Looks like more green than red. AMD up $6 would probably be your...
I mean, that's been an incredible move.
Yes, AMD flirting with Marvell type territory here. Yes, yeah, 284 or so, up around $6, 2% move in there. /ES expected move for the day, even though you've had a 70 handle move overnight. Looks like even the S&Ps are just looking at that same under $30 move in volatility. Really hasn't changed that much.
Yeah. God, I'm afraid to leg out of some of these calls that like diagonal spreads that we put on that are now, that go against you and they're now at a scratch and you're thinking, oh, this stock, it's still at lows. It's got to rally all the way back to highs, but I just closed out one in IBM.
Got to do something, right?
Yeah. I mean, but that option, the 265, 25 days out in time, I had that call from it. This goes back to the middle of March. I did the 265, 275 diagonal spread at like $8. That call, I can even pull it up.
Sure.
265, just to show like some of this stuff, like, a couple days ago, it's marked at $2. It's at $7. Like what do you do now is the question. Like you're back to a scratch on the trade on a completely directionally wrong position, and you're at a scratch. Like that's volatility's low. You've had the bounce. I think that's like what you have to do with some of these positions. Just take the money and run. And
Dow just turned green.
Unbelievable.
It really is unbelievable when you think about it.
Yeah. What's moving? Is there anything that's interesting that we can put something on in?
What's moving? Oof. Let's take a look around here.
I mean, I have AMD.
Yeah.
I have ServiceNow that has earnings. Or what about any of these banks? Like, oh my God, everything just moved. I was thinking, I don't have an Apple position.
Dow up 26. Dow and Russell's the weakest, down 8, which is a small move. Volatility up 20 cents, about a nickel off of its lows. I don't know. I'm speechless.
I know.
I really am speechless here. You want to look at an ES trade? I mean, or an SPX trade?
Not really.
Yeah. I don't blame you.
Do you?
No. That's why I asked it as a question. I would have said, you know what? Let's put on a little ES trade here or an SPX trade. ES be smaller than SPX. That's why I mentioned it first. All right. Are you ready to take a quick break here? Not what I expected. What are you going to do if the market goes higher? What are you going to do if the market goes lower before we take a break? Are you going to be more aggressive to sell them or more aggressive to buy them?
I have net short delta right now. So if we go higher, I'll be in the fetal position crying. But I did add a little bit to the short delta. Like I said, I thought that Sunday was going to be the change, like the one time where, buying the dip, you didn't make money
because of the prior moves we had in the market.
Moves. Like we're at all-time highs. We've had an incredible day, incredible couple of sessions and weeks. Everybody's talking about all-time highs. Nothing matters anymore. The taco is in. Usually when everybody's when everybody's figured it out after missing it, the 10 times that it's happened, you usually don't get it again. Like when everybody's prepared for it, you usually don't get it. And we're getting it today.
Once again, right?
Yeah. So I would like to see a little bit of a pullback pump a little bit of fear in here, bid some oil, and then I can trade. But right now, there's nothing like, what are you going to do? What are you going to, I mean, I got nothing interesting. I wish I had something.
Sad but true. I wish I had the same move for you. Yeah, nothing seems like.
I guess I like Amazon's like. I'm looking at stuff like I got some short premium that's come in, a little bit. So I just took it.
Even the S&P's down
that
17.
strangle at 751, and I bought it back at 651. I took $100 out of that. I have an AMAT strangle that I've been rolling up puts. That is basically a scratch. Like nothing is. You're not You've taken off the winning trades the last 2 weeks. Like now you're sitting on the stuff that has been a pain in your tuchus, and you're looking.
Well said.
You're looking at trades that are like scratch trades. It's not that it's not that sexy. Wish I had big numbers to throw at you. Those I've taken them off, and I wish I held them for the other 200 handles.
Let's take a quick 90-second break and come back. We got even the S&P's down 18 after making a high about 10 handles higher than that. You've got about 10 points on your NASDAQ. We'll take a quick 90-second break and come back.
On my E-minis.
I'm sorry, on your E-mini S&Ps. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was not a paid, you're not getting paid for this advertisement.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs. 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. You know what that means. Just when I thought you couldn't count on Monday being Monday, nothing says Monday like this, man. Dr. Jim is in the house. Monday himself. welcome to the show.
Man, nothing says Monday like a little scare the children on Sunday and then rip them back on Monday morning, right? I mean, that's more Monday than me. Is that not more Monday than me now?
I'll give you that. I will definitely give you that. You're 100% correct, Dr. Jim. I stand
Were you
corrected.
expecting the buy the dip to be working again? Is it just more of the same? Does it just, because we've been talking about it. I was like, we've watched it 10, let's say 8-9 weeks, right? It's been Sunday, you buy the dip, Monday is a face ripper higher. You're now at all-time highs. It's gone absolutely parabolic to the upside, 12%, 99.8 percentile. We're on the telltale event of history. The news is telling you everything's fine, or at all-time highs. Didn't you think it wouldn't work this one time? Like, everybody's on that side. It wouldn't work this one time.
But no.
Am I thinking too much? In the phrase of Dylan Radigan, am I using my brain too much?
Probably.
And, speaking of some Dylan Radigan, I didn't really expect a Nikki Batista Dylan Radigan rant this morning, but I think maybe you're onto something here. Like, I mean, it's crazy. It's crazy how predictably routine this has become.
That's what I'm saying.
Like Friday. Well, no, let's back it up a little bit. Friday, they pump them, right? And then Friday after the bell, that's when it comes out that there's some crazy stuff going on. It's not what we thought. And then they send them down over the weekend or whatever. And everybody's waiting for Sunday night. Sunday night, they cap them down. And then slowly but surely, they just kind of buy them back overnight. And then by the time morning comes, Trump rescues everybody. Like by 8:30, it's good to go. Now, he didn't actually, if I'm not mistaken, there was no tweet this morning, though. That was the thing that surprised me. Is that right?
Yes. I have not seen any tweet. I saw one unconfirmed from Iran that the posturing was tactical and that, the strait is kind of open, I guess.
Shame on you for both of you getting your news from Iran. Shame on you.
No, I'm not getting it from Iran. I'm getting it from Josh.
Me too. He's got the best Iranian sources out of anybody.
I'm just saying, my man took us down again, for the 9th week in a row. But but what's funny about all this, though? What's funny about all this, especially with the blocking of the strait?
Nothing is funny about any of this.
Well, I mean, it is, but it isn't. I mean, it's
I know what you meant. I'm just teasing.
No, of course, it's funny that they block the strait, right? And then Trump blocks the block, and then what happens? What happens to oil? Again, if you knew that beforehand, if you had that information before anybody else, what would you do? You would buy oil. You would borrow money to buy oil.
Sure.
You'd be like, this is the easiest trade in the world. And it went down 10, 15%. So really, truly, literally nobody knows. Nobody has a clue.
Nobody has a clue.
Nobody has a clue. You're right, Dr. Jim.
I'm just worried because the easy trade is the taco, right? That's the easy trade. Right. When does it become the opposite of that? It's been an easy trade. It's been the tacos coming, buy them. Yeah. And I'm wondering if that ever stops. Or maybe I'm overthinking and most people are overthinking it and saying it can't possibly be another taco.
Yeah.
See, that's the thing though. I mean, our tacos are a lot like pizza though. I mean, are they ever bad? You can always use another taco.
No, tacos can be bad. I don't know if pizza can be bad. I've had Domino's pizza, which is probably the worst pizza. It's pretty bad.
The thin crust
Domino's
has gotten
is my
better.
jam. Domino's is my jam, but go on.
Okay.
Domino's is your jam?
Of course.
I can't listen to another word you say.
Are you one of those Domino's Pizza elite members? You
can't beat it, dude. You can't beat it, man. $6.99 for 2 mediums. You can't beat it. 100% can't beat it. Anyway, carry on.
Yeah.
So you've had a bad taco.
Yeah, I've had bad tacos where it stays with you for a day or two. I haven't had pizza stay with me for a day or two, even if it's your jam, Domino's.
Okay.
That's how I look at it.
All right, fair enough. I'll tell you what, though. So one thing that I'll tell you, so I think everything that we've spoken this morning is nothing but truth. But there is no truer statement than what you said, Nick, on the opening bell this morning when you were talking about your good trades from last week and how all the quote unquote easy money or the big money's been made, whatever. But then you said, man, I just wish I would have held them for, another 100, 200 handles. That's how it's so funny that you said that because that just encapsulates how we all feel all the time. And so I know that there are a lot of new traders that are watching us, a lot of new people finding the network, whatever. I just wanted to highlight something. You almost said it kind of in passing, but I'm like, man, there's a lot of wisdom there. And so this is where having kind of an objective framework to fall back on is really helpful, because we all feel that way. We always feel that way, and you can't fall into that trap.
And you're never, it's different in that very moment. You're not, if you knew there was 300 more handles to the upside, you're not closing the trade. But in that moment, you're looking at this position and you're saying, you know what, it was a great time trade. I called it. I'm a genius.
Yeah.
Get out. You're never going to catch the full move. You're always going to manage a trade, because you can't, you don't have the crystal ball, and you can't look at things and be right and not take some off the table.
That's right. That's 100% right. Well, I'll tell you what, speaking of being right,
but then you're left. But wait a minute. But then you're left with now what?
That's the hardest part.
It's so much easier to manage positions, even when they're going against you. Forget about it's easy to manage a winner. I mean, that anybody can do that. You have a losing trade on. You've got a direction you want the market to go in. You got a feel for whether you want to put anything else on that might complement it or hedge the delta. Like you have, you're looking for action. When you're light on positions, you're saying to yourself, okay, what now? You're looking for the perfect entry to get in, and there is no perfect entry to get in. And if you're a smaller trader, it's even harder than if you're a bigger trader. Because if you're a bigger trader, you can say, all right, I'm a 5-lot trader or a 10-lot trader. I'll do 2 here. And you participate, and you're aggravated that, you got the direction right. You didn't do your full boat kind of thing. If you're a small trader, you're kind of sitting, waiting, or you find yourself going into places where you don't belong, meaning those smaller price stocks that don't move that much. Then you tie up your capital for when the market does move in the direction that you want to take advantage of, and you're in this vicious cycle. Trading is a lot of psychology.
You know what's even worse is if you were at the bottom and you weren't doing anything, you weren't taking advantage of the volatility and the cheaper prices relative to what you were looking at days or weeks prior, and now you're at the top, and now you're like, well, shoot, I missed it, now what? It's better to be like, all right, I caught some of it, I missed some of it, I'm light now, we're at highs, I can lean a little bit of short delta, I can have a little bit of short volatility, I'm a little lighter across the board. It would be way worse if you didn't do anything over the last 2 months because you were waiting for the lows to get in, and now you're back at highs, and you're like, well, shoot, I just missed the greatest 3 months of trading in the last 10 years. That's worse. You got to put some risk on.
That's so true. I mean, there's just so much truth there. Like that's it. That's kind of another way of saying nobody knows anything.
Yes.
Like we're talking about nobody knows anything in terms of market reactions, but nobody knows anything in terms of the best possible time to get in or get out, for that matter. And so that's why kind of staying engaged and staying active and staying objective is really the only way forward. And man, that's some good stuff. But Nick, I know you're short a little delta. So I know you got a little short delta. So this morning segment, it is for you, my friend. So Josh, go ahead and cue us up here. On today's piece, 3 benefits to being a bear.
This is not you, Jim.
3 benefits.
You're not a bear. You're not a bear.
I mean, I kind of, we'll talk about this in a minute, but I go back and forth.
Yeah.
I really, truly do. I mean, long term, I'm obviously a bull. It would be silly not to be, in my opinion.
Yes.
But shorter term, it's not that simple. Shorter term, I think, especially at all-time highs, I mean, you can't buy him here, in my opinion. There's no way. You're going to buy him here? No way.
I can't.
But anyway.
I'm
no,
with
you can't. I know Tony Batista can, but
No.
can we?
No, you've got to do it in an intelligent way. Like, I don't think selling naked puts here pays you for the risk that you're taking.
Yeah, but you still got a VIX at 18 or 19. I mean, you're getting paid a little bit, right?
Yeah, but I think a diagonal spread, which can get you the same amount of delta, is probably a more intelligent call diagonal spread.
Not have the tail risk.
Not have the tail risk. Not have the tail risk.
Calendar spreads, ratios.
And maybe you go lower and you lose $1, $1.50 on your diagonal spread that you put on because you were directionally wrong, but you don't lose the $4, $5 that you would on naked puts. Then volatility expands. Then you can do something in the naked put area. I don't know. That would be my call right now. Although even the S&Ps have rallied 5 handles since you said you couldn't buy them, Jim.
Well, there you go. There you go. Okay, so 3 benefits to being bearish. So, Josh, go to Q. It's on the intro slide here. Okay. So every trader has to ultimately decide what their directional bias is going to be at the portfolio level, and a strong case can be made for both a long bias and a neutral bias. I think those are kind of the low-hanging fruit, in my opinion. Long bias, you've got the positive drift. You've got the positive risk premium. Neutral bias, nobody knows anything, which ironically we've been talking about all morning already. But can we make a case for a short bias too? So is there a place to have some short delta? So I'm curious, gentlemen, day to day, I think long term, we're all probably bullish. I'm not even going to ask. I think that's a given. But day to day, I'm kind of curious, what side of the market do you prefer to trade the market from? Personally, I'm probably a little bit on the short side, but I'm curious to hear what you guys think. Day to day.
Man, here, if we opened where I thought we were going to open down 35 or 40 handles after the move that we had over the last week or so, I would have said it's probably a artificial news-driven move lower, and you should probably buy them. Now, opening basically unchanged on the overall market, I would probably lean towards maybe you got to sell them a little bit. I don't want to speak out of both sides. I don't want to speak out of both sides of my mouth here. The hardest trade to make is to buy them here, and we're probably going to get an up move before we get a down move. So if you're asking me, like
that pretty well.
I mean, he actually hedged the hedge. If you were listening.
I am so freaking confused with the market right now. I really, really am, and I have been since 6,900, and we're 71.
Position sizing, like you got to have you. I'm leaning short delta, but from a risk perspective and a capital outlay, I am at the 20% of what I'm normally at, and so to that point, you're a little all over the place at this point.
Yep.
You've watched 15% downside move, 20% upside move. It's okay to be kind of confused at this point. To answer the question of trading, I think it's easier to trade delta-wise from the short side if you're going to do this on the index level than it is individual stocks, because there's just a lot of convexity to individual stocks that I think occurs more often on the upside than you see in indexes. So if you told me I am normally, short delta, ES or MES, and long delta, Mag 7s or just, tech in general, I think that's a pretty neutral to bullish way to trade a core portfolio. And that's how
a lot of wisdom in that too. Talking about indexes and individuals, totally agree with the convexity argument there, 100%. Because the reality is, look at Dell the last 8 weeks, and people who've been following from theater practice, I've taken so much pain in Dell, being short Dell for basically the last 6-7 weeks. It's been absolutely brutal. I think it went up like 60%. In 6-7 weeks. I didn't even know it was a public company until a couple months ago. I thought my man still had it private. He's doing pretty well for himself.
No, they're funding the Trump accounts, so you can't.
Whatever they're doing.
No, you gotta put that in the Intel basket. You can't be short Dell. You can't be short Dell because it's been blessed.
It's un-American.
No, yes. I had to learn it the hard way. But you're exactly right, Nick. I love that. But it sounds like, if I'm hearing you guys correctly, day to day, you guys are open for business on all sides of the market. Is that correct? Like you're not going to necessarily, marry yourself to one side or the other. Is that accurate?
100%.
That's what we're trying to do.
Yeah.
It ain't easy though, because you usually find yourself on a team. Much like you, Dr. Jim, you're very loyal to teams. Like, you're either Team Bull or Team Bear.
Have you guys seen my Cubs? Man, my Cubs are looking good, man. Have you guys seen my Cubs?
Yes, they are. Yeah,
oh, yeah. Been telling you guys about the Cubs for years.
Years. Never knew about them.
Yeah.
Good job.
I think that's true, though. You do end up finding yourself on a team. Mm-hmm. And there's so many, that's a whole separate discussion. But I think people just kind of naturally find what temperament they like and what side of the market they like trading. And, it's kind of like, it's almost like financial media in a way, where it's like you can always make a case for the bullish case and the bearish case of the overall market. That's why you always have people coming out and saying one thing, people coming out and saying the other thing, whatever. It's the same thing from an actual day-to-day trading standpoint. Mm-hmm. And this morning I wanted to kind of focus on the bearish side, because the bullish side kind of sells itself.
Mm-hmm.
Like it's like a wild animal, man. It doesn't have to defend itself. You don't have to defend it. It can defend itself. And so I think here, when it comes to the bearish side, I think it can be helpful. So Josh, bring us back in here to the content. Okay, so we talk about static and dynamic delta. We talked about this a couple weeks ago, but it's very relevant here, so I wanted to make sure that we address this here, just in case somebody didn't see the show a couple of weeks ago. So directional bias, of course, can always be achieved in two different ways. Static delta, so this would be like a stock position or a futures position. The delta doesn't change as the underlying asset moves, which obviously has its own set of gimmies and gotchas, but you have to understand that's very different than dynamic delta with options. And it doesn't matter what the strategy is, it's always going to be dynamic because delta on an options position is by definition dynamic. So it could be a call diagonal, like what you were saying earlier, Tony. It could be a short put. It could be whatever. Whatever it is, the delta is going to move around. So the directional bias is not going to remain fixed over the life of the trade. And so when it comes to the benefits of bearish and short delta, I'm going to posit that you're able to tap into more of those benefits if you have at least some static delta in your portfolio. The benefits they're not as tangible if you only have dynamic delta in your portfolio. Nick, your short delta right now, it's mostly dynamic or it's a mix?
It's mostly static. So
there you go, man.
I look at it and it's a hedge. So I don't want my short delta to work. I would rather my long delta work because it's a bigger position. It's a little bit more dynamic. It gets bigger the more that I'm correct. Like that's the core part of my position. The futures, where I'm short futures, I'm using that as like trading, short-term price action. And that sort of thing is like right now is much smaller. If something crazy were to happen to the upside, that can change. But for the most part, delta-wise, the short delta, the static delta is not the core of my position. The core of my position is the options that I'm trading around that delta.
That's right. But here's the key around that static delta. So with that static delta, there's a couple things. Number one, obviously you're fighting against the positive drift. Like you even said yourself, you don't want it to work because it's not the lion's share of your delta exposure, which that makes a ton of sense. But in the event that something does come out or something does happen today that sends us down significantly in a hurry, that static delta is going to stay static for the whole move.
Yeah.
And that's a huge, huge benefit when it comes to something that is intended to be a hedging mechanism that you're just not going to get from a short call spread or even a naked short call. Like it's going to dry up so fast and you can be like, man, I got the move. Well, not the move that you wanted, but I got the move I was hedging against and the hedges didn't even really kick in. What happened? And by having static delta, you're kind of able to kind of work around that.
Yeah. And it's not always the same. Like it's not like I'm always holding short delta in ES. I was long delta and I was long delta NASDAQ as well. And now that we've gotten to a price where we've moved significantly higher, I have a lot less long delta. And now the short delta is more significant relative to what it was at lower prices, just kind of trading around the moves.
That's exactly right. That's exactly right. All right, Josh. So bring us to the next slide. This is going to be the meat and potatoes. This is the oatmeal and peanut butter, gentlemen. Here we go. The three reasons to be short. You guys ready?
Yeah.
Ready.
Downside velocity, negative skew, positive kurtosis. Those kind of go together, much like oatmeal and peanut butter.
Mm-hmm.
And then the short Vega hedge, right?
Yes.
So downside velocity, generally speaking, higher velocity moves are more common on the downside than the upside. At least they used to be. Right now, we take the stairs down and the elevator up, right? Like, so now... I mean, we're 12% higher in what, 9 days, 8 days?
Yeah.
Yeah. The 15% downside move takes, 2 months and the 15% upside move takes 5 days. So
that's right.
It's
so maybe this time is different. I don't know. Like, it's crazy stuff, man. But I mean, looking back historically, generally speaking, the high velocity moves are to the downside. So if that's what you're hedging against, this is where the static short delta can really kick in, much like you have position yourself for today there, Nick. But then secondly, the negative skew and the positive kurtosis, this feeds into the higher velocity moves to the downside because outlier moves, at least historically, are more frequent on the downside. And the positive kurtosis is basically, that's your black swan. That's your tail risk. The positive kurtosis shows that the tails in the distribution are fatter than a normal distribution would predict, which is suggesting that the outlier moves happen more frequently than we would think in a typical bell curve. And then lastly, of course, the short Vega hedge, but this is actually exactly what you're positioned for there, Nick. You've got your core short premium portfolio, right? You've got your core positive theta. You want to add some layer of protection against that. Well, short delta is a great way to do that because the short premium portfolio is exposed to volatility spikes. So if volatility jumps today up to 21 or 23 or 20 or whatever, then usually that's going to be accompanied by a market drop. That's like so reliable. I mean, I can't think of a scenario where volatility like spikes really high and the market goes higher. Like there can be days where obviously they move together, but those are typically very modest moves. Nothing super crazy. But you get a 3, 4, 5, 6% jump in volatility. The market's not going higher. The market's 100% going to be going lower in that scenario. And so these are 3 reasons to potentially be a bear, hold short delta, and they line up with what you're doing today there, Nick. So it worked out pretty well.
I think you can hold short delta and not be a bear. I think you could hold short, like being a bear.
Explain to me how that.
Explain.
Being a bear.
I believe you're right, but explain to me.
Being a bear and being a bull is so like the thought is it's so one dimensional. Bullish, up, bearish, down. Like I am bearish at all-time highs now after being bullish at lows when nobody wanted to be bullish. And I think that's how you have to approach trading. You can't just be stuck in this one way where, I'm going to be bearish. And like, how do you even quantify that? How do you even do that on a day-to-day basis when things are moving? I just think it's hard to, I think you'll miss way too much if you're either or. Like you have to be a little bit of both. You have to trade.
Great.
What were you going to add to that?
No. I agree with you. You have to trade. And then you can have short delta in a beta weighted portfolio that still benefits from other parts of your portfolio moving in the other direction. You don't have to have 10 stocks all short delta, 10 stocks all long delta. You can have a mix and have a beta weighted portfolio that's negative delta on the overall S&P.
Yeah.
Probably
and I mean, what you just described there, Tony, is kind of this whole idea of strategic diversification.
That's
where
correct.
It's more than just at different assets. I mean, that's one part of it, but you get into different strategies, you get into different directional biases like inside the portfolio at the micro level. You get into different expiration cycles. Like that's what makes it so exciting. What we do every day with derivatives is like there's so many things you can do that are just, I mean, it goes way beyond like a 60-40 or whatever it is in terms of like traditional diversification models. And so, yeah, it's exciting stuff.
Work.
And so, man, let's get them a few takeaways. Man, let's cut them loose into the forest. Here we go. We all must choose a directional bias in the market with our portfolio, even if that choice is to have no directional bias at all. And having a long bias might seem to be the easiest choice, given the positive drift that has propelled the market higher over time. But strategically, a strong case can certainly be made for short delta, even if only temporarily. And again, at all-time highs, you're certainly
better
not selling
time.
below. That's for sure.
There's no better time to sell them than here at all-time highs, right?
We've been saying that. I think I've been saying that every day for like 3.5 years straight.
Yeah.
And so maybe it's time to rethink the strategy.
Good job out of you, Dr. Jim. Good job out of you, Nick. We're going to take a quick 90-second break. Most surprising for me, the lack of movement, lack of two-sided movement. Even the S&P is down 7. NASDAQ
Are the buyers exhausted or the sellers exhausted?
Yes. NASDAQ down 74. Russell's up 5, and the Dow is up 4. Volatility up 34 cents. 15 cents off of its lows. Been hanging. This is about as high as it's been since we've been open for the last half an hour or so. Oil 364. It's been about 70 cents lower. OVX colon CGI trading around 73 and change, but holding steady. Very small movement in volatility in oil. You would expect that to be maybe the biggest volatility of them all, or the most movement, and you haven't had any so far. We'll take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got Kai in the house.
That's right, Dr. Jim. We're replacing you with the real man, a real researcher, Kai. We'll be back in 90 seconds. Tasty Live. Thanks, Dr. Jim.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live. That's right. We've got our man Kai in here with a market measure sponsored by the SIBO. How are you, Kai?
Woo. I'm doing great. How are you guys?
Doing good. Thank you for asking. Do appreciate that.
Happy Monday.
S&Ps, you're a student of the game. You watch the markets all the time. Even the S&Ps down 14. Did you have that on your card Sunday night? After we opened down around 70 handles?
No, I thought it was going to keep going down or stay at that level, right?
Yeah.
And I saw a rally from -1% to 0.5% to a quarter this morning. Now it's close to green.
The one constant for the bulls today, if there's anything, is oil up $4. It's $1 off of its highs, but it's still relatively high, up 4 3/4%, anywhere between up 4.5% and 5.5%. It's up around almost 5% right now. Volatility up 40 cents. That's a 2% move with the E-mini S&P is basically unchanged. You actually got the Russell up 4. It's definitely a mixed bag of tricks.
AMD was pretty strong.
Say again?
I just sold some Russell.
Just sold some Russell, yeah.
And I did some 1x2 crab trades in USO. I wanted it higher to do these wider. So this is basically like a calendar spread, but I couldn't.
So you're bringing in your risk a little bit because you don't want the delta risk because you expected more.
We're a quarter of the size that I'm going to go to. So I want more higher oil, higher USO, and then I will be adding.
Got it.
You're going to be down for the year?
Okay.
The risk on the upside is ruin. The risk of ruin is very high. So yeah, but we've been doing that all year long. It's okay. We'll survive.
Yeah.
What do we got? You good? Little zero DT.
I'm ready.
I know the one thing with Kai does get a little upset because you have the zero DT on, and then you come onto this show, and this is right around the time where you got to be managed.
Oh, you got to be managed. Yeah.
This is.
But this morning, so far so good.
So far so good. Which
Is it around a 15 handle?
You're only down 9 now. So do you have a GTC in for yours?
Yeah.
Oh, okay.
So you're ready to
I have.
Good job.
Today's probably a good day. We missed it. We didn't. It's hard to look at these at $3.50 when they were trading at $5 last week.
Yeah, if you're not afraid of the volatility in the first 30 minutes, the premium actually drops really quickly in the first 15 minutes. Very quick. But yeah, I understand a lot of people want to try to avoid the macroeconomic news or whatever happens in the first 10 minutes in the market. Yeah, you probably can start with the 9, but I just over the years, I've seen the premium drop so fast in the first 15 to 30 minutes.
Hey, good job out of you.
All right, so today we're going to do kind of a half-month review of what happened in the April. And since we already have a research corner showing in the past 2 and 3 weeks in the April, we had a crazy rally, almost the second highest in the past 15 years.
Wow.
Only after the COVID rally, because that was
Yeah, that was incredible. Too.
Yeah.
It's crazy. I mean, 99th percentile.
99.8 percentile, right? That's more. That's above 2 standard deviation.
To be exact.
That's above 3 standard deviation.
Oh, that's 3 standard deviation. That's right. Yeah, 3.
Yeah.
So you haven't watched the read the presentation. What would you expect the first 14 trading days in the April?
You got to know that these aren't.
I would think that it didn't do well.
Yeah.
I mean, I would think that it would be a struggle bus.
Okay.
Right?
This is going to revalidate the fact that you need to be able to withstand, like for a lot of time, unless you're doing just the one side, which has been good if you're just doing the put side, those were all max.
It's so obvious, right?
Very, very quick, so obvious, so easy. But if you are doing the 0 DT iron condors, there are periods, long periods and long stretches where it's free money. And then sometimes, you gotta give some of that back. And last week was probably one of those occurrences.
That's right.
Yeah. All right, so let's take a look at what happened in the market. So this is just a brief review. Since April, we were up like almost 12%. Because we have a large move in the very last day in the March, so that actually cut off like a 1 or 2%. But this is crazy move we haven't seen for years. So obviously the results is not going to be as good as we expected for trading. Looking at the long-term average, we're definitely facing the upside challenge. And the VIX dropped almost half of its peak value because we're touching 35, like intraday sometime, then dropped to 17.5.
Yeah, we're at 1915
That's
right
19.
now. Actually, near the higher end of where it's been trading today. Not that it's high, but I mean it's high based on historical averages, but not our data set.
Yeah, so we haven't seen this for quite a while, but this is not like unrare. I understand the magnitude is kind of a top 0.1 percentile, but this kind of action, we rally hard and implied volume drops. This is you're probably going to see once every 5 months or so. It really depends on the magnitude or the momentum. But this is going to happen, and how it's going to challenge your iron condor is what we focus on today.
Cool.
Yeah. So the second slide. So we're going to take a look at the volatility, realized volatility versus the long-term average. If you remember in the past month, the whole March, every single bar was higher than the historical average. We have higher trading range, higher overnight gap. We have higher realized volatility during the trading day. But in the past 14 days in April, it's slightly different. The intraday is kind of a suppressed. It's actually both. Day to day, close to close, and also the intraday range and realized volatility is lower than long-term average. 5, 10 years, 3 years, all lower than the average. The only thing much larger than the average is the overnight gap. And we see a couple of big gaps when market opens, right?
That's kind of an interesting point that a lot of the move had been overnight. Like the intraday move was not as great as the overnight move that you had. Like with 0 DT trading, you're not at risk in the overnight session. So that's an interesting.
It's not as interesting if you're extrapolating out for our 45-day time, guys. Like more of the quintessential tasty trade trading. You miss a lot of those opportunities overnight from the movement. You're thinking the next day what you're going to come in with, and it's a completely different story.
Yeah.
Yeah. So looking at
hard to prepare, I guess, is what I'm trying to say.
Looking at the long term, we would probably kind of feel like overnight gap. We see like a 0.25% change. That's normal, right? More than 0.5% change, we kind of understand there's something going on in the market. But if you remember, in the past 3 weeks, we have multiple gaps.
Yes.
More than 0.5%. So this is why this brings up this gap much larger than the long-term average.
Okay.
So now we want to see, okay, so intraday is kind of a smaller than the long-term. We avoid the overnight gap. So how was the performance? Okay, so slides is here. So we can see in the past 14 days, we have 14 trading days, we have 3 losses. 2 of them reached the max loss. The other one's very close.
Yeah.
Very close. So these 3 days are very strong, one directional move. Most of the days are pretty strong to the upside, right?
I would have, just looking at the chart, I would have thought it would be a lot worse than this. But it makes sense because a lot of the move was in the overnight session. So, some of I would have expected pretty much all of them to be max losers because of just the sheer magnitude of the move. This is interesting.
You know what? If we hold to expiration, we definitely see a lot more losses than only 3. The reason, so we talk about the iron condor. So it's not about the trading range. That matters a lot.
Yeah.
And what also matters, very important, is intraday, if there are any pullback or like revert to mean action happen in the market. So we don't see in the bar chart, but intraday, if it's kind of a choppy day, it's actually good for iron condors, the majority of our 0 DT positions. But if the market goes
if it's
up or down, one direction,
it's not good.
Yeah.
And that's because the profit target is so manageable. It's a relatively low amount. So if you have an intraday, the market goes up 60 handles and you have a 20 handle pullback to like kind of the middle of the range, that iron condor that you put on in the morning, if it's 2 or 3 hours into the session, you're probably getting hit on that profit target because it's such a small amount. You need that one little move to kind of get out of that position, regardless of where we end the day. And you usually, in a two-sided choppy market, you get multiple of those throughout the session.
Exactly.
To kind of bail you out. You could even see it here in the one winning trade that went a little bit longer, into the middle of the day. That trade, if you probably held it to the end of the day, was probably
very close to the end. Yeah.
Yeah, it was probably a losing trade. So it's like,
but we saw one pullback. Then you actually hit that 25%.
Yeah, exactly.
So we just need one decent, like a revert to mean action. Then you can take off your profits.
Yeah.
So that's why taking profits is so important, because without taking profits, you're going to see at least half of them are reaching max loss.
Yeah.
And also, I didn't add this chart. I also calculate if you manage stop losses, pretty much majority of the trades will trigger max losses. Not max losses, stop losses. And your average P&L is not going to be better than this chart without touching it, because
you're losing
you hit so many losses.
Yeah.
Pretty much every single day you reach like at
you
least.
had a chance to manage a loser, you had a chance to manage a winner. Is really what you're trying to say.
But if you
inside a standard deviation, if you put that stop loss, stop gain, you're really leaving it up to randomness whether you get filled or not. That's why you have to be able to position size it properly, small enough.
Exactly. So order entry, how you're going to set up your strategy, probably more important than, I want to, the loss is too big, I have to manage that. Look at the long term for this type of iron condor, no stop losses, or setting up the stop loss very large target, high target, which is equivalent the same, right? Probably is a better idea.
Mm-hmm.
Okay, so we want to dig a little bit deeper into what this happens intraday. So let's go to the next slide. So these are the 3 losing days. So we can see none of them ever come back. The one is kind of not reaching max loss. It's in between the long and short call strike. The other 2 is actually breached even the long call strike immediately within a couple of hours. Never ever even come back. So these 3 days are tough to manage.
Nothing you could do.
Yeah.
There was no, it was instant.
And also, this is actually complement our last week's segment about rolling strategy. Very good. So our testing shows rolling puts, not like legging out. Rolling puts upside didn't work very well over the long term. But if you only look at the past month, this current month, rolling puts probably works really well.
Yeah, because you
So,
have.
hey, why shouldn't I just roll up the puts, right? But it might hurt you in majority of the markets.
Yeah, it's hard to cherry pick any of this stuff. 'Cause
Exactly.
It's so fast. I mean, you're talking about like 2 hour, 3 hour trades. It's hard to say, oh well, I should have done this on last week's trades when if you did that prior to last week, it didn't work for you.
Yeah,
like there's too much variable there. You got to be kind of mechanical and set it and forget it.
And I understand if the volatility drops so fast during this rally, you actually your rolling credits become much cheaper. Than kind of a normal days, right?
Yeah. I mean, then that's what we're looking at now on entry. It's so much cheaper now, too. That's another
For selling premium, that's what I mentioned earlier.
It's like it's hard to be mechanical with it, but I think that's really what you have to do.
Exactly. So next slide. So let's go to the next slide. So this is the total trading duration or total trading time. It's not number of touches, just total number of trading duration, the outside call and put side. This is the only period of time we see zero time trading outside of the short put strikes. Never even touch the put side.
Yeah.
But 29%, almost 1/3 of the time, the SPX stayed above the short call.
Which is also really rare, too.
Very rare, yeah.
So again, it's hard to cherry pick. Like you couldn't have. Last week was an anomaly to the upside. There wasn't anything. You're outside all of the averages. Like it's just going to happen that way. Where you're going to have tail risk. Typically, you think of it to the downside, but last week was an upside tail risk.
Oh, of course. In the past 3 weeks, this is the past 3 weeks. Yeah.
Yeah.
Every single week was the upside challenge.
Yes. And at some point, you mentioned gambler's fallacy just a moment ago. I mean, I don't know how you play for the biggest 2-week consecutive move in history. Like, how do you, I don't play for that. So I got mad at myself all week long for missing those 200 handles or so. But really,
you don't know, right?
Well, I don't know. I don't ever know. But I certainly know we weren't going up another 200 handles from where I thought we were going, and we did, because it's really the first time it ever happened.
That's the real gambler's fallacy, because the gambler's fallacy is not looking at it now. The gambler's fallacy would have played into the middle of last week where you said, okay, we've gone 10% higher. We can't possibly go any higher, and we went another 3% higher.
Right.
Like, that's where the gambler's fallacy really plays into it. I don't think you look at it now and say, okay, now I'm getting short. Or adding or being more wider on the calls.
Yeah.
You probably did that in the middle of last week.
That's right.
I literally thought before the 7,000 or the previous highest, we're going to stop or pull back for a couple of days, 1 or 2 days.
Yeah, exactly.
And we end back up, right?
Exactly.
That's what I picture.
You were expecting typical market action because that's what we play for.
Yeah.
You weren't expecting the outlier move to the upside or the outlier move to the downside.
Yeah.
And also,
the question is, now what?
You're in a weird spot.
You got volatility staying bid all day long right now as we kind of meander around doing nothing at 20.75 up 46 cents.
So assumptions always changes, right?
That's correct. That's correct. And it should always change. That's what trading is.
Yeah.
Mm-hmm. So next slide is something new. I added because this is one in 10 years kind of a rare events. We show very strong momentum in one direction. So actually, during the weekend, I came up with a kind of a momentum versus mean reverting score, kind of scorecard. I put in a couple of consideration into this kind of methodology, including the magnitude of the move. I take into the IV and HV into consideration, and the number of pullbacks. With a meaningful, more than 0.1, 0.2, 0.5% pullback, and the magnitude of the pullback, and some other things into consideration. So this scoreboard is the higher the score, the more mean reverting action you see during the day. So the 3 losing days actually have the lowest score, which means in that 3 days we see the weakest kind of a pullback or mean reverting action during the day, and that green day, very close to the end, is the 4th, is the April 17th.
Okay.
Also sitting at the bottom.
You really only got one. in terms of the score, you probably only had one or two of those like opportunities in that data set versus the April 10th, you probably had like more choppiness. Where you had
the most during that 14 days.
Yeah, that makes sense.
So now we can see. So if we measure the internal momentum or in the pullback, these three has the weakest action in terms of the kind of a choppiness.
The higher the number here, the better it is
for Aaron Condor or option traders. We have more opportunity to take off our positions, even though at the end of the day you see the bar is really large. I believe the April 1st or the other day has much longer bar than April 2nd. But in those 2 days we actually were able to manage 25% because we have one or two pullbacks during the day.
You can almost call this like choppy versus like trend trading days. I would be interested to see how this looks in our like full data set, like how many times we are in the real choppy range, the real trendy range, and then like somewhere in the middle, like quantifying like almost a distribution.
I tested that for the long term, so I think the threshold is 2. Below 2 is kind of a very strong directional move that we can talk about next time.
Yeah.
Sure.
Really cool.
So the very last slide is for people who are interested in trading put spread or naked put. You're like a one directional.
Yeah.
You don't care about the upside additional premium. So this is results for sure in the past 3 weeks. Nothing can beat the bullish strategy.
No. If you were bullish into a 12% up move, you did okay.
You take off a position into 15 minutes every day.
Yeah, you probably wish you took 75% of the max profit instead.
That's right.
Or 100%. You should just left it until expiration.
Why didn't I just hold the expiration?
But that'll flip. Like everything evens out. So
everything does equal itself out, right?
Yeah,
really good work, Kai. Honestly, nice little kind of market measure that we don't usually look at. Kind of like I know we look at performance of them, but you came up with a nice little metric how to quantify it. Yeah. Nice job, man. Good job out of you. Good job by the market.
And these are going to be way more valuable because once PDT goes away, this is going to be way more accessible for a lot more people.
Sure,
which is going to be great.
Sure, absolutely. Cool. Give me your meter on what the market's doing. Even the S&P's down 12. Nasdaq was just
today. Kai's probably got a winner as soon as he gets out of here.
Ooh, I didn't hear the ding, but it happens.
You can feel the ding. I can feel it for you.
I only like a 25 cents away from my set price. So
so you're there. You're there. I mean, we've gone nowhere. We've been we've sat around 71.50 all day today. We've had about an 8-point range.
And on the 0 day, both of us said we shouldn't do it. And when you trade 0 days, you just have to mechanically.
Have to yeah. Because then you miss the good days if you're too.
When you pick and choose, yes, exactly. So do a better job. We'll be back in 90 seconds. Listen to Tasty Live. We got more from the Tasty Trade World Headquarters. We'll be back in 90 seconds. Let's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Nicky, we are back, son, and you know what that means? We've got more Tasty Live as even the S&P's down 17, NASDAQ down 102, volatility up 51 cents. It's moved about 20.
Interesting.
Starting to percolate a little bit on volatility, although oil really hasn't moved 86.38. But all that means nothing when you've got this man in the room. My man Q. How are you?
Fellas, how's it going? I'm doing well.
Doing well too. How was your weekend? That's what I want to know from you.
You know, my weekend was actually very relaxing. Recently, I've been like doing things like every
Moving,
weekend.
shaking. Yeah.
And I was like, you know, I just want a weekend to do nothing, just chill a little bit.
Good.
So Saturday, relaxing. I was watching some golf with my friends and stuff like that.
Dude, we didn't talk about golf, but man, I don't watch a lot of golf.
I don't really watch a lot of golf either.
Yeah. I'm not a golfer. I mean, I play the game, obviously. I mean, one year I had 100 rounds of golf. I even went to Vegas twice in a year and tried to get better. Just couldn't get better. And
was that the year
that was the year I left you.
Yeah, that's what I was going to say. Was that the year that you got divorced?
No, it wasn't the year I got divorced.
A lot happened in that year. There was a lot of travel.
It was the year.
Funds moving around. All of a sudden, the college has to be paid for.
It wasn't the year I got divorced. It was the year that set up my divorce.
Oh, yes.
It was
there were some liquidation events.
It was the setup trade.
Yeah, a lot of things changed.
As I was saying, these guys are reaching the green. I mean, from the
don't pull that boomer. The ball is too advanced. The clubs are too advanced. Don't give me that.
The game is just different.
Oh, wait, is that a thing?
And
that's happening?
Yeah.
Okay.
Everybody gets mad because, the par fours are some of these guys.
Well, you're not hitting with wooden clubs anymore.
Yeah, some of the guys are driving, 340, 350.
Yeah.
They have 60 yards in on a par four, 420, 400. You got some of these holes. I saw Rahm from the Live tournament that just happened. It was like a 390 par four, but it was like kind of a dog leg. So he just launched a driver over like a bunch of trees, and he was like 18 inches from the hole, like tap-in eagle on a par four. I get it. That's a little, it's changed.
It's changed. The game's changed.
Not everybody can do that, but that is a big change. I will give you that.
Yeah, it's like the game will just evolve. Like you'll see a similar thing like in powerlifting as well. Like people will be like, oh, like the knee sleeves are like too stiff now. It's not like there to just warm your knees anymore and stuff like that. But then I sort of got away from that too, which is nice. But yeah, like the equipment in any sport will always be getting more advanced as the sport grows.
But now you're a golf guy. You're going to get back into it. You want to play?
No, I have no interest. I
play with you.
Oh, that's very nice. I would play with you too. I mean, I'm at the age now.
It's the same thing like when I said I would go fishing with you, and then you never hit me up for 2 freaking years. It's like one of those things. Like, please, Dad.
Club's closed on Monday. Would you like to go on Tuesday to golf? Aren't they
redoing
to fish? To fish.
Oh, to fish, because they're redoing the.
They are. You're
gonna make you a real club, not a Johnny club.
You only play like the front hybrid 9.
Yeah.
Yeah, I've actually never played golf, like a real.
You've never been out on the golf course?
So I've been out on the golf course, but I've never like played a real round of golf.
Well, you know what? I'm from
It's
New York.
Surprised that because you got the little, Alabama frat boy, you got to be. That's like golf central.
Yeah, but he's
like, all
originally
my
from
friends
Manhattan.
all my friends golf. Yeah, in Manhattan though, golf isn't like a major thing though.
Zero. Because
Yeah.
I'm from Brooklyn, and that's like the ultra poor boys Manhattan. Okay, and I didn't live too far from a golf course, but it had fences around it, so we didn't get to go to the golf course. I mean, there was
they were letting you in.
They don't let you in. They don't let you in. Nobody played golf in my neighborhood. Zero.
Yeah, yeah. No, I mean, even my friends growing up,
There's more cricket
no one really
being played in Brooklyn than there was golf. No joke.
Play some street baseball. First base is the sewer, second base is the hide.
No, you played handball and hide the belt.
We did play hide the belt. We did when they were building the tennis courts. That's the story I've told before. I don't want to get into it. Bring trauma to.
They would hide a belt like in the park, and then the him and
you found the belt. You got to hit.
You got to hit everybody with the belt
until they got to base.
Brian's over there having it. Yeah, so hide the belt. It
was a great game.
Okay, that's a good game. I like that.
Good, honest, fun game.
That's fun. Yeah. But like basketball though is the sport in New York. And
everybody would play.
That's honestly one thing I'm a little disappointed about in Chicago. There's not like basketball courts every 5 blocks like there is in New York.
Yes.
There's not very many like street games. There's not a lot of hoop played in
You don't
Chicago.
need a lot to play basketball. You just need a ball.
Yeah.
And,
you need a ball and a hoop and that's it. It's kind of like soccer. You just need like a field and that's it and a little goal. All right.
All right, enough of reminiscing about that. All right. Give me your list so I can get Ryan in here. He's a day late, $1 short. His Bitcoin's down 2,000 right now, but we'll see him in a minute. Go ahead.
All righty, let's go. Top 20 symbols going through the system and their IVR at number 1, Tesla with a 15, Apple 60, NVIDIA 27, Microsoft 93, AMD 59, COHR 91, Amazon 52, Netflix 34, SLV 42, Meta 71, ASTS 56, Micron 68, CLS 69, USO 49, IBIT 33, GLD 42, Marvel 54, HIMS 81, Palantir 39, and MSTR 47. I think that's got to be one of the quickest ones I've ever done.
That was very quick.
That was fast.
Almost like you're sick of us. And
no, well, he was like, I want to get Ryan in.
I'll
I'll be quick.
Almost like lunch is here.
So like I hate to be this guy, but like when I hear Marty come on the show and he's going at like 2 miles an hour, he's like,
he's chewing up the scene. His mom's watching him from Florida.
Yeah.
You know how it is. You know what I mean? He doesn't get an opportunity to be on here. It's proof of life for him.
Yeah, for sure. He's doing it, and I'm like, I know the viewers are like, come on, like let's get through it.
Right, he's a star.
You'd be surprised.
He is a star, though.
The viewer, he has.
Well, the viewers are the ones who told me to speed it up.
Oh, really?
Mm-hmm. Well, you said stop saying the percent after.
No, I didn't mean to.
I'm scarred from that. You'll never hear a percent out of me after that.
I'm so sorry. I messed that up. That was my bad.
Good job out of you.
You know what I want? Eventually, like with the national anthem at the Super Bowl, they give like the over/under for the bets. I want to be so
always
infamous.
my favorite bet.
I want to be so infamous for the top 20 symbols that I get an over/under on it sometimes. One day, we're working.
One day, dare to dream.
We have market makers out there. I mean, we talk to Clink. I can price that out.
All right.
See that? That's set up for you.
There we go.
But right now, I gotta let you go. Got to bring in this next man. The man who needs no introduction, but we'll give him one. Ryan, what's up, my brother?
Hello. I am trying to keep together over there. Guys, I'm trying my best. I know the mics are hot.
You never
mics are hot over there. Yeah, we can hear you giggle from time to time.
Yeah, I'm just giggling, he, left and right.
Isn't it amazing that
you guys are funny?
We've made it this long though without like having a serious HR violation. Like I feel like it's coming.
Yeah,
I feel like we're right there. We've teetered on the line.
You guys know where the line is, though.
Yeah,
yes.
It's like
and that's the art.
Back and forth, like a little bit. Like, look, put my foot on the other side. Like, check it out. So good.
Hey, Ryan, Bitcoin got up to about $3,000 higher than where it is right now. If you had told me on Monday it was going to be 75K, I would have said, okay. All right, we're hanging in there. It's 75.7 right now. It hasn't moved since we've been on the show. Still room to go? What's going on with Bitcoin?
Yeah, I think so. I mean, it feels a lot better, right? I wrote about this over the weekend. Tony, you've got to subscribe to the Substack email newsletter. I think I titled it, Everything is Awesome, right? And so we'll get into, of course, what's driving this here. I want to just focus on some short-term correlations. The dollar is coming into play here. But yeah, I mean, look, you're trading a lot better. I think it's encouraging that even, again, over the weekend, you have what typically would be risk-off headlines. There's a lot of back and forth here. We don't know what, even tomorrow is going to look like, but it's holding up within that. I do think you have some degree of fragility here short-term, where any headline, any tweet, Truth Social post, whatever they call them nowadays, is going to send this lower. Yeah. But how much lower? And the fact that we're still kind of hanging on to that 75 level, we got all the way up to 78 and change on Friday, only to get sent back down here. Again, I think like equities are probably prone to some short-term reversal, but I don't think that means all of a sudden it's bearish for your next week, month, and so on. And so I think, again, you can feel a little bit more comfortable buying the dip here, but I want to see a couple days where we aren't just right at 76 and then slam back down lower.
I will say it's been, because we had kind of with Jim today, we were talking about how the MO has flipped. It's been like, escalator down, elevator up in equities. You really haven't seen that in Bitcoin. Bitcoin has been more traditional, where the bearish news headline has sent Bitcoin down 3,000-4,000. And pretty over this weekend was a prime example. And the upside moves have been kind of stair step over, $1,000 here, $1,000 there on the way up. It's been more traditional in that respect, or at least it's kind of felt like that. You would have expect on a day, on a week, or a start to the month where the market has a 99.8 percentile move to the upside, buy everything, 13-14% upside move, and Bitcoin's up, 5%.
Yeah, I think it reflects the market that Bitcoin and crypto as an asset class has been in, which is a bear market. Yeah. Equities are not in a bear market. Crypto has been in a bear market for months now on end. It was extremely levered up in October. We hit an all-time high that blew up. You saw a little bit of a relief rally, dead cat bounce, whatever the hell you want to call it, and then slam back down to new lows. And we've just gone sideways since then. So you don't have a lot of participation that you would have otherwise. There's not that FOMO bid yet. I think you have to take out higher levels. There's not a ton of leverage that's been built up in that. And, in this asset class that tends to drive it quite a bit. You are starting to see some, I suppose you call it institutional participation. We went through the slides on Wednesday, and I had mentioned that, you're not seeing a ton of flows. Well, as we ended the week, there was about $1 billion that came in terms of net inflows into the ETF complex. Okay. So that's there. You have BitMine, you have Strategy. They keep buying. Yeah. I think that's somewhat bullish in that there is demand there. There is capital for, there's an appetite for their products and what they offer. And we can argue, whether or not those are going to be there in the long term. But I think, short term, that's a pretty positive sign that there's continued capital raises, there's continued buying, and you're seeing some of those inflows into the ETFs. But I haven't taken you to those levels where you get that real kind of rampant participation.
It's still been a great trade. I just closed out of, because I was not looking at them earlier this morning, but I had sold calls last week on Friday in IBIT and ETH, and that was until I think Bitcoin was like 76-ish, probably right around here.
Yeah, I was gonna say not too far from where it is right now.
Yeah, not too far from where it was, but that sort of short-term volatility still presents itself on the upside. Those IBIT calls I closed out of, I sold them at 94.
Bought them back at 41. Took about
over
half, a little over. Yeah, over a weekend.
Yeah. Which is,
Yeah, I did the same in like an oil. I had an oil diagonal spread on, paid $3.75 for it, sold it at $4.25. I mean, I don't know. Those are the kind of wins you've got to take on directional bets like this, I think. Yeah. And not kind of.
Especially if you're just sitting long spot and just kind of waiting around. There's been some opportunities there.
Oh, absolutely. And given some of these ETF products like IBIT or ETH, you have pretty liquid, short-term, even daily to weekly options in there, and so you do get that pop, and you can sell something against your position. I've been doing the same thing, covering them as it pulled back here today. Yeah. But to your point, Tony, I mean, I think that's what you have to do in this market, because it could immediately go back down and then right back up the very next day, which I guess makes it fun. Got a couple slides for you guys if you want to take a look here.
Yeah, sure.
Expected moves, not a ton has changed. Looking for about a $5,000 move, $4,500 move or so in Bitcoin takes you back up close to 80 there. Volatility has come in quite a bit. So on the 3-month period, we're outside of that huge spike in vol from early February. So your ranks are going to adjust a little bit on that, at least on the 3-month, towards the low end of the range there. ETH, that's pulled back as well. Still looking for $2,500 on a 1-week, 1 standard deviation move to the upside. 2,000 or so is your downside move there, or the lower end of that range. $200 expected move. And then XRP, that's been a pretty tradable vehicle in my opinion. I've been in and out of that, just trying to buy like 135, somewhere around that. And then I don't know if you're going to get 150 right away, but trying to sell that with the futures up towards 140. Not a huge range. Vols come in a bit there as well. Uniswap, low end of that 1 standard deviation move has slipped back below $3. Continue to see some weakness across the board there, which we've called out. Bitcoin and ETH are leading. You've seen a little bit of a pop in Solana at times, but slam back down here again today. So I think you continue to lean into Bitcoin and ETH for now until you see a real change in the market environment. And we're still in that bear market. And just for everybody to kind of anchor in, at least what we've seen historically is that within these 4-year halving cycles in terms of price action, the bear markets on average have lasted about 12 to 18 months post that post-halving cycle peak, which clearly occurred in October at 126. So you're maybe 6-ish or so months into that. Some reason to possibly believe that this doesn't last that long this time. We'll see. Maybe that's just me being hopeful. But for now, we're not doing anything other than trading sideways and keep an eye on that. And when it breaks one way or the other, that's a signal in my opinion. That said, if we jump to the next slide, what you have to be aware of, at least short term, is really some extremes in terms of correlation here with the dollar. You don't often see this. Dollar has been weaker as a result of maybe some positive developments. If we do see volatility pick up, the market sells off, and the market being the S&P 500 here, I think you're going to see Bitcoin get hit in the short term. And maybe that's already what you're seeing play out. But just want to call out here on this 3-week basis, a 15-day or so correlation. At least what we've seen over that last 3-week period is you have a very strong inverse correlation between the dollar, a very strong inverse correlation between the VIX. And then when you look at how is this positively correlated with equities, these are at extremes. The longer term correlation in there is about 0.4. And so at almost 100% of the time, and you have an equity market that's gone up just about every day over the last couple of weeks, Bitcoin is moving in the same direction. So point being, anything at all that might upset this short term is likely to, I think, present a trading opportunity or present an opportunity to buy this. Because I don't think you're overly bearish. You are in a bear market. But if you're looking to trade the low end of that range and back up here, that's what I'd watch for. Any spike in the dollar, any spike in interest rates, and then any subsequent sell-off in equities.
We just had our biggest move in the E-minis.
You bought E-mini S&Ps back at
41.30. I mean, they're up like 8 handles from there, but we took like 20 some odd out of that. Oil is at the highs, 87 and change. What were your thoughts after Friday, where you finally got because we all knew it was coming, right? The weekend is for chaos, right? So that's when markets are closed. You can start being chaotic. You had a little bit of that on Friday and into Sunday's open. E-minis, what were they down? 70?
Yeah.
Oil was a little bit higher than this.
Oil was $2 higher than where it is right now, but that would make it almost like a 6-7%.
Like 90.
Yeah.
I was able to sell out at 89.50. Which was nice, and then it came back down. Yeah, but you have to be on it, right? I mean, you guys knew that as soon as the market opened, you were going to get that response, and we'll see where it lands. But of course, we had a couple of situations over the weekend.
Yeah. What do you like? Has your perspective changed? Like, are you looking for, I think they've taken kind of the oil high off the table. Like, I think we've kind of seen the high.
Yeah, for now. Here's what I would key in on. Look, I'm not a war analyst. I think this is just what markets do, right? It's got it very extended to one side in the face of all of this. Of course, the S&P is at an all-time high. Of course, oil had a massive sell-off on, someone saying something. The Strait is open. Is it open? I don't know.
Yeah.
But I think this comes down to
Can't we do a flyby and figure it out?
Right?
Satellites.
What do our satellites show us?
Yeah.
I mean, I think it comes down to a couple of things. Regardless of whether there's talks, regardless of whether there's tweets, what we do know is there are 4 carrier strike groups positioned and more assets moving into the region over the weekend. 3 carrier strike groups from the United States, 1 from France. It's only aircraft carrier is there. Like if you start to pay attention to like what hardware is there, oh my God, you would think that something massive is about to happen.
Yeah.
Regardless of what the headlines say. Put that aside. Who cares? Who knows? We probably get through that unless it's World War III. What I think you need to pay attention to from the oil perspective is what are we going to see in terms of U.S. inventories and the drawdown there? Because that's not something that I'm seeing a lot of people talk about, and that's what I think pushes WTI higher. I don't know if you go to 120 or anything like that, but as you've rolled into the June contract now, we were in the low 80s as of last week.
Yeah.
You could get another 10, even $20 out of that, right? Could you get back to $100 is I think the trade you might look for. It's very cheap, not necessarily in vol terms, but you could do some call spreads and CL up there, at fractions of a dollar, 5 cents, 10 cents to put that on just to see.
Just as a scalping vehicle.
Yeah.
Just because the upside volatility explodes, you have this call spread on for a nickel. It might go to 10 cents on a $5 up move, despite it being, in the 150 handle.
Yeah. And I think you've seen reports, and of course there's a lag. You have all these ships that are headed to the U.S. Gulf Coast. They're going to load up. We've had these massive SPR releases that have been coordinated across the globe. So that's provided a little bit of a buffer here. But as we've talked about, you're simply just running out of time. And the restart of production and these shut-ins in the Middle East, that's not going to be immediate. And you're going to see some drawdowns in terms of U.S. oil inventory. And I think that could be a potential catalyst for a little bit of a move in the price of oil. I guess the other way that I would look at it really quickly is how much downside could there possibly be at 80 versus the upside in that trade, right? I want to be on both sides of this at times. I'm not looking to buy 120 because it's going to 200. But when you saw the move like you saw into the weekend, that was an interesting setup to me.
Yeah, I totally agree, and I'm leaning that direction. But I'm the same thought process goes into my equity exposure right now. Is like we've kind of the pendulum has swung a little bit in both directions, and now we've gone too far this way, and I think the trade is the other side of that. But it's a hard one to make.
I tend to agree with you. It is a hard one to make, though. But you know what's hard to do? We're going to take a quick 90-second break because it's been a great discussion. Even the S&P's on their lows of the day, down 30. NASDAQ down 190. Russell up $2.70. And the Dow down 130. Volatility up around 50 cents. That's about as high as it's been since we've been on the show. Bonds are down 9. I think this is oil related. Catching a little bit of a bid here, 87.25, up $4.60. Oil volatility, OVX, CGI, trading around 74. That's about as high as it's been for the day. I think it opened, if I can get that.
Volatility is at the high of the session too.
Yeah,
I mean, it's not exploding, but we've stayed sticky.
Oil vol opened at around 73 at 74 and third. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We've got Liz and Jenny next. Good job out of you, Ryan. Peace.
Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. How you doing, Jenny?
Good to see you, Liz. I feel like, I know it was only a weekend, but I feel like we were both gone for a week because you had prom weekend. I was at a dance convention. It felt like a year, almost like a year of my life.
It did. It was a very jam-packed weekend. I will tell you that. Hold on, let me turn this phone off because it's going crazy. It was a very jam-packed weekend, but it was a fun weekend. Good time was had by all.
Oh, yeah, fun weekend, but good to be back. Last night, I feel like it's Groundhog Day because maybe the last 4 Sunday nights, market's down, and by the time we open in the morning, it pops back a little bit. We had it happen again today. So we're still down, but it's not down as much as we were last night. Last night when I went to bed around 10:30, SPOOs were down like 40, 45.
Let's pop in the platform so everybody can see what we're talking about here, because the SPOOs, they've taken a little bit of a downturn again since right before our show. Because to your point, they were down about 40, 45. I saw them last night at the market open, or at last call, at first call, or whatever it's called. They were down 70.
Oh, really?
Yes. So that's the market opened down 70, and then they've been slightly rallying back since then, and now we're down about 29.
Yeah, I got home pretty late from the dance convention, so I could not tune into last call. But when I was going to bed around 10:30, first call. When I was going to bed around 10:30, they were down about 45, and I say like every Monday I say, geez, we're down at night and up in the day. So last night I thought I'll put my money where my mouth is, and I bought an ES call, just a zero last night was a 1 day, but today it's a 0 day. And it didn't make that much. I mean, made a few $100s but at 8:30 when we were only down 12, but it didn't make that much because there was a lot of premium pumped into it.
There was premium, and that's why I went with the MES. When SPOOs were down 70, you're going to love this. I love saying what I did. I painted the bottom. I bought an MES. I bought MES. Just straight up MES. Yeah, I scalped in it. I'm obviously out of it now because I can't hold it if my life depended on it. But I got out of it. For a quick scalp. But that's easier to do than with the options in the night because there's so much premium in them.
Well, there was. I didn't want to just flat out buy a future, so I just bought just out of the money call in ES. And again, this morning, we went from SPOOs down 40, 45 to SPOOs. I think we were down like 15 or 20 when I closed it. It only made a couple $100. It was nothing earth shattering.
Well, even when we had rallied a little bit, you were down money on it, which was crazy because
right. Because premium, because there was a lot of premium in it last night.
Because there was a lot of premium. It's pretty crazy.
So I guess if I didn't want the risk of a whole ES future, I could have done what you did and just bought MES and avoid paying any premium.
You pay no extrinsic value when you do that, and you can do them whatever a lot you want. So to your point, I think you had the 7140s.
Yeah, right. And I got out of them this morning, but again, I made some money, but not a lot. But I bought out of the money because I didn't want to risk too much. It would have made more if I bought in the money and paid less extrinsic value. Or could have bought a call spread. You could have just bought a call spread, and then you're not giving up extrinsic value.
It's true. That is
so. I like what you did with the MES, with the with the micro.
Yeah, I mean, like it is fun, and it's fun that you can trade those on those in the middle of the night, which was fun. And it was crazy to see the gap down. That's why I was like, is this thing going to hold? But who knows? We'll see where today is. I want to take a look at volatility because we have been taking a look at this, and it's kind of a precursor. So
it's up quite a bit.
It is up quite a bit. 12% is a big move.
I know.
It's just under 20.
I mean, VIX up 214. That's pretty big. So to me, I think that is in my mind, that's a tell that maybe we're going lower today. So I don't know. What trade you want to do. What trades you want to do today? But I know we need to first come up with something for our YouTube peeps. What do you want to do for our YouTube peeps?
And we kind of talked about this a little bit this morning. Tesla. Let's take a look at it. And I was already in it. Tesla has earnings. Let's go to the trade page. I'm going to clear this out. Tesla has earnings April 22nd. Today's April 20th. So 2 days from now, Tesla has earnings. So we were kind of taking a look, being like, is there anything that we can do a couple days in advance for an earnings trade? That's not typically something you and I do.
No, but their earnings, I mean, they're coming up. We've got the 4-day options and they're coming up. So what do we want to do in Tesla? It's hilarious. We were driving to this dance convention and I saw this giant billboard and it was, it said like Doge trucking. And I thought, I'll trade Tesla. I mean, it had nothing to do with Tesla, but I saw the billboard and I thought, I'll put on a Tesla trade. So after I saw that billboard, I went into my account and put on like a Super Bowl kind of trade in Tesla where I bought a call spread and sold a put to pay for it. That might be too expensive for this account because it used about $6,000 in buying power.
It does. It uses a lot of buying power. I'm just going to show. Let's kind of walk through this organically. So you want to take a look at Tesla's history. Here we go. Tesla is something that I'm always in. Always. I always have a position in Tesla, and it's typically bullish. Like I said, I'm keeping an eye on this product because my son is long it. Right. So that's one of those things that I always have in there. I already have an earnings diagonal in, so I think we should maybe put that into our account, and we'll talk about why.
I think that's Tesla, a defined risk, low risk way to play Tesla through earnings and earnings diagonal.
Because it's a very expensive product. But take a look at this. Tesla, which I found when I was looking at today, I was trying to look for an earnings setup calendar. So I went the organic way. And this has earnings imminent, and it's got an IV rank of 15, which I found fascinating.
So but it's too late for a setup calendar because the only option you would...
That's what I'm saying. I wouldn't do a setup calendar in there, but what the diagonal does help because I don't necessarily know that I want to sell premium either, right? You're kind of got a little bit of both worlds. Diagonalize is almost, it's a calendar. It's a spread calendarized.
Right. It's a debit spread or credit spread over 2 different expiration cycles. So if we're putting on a bullish diagonal, it's like buying a debit spread, but it's a calendarized debit spread. So let's go to the trade page and pull one up. If we want to make this very cheap, we can go very short term, where we sell the 4-day.
And I want to go bullish, so I'm going to lean towards that side right now. So I'm going to sell the 4-day at the expected move.
Okay, so we're getting $440 for that 4-day option, and then keep it as cheap as possible. Go 7-day or 9-day, or don't go very far. So if you buy that, and I was told there would be no math today, but if you buy that I'm gonna go to
the 390 to help you out.
Yeah, so then we have a $22.50 wide, $22.50 wide diagonal that we're paying $8 for. So if Tesla goes up on earnings, this could be worth $22.50 if we go all the way up to the expected move. If we drop, we have $800 at risk, and that long option's only going to last for 7 days.
These are all facts. I just wanted to say I kind of leaned on this because I am in fact bullish. There is in fact a low IVR for this product. And to Jenny's point earlier, it's very expensive. I'm going to probably land here, but I want to walk through how we got there. Originally, after I threw out the earnings setup calendar, I was like, ooh, maybe we can do a double, like a bat wing trade, right? So, and you have to define your risk. So buying one, selling two. Now this is close, but if you take a look at something like this, if you know you're going to define your risk and you want to spend about $1,000, I'm going to go down to this. I'm buying something to define my risk. Let me take it down a little bit. So this made no sense to me because I'm taking in only $1.23 in extrinsic value, and it's only $2.50 wide in the peak, and it's a Monday.
And it's a Monday, and you have to sit on this all week, and we're risking 881 to make 129. I think if I'm going to risk 800 in Tesla, I'd rather risk 800 with the chance to make a lot more. Now, I know this gets us to the 365, but if we have that long and we go to 365, there's a chance we could pop back up by the end of next week. So if I'm going to get myself out of the way, I'd like to you can get yourself very far out of the way if you go a little bit further out in time and you have the naked option, but that uses a lot of buying power.
It does use a lot of buying power.
Like I think my short puts are the 250 puts, but they're out in December.
Yeah, you're all the way out.
Which they're far out in time, and I do like that trade. You can get yourself really far, and that's something that I have done in the past in Tesla. Go a few months out, sell a put. You can go very far. So look at that 250 put. 250 put, you're getting $10. I got $10 for it when I sold it the other day, and you're getting $1,000 using 5,000 buying power, but you're at the 250 level,
right? Which
I like. I do.
I don't mind
all the trades that kind of prefer something like this, but it's $5,000 in buying power,
and that's too rich for our blood for this account. So we're going to go with a kind of a plain Jane diagonal. Now, if Tesla pops within the next 2 days because earnings aren't there, I'm going to take this off. So it's down $10 today. If for some odd reason it is up or unchanged on the day, this will be a profitable trade.
Yeah, and you're right. And we could take it off. We can take it off.
I just made it a little bit cheaper. How did I do that? Oh, I went to the 392.5. I'm fine with that. So I'm buying in the 7 day, the 392.5, and in the 4 day, because you got to keep in mind the earnings are not. There's a 0 day cycle here. They're not in there. You can see that the earnings for Tesla are in this 4 day.
Right. So this is a bullish trade on earnings. If Tesla goes down on earnings, we could be out $795, and there's no recourse. There's no management. There's going to be no when people say, oh, you risked $800 on this trade and Tesla went down on earnings, what's the management? There isn't any. It's like $800 on Tesla earnings. There's no management.
Exhibit A, we did it in Netflix and it didn't work.
Yes. And so our recourse here was then selling a put in Netflix, but we can't afford to, in this account, to sell a naked put in Tesla. So if Tesla's down on earnings, my go-to with a diagonal, if it's down, is then sell a naked put after the down move. But if we can't afford a naked put in Tesla, we just have to be okay with our risk is $800. If it goes up on earnings, great. We have a lot of profit potential. If it goes down on earnings, we're out $800.
Correct. All right, I'm going to ship this, and then that is an earnings diagonal in Tesla. We'll see if we can get filled on that. We're going to let it work. We're going to let it percolate.
Okay, so that so now we have our Tesla earnings trade in. It's not for a couple days, but it's in. I don't mind having it in early. You know, it's taking a big hit today, crypto.
I know. It's killing
me.
Let's take a look at that. Okay, so what time is it now? I want to keep an eye on that. Okay, IBIT is down 3%, which is a lot.
Now, okay, so where's Bitcoin? Scroll on the side, like where we have the ES and NQ. Scroll down. Bitcoin 74,009. Doesn't sound bad. Almost 75,000. Still sounds pretty good.
Yeah, but take a look at this. I mean, it's even 75,000 is your bar. I mean, I want IBIT in the 50s. This is what we're looking for here. This is what we're playing for, and those are the trades that we have on. But it's not looking too good.
But I don't think that's we're filled in Tesla. 75,000 for IBIT is 74,000 for Bitcoin. I mean, we'll take it after it was in the 50s.
For sure, for sure. Is there anything that needs to be managed today? Not in this. We have our Jade Lizard on in there, and it's through our put. But we have on for 7 more days. So I think
I wouldn't do anything with that. I would just leave that.
And so Jade Lizard we leave, and taking a look at the zebra, when it becomes the at the monies, we ratcheted this on Friday.
Yeah, I wouldn't do anything with that either. 25 days to go, I would just leave that.
Well, no, the mechanics are when you're at the monies, when your longs become the at the monies, and we're not there yet. So we have the 41 call as our long, and it's trading 42.50. So that's why you kind of assess that situation. If you have 25 days and your longs are at the money, that's when you have to reestablish it if you want to keep it.
If you want to put more money into it. If you don't want to put more money into it, you could leave it.
You have the option of closing it too. You can always do whatever you want with it. But if you want to keep the position with zero extrinsic value as a stock replacement, that's when you would ratchet, or that's when you would reestablish, not ratchet.
Now, the only thing I think I would take a look at closing would be our natural gas put spread. We sold it on Thursday, and we're up 30% in 4 days. We just sold a put spread. We got a little pop in natural gas to take 105. We could look at one of two things. We could look at closing this. Isn't this when UNTP took a put spread and turned it into a butterfly?
No, this is just a straight up put spread.
It's just a straight up put spread. So we took in $360 on this. I just want to see if you...
No, this was something completely different. We had a broken wing butterfly, and we moved the middle strike instead of the bottom strike. So it was something different. But I mean, you're going to give up all your profits by.
You got to move the long to the 2.6.
You'd still be giving up all your profits by.
So yeah, you could have this 10-point wide butterfly, 2.6, 2.5. Or no, it's two. It's not. It'd still be broken. Yeah. No, it's way too much. I like just taking that $100 out of it.
I do too. And I don't know, I know you're trying to get creative. I don't know that there's anything really you can do with the put spread.
I think you could, if you ever could get if it was really far up and you could get that long put spread on for a butterfly and lock in a credit. But it's nowhere near there.
So we only got 36 cents for it. So if you were going to do, what Jenny's saying is if you're going to try to do this, if you buy this for under 36 cents, but you're actually paying 20 cents for this butterfly, it's very hard when you do something with a short put spread, unless you're willing to give away everything that you've got.
Yeah, this isn't gonna, no, that wouldn't work. Let's just take the $105, which I think is good. 2 legs in, 2 legs out, $105 in 4 days. It's more than we've been making on those broken wing butterflies. We've been, locking in very small profit and not getting much out of it. I'd like to just start locking in some profits in natural gas.
For 30 cents, we'd give up that whole $100. It's very challenging. The broken wing butterflies, it's easier to butterfly them off. It's very challenging with a put spread.
So
I'm trying to think. I'm going to go P&L open. I mean, there's nothing hitting the 50%, nothing even close to the 50% mark. So that's fine. Now I'm going to flip the cards over and see what our losses are. We have, this will be coming back today because we're back in the middle of our call spread. We put this on a bearish trade, and it was in the middle of our call spread. But we're okay. It's coming back today.
That's a Delta Buster. That was, and you can see if we go through our beta weighted Delta, I think that's our only short Delta, unless we added more short Delta. Oh, we've got our long VIX. So we've got 2 short Delta positions right now. We have that SMH reverse big lizard. We have the SPY Delta Buster, and then we also have the Zebra in VXX.
Why is Hood? Oh, because it's
just a calendar, but now Hood's blown so far through it.
Yeah.
Yeah. Was that an earnings? I'm going to guess that's an earnings setup calendar.
That didn't go right.
Yeah. But with the down move in crypto, maybe Hood will come down a little bit.
So other than that, I don't know that there's anything else that we need to manage. Hold on, let me alphabetize again. I know we opened this up during the other segment. I wanted to take a look at this put. So we sold the 96 put against it. That's not going well. That was
out of the money. That was out of the money on Friday, but Netflix continued to fall. Like during our show, Netflix was down $10 and it's continued to fall. So
it is weird because I've been looking at things too where, when things start to go up, it's easy to ride the wave during the day. And maybe that's true too. When things fall, they're continuing their their fight down.
Now go to the trade page and open up the 25-day May. I wanted to see, like, is it if since Netflix can't seem to get any wind under its sails, would it be worth selling a call to take in a little extra premium?
And you could sell 100 for $1. Or even the 102. I mean, if you wanted to take a little bit of extra premium, even if you're wrapping it around the standard deviation, that's pretty safe.
I mean, I usually don't like these naked calls, especially in the market we've had, but you've seen the market's up, everything's up, and Netflix is down. So, to add on a call and get another $80 in Netflix, I don't mind it. I don't mind.
Well, and it's pretty conservative. That's why I went to getting just a little bit of extra premium around the standard deviation line. Sure, I don't mind.
Now, did you see that news, like FanDuel's getting into prediction markets? Is FanDuel tradable?
I don't know.
I don't know. I don't think so. The only gaming stocks I know of, like DraftKings, Penn Gaming, or MGM.
Yeah, DraftKings is down today. And we have the combo. DraftKings is up today and we have the combo.
Yeah, it's you know what I want to start doing in DraftKings? So we've been long DraftKings for a while and it's not really going anywhere. So one year, one of my best positions was just selling weekly puts in DraftKings. I'm going to stick with my long position, but I'm going to start selling weekly puts in addition to it because I don't want to just sit on long DraftKings all year and at the end of the year have my
I'm only laughing because that's what I've been doing is I have long stock in DraftKings and I've been selling weekly puts against it. And guess what? My position keeps getting bigger and bigger and bigger and bigger because I had my long stock and I was selling puts being like, oh, whatever, I'll get some extrinsic value there. And now it's bigger than a breadbasket. So that can happen, but I prefer, so in my little heart of hearts, I much prefer, and I'm going to go back to the well and keep doing it because I prefer the puts over the calls. Because if it gaps back up wildly, I'll be more mad at myself. I would rather take extra stock than be mad at myself for capping myself out with those calls.
Yeah, I'm not going to like take off my short position, but let's go to the 11-day and see what we can get for a put in the 11-day. In the 11-day, we had 82 cents.
I know. This is how I got myself into a lot of trouble.
Do you remember Twitter? Do you remember when our Twitter position got so big? We were just selling puts in Twitter, kept getting long, kept getting long, kept getting long, kept getting long. And at some point in time, our Twitter position got crazy big. Crazy.
Do you remember? I remember sitting next to you and you're like, I'm going to close this. And I was like, my position's so big, I need the extra 2 cents. Do you remember that?
Oh my gosh. It was like, it was some kind of put in Twitter that we were going to buy back for a dime. And Liz is like, I need that dime.
I need a nickel. I need a nickel. My positions are so big, I need the nickel. And I got annihilated.
Yeah. If you could close something for a nickel or a dime, do it all the time. Yeah. Let's sell a DraftKings put. I'm getting back in the weekly puts. I know that's how you got yourself in trouble, but we're getting back in. Okay, so I looked.
What I just say, be careful. Like, just when you get to your max, don't do it again. How about that?
Yeah. When you get to your max, don't keep adding more. Okay, so FanDuel, you can invest in FanDuel by purchasing shares of its parent company, Flutter, FLUT.
Oh, yeah, we didn't know that.
Okay, so let's.
But this is not that liquid. That's the one thing I was going to say. I knew there was something. So Flutter is its parent company. You notice they only have monthly expiration, and you've got a K sitting next to the volume. I don't know that this is that liquid. It's not bad. It's not good.
Can I see the chart?
You can see anything you want to.
Maybe we sell some puts in Flutter.
I was just telling you how illiquid it is.
That doesn't bother me. I'm just kidding.
So you're looking at the at the money puts. You're looking at 580 at 610.
Wait, go to June because those June you could get really far. You can get really far in those June. Like you can go to June and sell the 85. You can sell the 80s for $1.50.
If we can get filled at $1.55, sure.
I bet this is going to say closing only.
No.
There's our $1.55 offer. Just let it sit there.
Yeah. So
here, if something's super illiquid like that, and we say liquidity is king, blah 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 blah. I know. But if basically what will happen is we will sit on those puts forever, and when they expire, we'll either have the $155 or we'll have 100 shares of Flutter at $80.
Whichever comes first. Whichever comes first. We are taking live tweets. Please put the hashtag LIZJNY. We will pop over there in a minute. I'm just going to get...
Look at our Tesla diagonal. Already up $52.
You close it?
No, because that video hasn't hasn't even reached the YouTube world yet, Liz.
But this, what's great about this though is, I liked putting a bullish trade in Tesla when it's down. It was down $9.
Yeah, it was down $9 or $10.
Yeah. Mm-hmm. Yeah. No, I know our super producer Josh was telling us some things in. You know what I'm going to do right now? I'm going to check the news because I can.
In Tesla.
Green light, red light. No idea. We can't read these news stories right now.
I don't know. Josh is everyone's source for news, but
yeah. So nonetheless, there is news in Tesla. But once again, I think it's all priced in, and we'll see where it goes from there.
Can we take a look at the cruise ships? Because my parents just booked a 35-day cruise.
That's insane.
Hopefully. So my dad is speedily recovering from his broken hip.
Yes, I forgot. He's got broken hip. 35-day cruise.
Well, I think they realized life is short. You only live once. As soon as he gets the all clear after his hip surgery, they're getting on a 35-day cruise. I hope nothing happens to him while they're in the middle of the Atlantic Ocean.
You need to get the insurance.
They always get the insurance.
The airlift insurance?
Yes, their friend had to be airlifted off. It's not funny, but their friend had to be airlifted off a Royal Caribbean cruise, and to the tune of $150,000.
Oh my God.
Yes. So he fell. He slipped on the Lido deck, fell down, slipped on the Lido deck, fell down the stairs, broke many bones, and he had to get airlifted off the Royal Caribbean ship to the tune of $150,000.
Oh man. So nonetheless, they always get the insurance now. Is that
they always get the added insurance that includes helicopter transportation. But if you're in the middle of the Atlantic Ocean, you're not helicoptering off.
No, it's if you're in the Caribbean and they can take you from Miami.
Well, they're 35-nighters, transatlantic.
I don't even want to know what kind of insurance that would be. But so Royal Caribbean is down 2% today. It's still a $278 stock, which is insane to me.
Yeah.
And then let's take a look at CCL.
And $28, still high in Carnival. I have a hard time. I wouldn't mind selling a Strangle in Carnival.
It's got a 55 rank. I'm going to assume earnings are on deck. They're not. You could sell a Strangle in Carnival. Get
50 cents and 50 cents.
50 cents and 50 cents. You're right at the expected move. You're getting $1. You're only putting up 287 on it. I don't mind this at all. Let's shift it. Filled. Still waiting on our Flutter, but Carnival has 8 million shares.
All right, then cancel the Flutter.
No, with those, I think you have to let it come to you. You can't chase that price because you're going to be penning it up.
You can cancel it. Speaking of illiquid stocks that I've been in, let's take a look at Birkenstocks. That is one of them. I used to sell puts in there. I used to be long and sell covered calls, whatever. The stock was these options were so illiquid. I was losing money every time I had to roll, giving up money every time I had to roll. So I guess this would end up being like Flutter, and I eventually got out of Birkenstocks. But now that I see it at the low price of 39, I might get back in.
Look at you. But this looks very similar to Flutter. I'm looking at the volume on the stock. It's 409,000. Whenever I see a K there, that usually the K during our show typically means that it's not a liquid product. The other dead giveaway tell is there are no weeklies.
Well, and open up the May and look at the markets or whatever. You know what? That 37.5, 135, 160. That's not that bad.
It's not bad at all, considering you just jumped into Flutter with a 79-cent wide market, with an 80-cent wide market.
I mean, when I got into Berks, when it IPO'd, it was around 50. Take a look at the IPO price. It's about 2 years ago. Oh, look how time flies. Where's
it IPO'd right where it's at right now, almost
40.
You could get in at the IPO price, Jenny.
I'm getting back in. Let's sell some puts in Birkenstocks. Let's get back in.
I am canceling this though.
Cancel Flutter. We'll cancel.
We're going to be in one liquid product at a time. Deal.
Sell those 137, the 37.5 for $1.40 45.
That's a hefty chunk of change.
Yeah, that's another problem.
That's a hefty chunk of change for a $37 product.
Hey, but we have a lot of buying power.
But the problem is if you're going to try to buy something, these markets are still pretty wide, right? So you can go down if you want to do.
No, just use the $1,500. We've got a lot of buying power.
You today are crazy. You're like, I don't care about liquidity. We're going to use 50% of the stock price. This is Jenny gone wild, ladies and gentlemen.
This is a Monday. This is coming off. This is dance mom delirium.
I think the paint fumes from your basement are going to your head because you got guys. We have the same painter and he's down there.
So I never saw in the hotel with the dance convention, I never saw the Starbucks line less than 100 people. And at one point, the Starbucks staff, they had to rope it off. They had to rope it off and say, we're stopping. We're not letting one more person into this line. And then there were moms sneaking into the line. And then the owner of the Starbucks said to one of the kids who works there, you have to stand at the end of this line and you have to be real tough with these moms. You cannot let one more mom into this line. It was out of control.
Why would they be doing that?
They're out of control. I am 1 year away from not being a dance mom anymore, and I'm counting the days. Can we go to Starbucks and take a look? I mean,
that is the craziest thing I've ever seen. Why wouldn't they get in their car and go to Dunkin' Donuts and call it a day?
Liz, you couldn't leave the parking. We were at a Westin. You couldn't leave the parking lot of the Westin because you wouldn't get a parking spot when you came back.
Oh.
You couldn't leave. You couldn't take your car out of the lot, or you wouldn't get a spot when you came back.
I'm surprised you didn't DoorDash your Starbucks to your room upstairs.
No Uber Eats or DoorDash would deliver to our hotel. None, because they were like they put a cap on it because they were like overloaded. 1,000 dancers plus moms plus grandmas plus dads plus you had whatever happened. We lost our contract at the Westin. We can't go back next year.
Oh man, it was the Starbucks throwdown. Okay, let's take a look at Starbucks. It's a $100 product.
Yeah, Starbucks at 100 is high. I don't like selling puts when it's at 100. I like selling puts when it's at 90, but not at 100.
I don't like Starbucks. So let's it's got a 55 rank already.
Hey,
I don't want to do an earnings setup calendar.
You want to put on a bear? We put on so many bullish trades. Do you want to put on a reverse Jade Lizard in Starbucks?
Nothing would make me happier. You know I hate Starbucks. Okay, so if I'm going to go into the earnings cycle, right? So I'm going to have to go to, I think it's wrong.
At 34.54. No, it's the 11-day. Yeah, it's the 11-day. And then put on a reverse Jade Lizard where we sell a naked call and we sell a put spread.
So if I'm going to sell a naked call,
go the 108.
108.
Yeah. And sell the 94.93 put spread.
I think I can go a little bit farther because there we go.
Yeah, look at that. Bada bing, bada boom. $1,200 for a reverse Jade Lizard.
But the $1,200 is in a $100 product versus Birkenstocks, which is a $30 product. We just have to be.
Hey, you know what? After a weekend living like I lived in the Western Hotel with a million crazy people, I don't care about anything anymore. You want to put this trade in? Put it in. Liquidity? Whatever.
This is liquid. Starbucks is liquid, and this is a legit trade. The other one was crazy. But I don't mind this. I like being short Starbucks, and this brings our break even to 109. Let's take a look at it on the analysis table. So this is a reverse big lizard.
Reverse Jade Lizard.
I'm sorry, reverse Jade Lizard, which gives us a wide sweeping range. So we have from 92.5 all the way up to almost, 98. 108 to make money. It's pretty good.
Yeah. Pretty good.
It's pretty good. I'm going to ship this, review it. I am going to put, because it's an earnings trade, I'm not going to put a GTC in for it.
Yeah, just leave it. We can make the full 100. We don't want 50% when we can make 99%.
So we do not put GTCs in for earnings trades. We try to manage them after the earnings, just because you could make a lot more than that. Okay, I'm going to pop into Twitter. What do you think? Let's go.
Sure. It's 10:33. This hour's flying by.
Top down.
Yeah, what do we have going on?
Blue Wackadoo, happy 420. Quick short on this 40 plus IVR day, nabbed $555. That would have been $700 if I would have waited 5 minutes longer. Wow.
What did he sell? What did he do here?
SPX.
So buy to open, sell to open. he had the 71.35, 71. So he sold the 71.35, 71.60 call spread for $4.95, then bought it back for $2.10.
Good job.
Yeah. Yeah. And he's got a few trades in here. So, good. Yeah. Sold another call spread, sold a couple call spreads.
Yeah,
So,
good job.
Yeah, 7140, 7165. Nice work. Nice work, Blue Wackadoo.
Where is Blue Wackadoo if he's trading at 6:55 a.m.? California?
California somewhere, right?
Yeah.
Like, and if our bell rings at 8:30, their bell rings at 6:30.
Yeah.
West Coast, somewhere on the West Coast.
Okay, look at this. I've been working on the Bob on Fire since January. Finally on the semi-green side again. Most interesting rebalance, inverting the short ends during big swing and then setting them back this morning.
So
Tesla. He's got the Bob on Fire in Tesla.
I know, but so I never managed this Bob on Fire because it's a short put, but it's not a short call or short call spread. It's a long call spread. So I'm curious what he did to manage the Bob on Fire, because we've been asked what's the management for the Bob on Fire, and I say nothing.
When things go horribly wrong and things go down, I just got filled in something. I don't know what it is. When things go down, like it did in Archer. I put a Bob on Fire trade in Archer. I just want to put be honest with you. Okay, so I put a Bob on Fire trade in Archer, and all that I'm left with is the short puts and the long call.
Yeah,
I bought back the short call of the spread.
But when he's saying rebalancing, inverting short ends, click on this. I want to see what he's doing, because buying back your short call, sure, if it's worth very little. But
yeah, I bought back, so I would buy this one, and that's all I was left with would be my long call and my short puts.
But that's why I'm curious. Like, what is he inverting? What is his management here? So if you see on 122. He had the 435.10 with the 300 short puts. 435.10, 300 puts. 435.10, 300 puts.
Maybe he's just adjusting them.
But this was opening, and then 129 close. So he closed it. And opened a new one.
Yeah. So that's
which you can. And then what? Go back to that you were just on.
This one?
The next page. Yeah, this. Okay, so then sell to open. He sold a call, 470 call, sold a 470 call, sold the 390 call, sold a close, sold the 390. So 390, 470. He's buy to open. I don't know.
Yeah, so we appreciate it. I think he's close.
I mean, I'm glad he posted this for people, because we get a lot of questions of how are we managing these Bob on Fire trades?
I don't. I take them off for a profit, or I let them go to the depths of hell, and I take back my short call. So I have a long call and short puts.
Because again, if you take in a credit for the trade, you have no real risk until it's through that. You have the mark-to-market risk, but if you can hold it, if you have the buying power to hold it, you don't have risk until it's expiring, and if your short puts in the money. I don't have any Bob on Fire trades where the short puts have gotten deep in the money.
Because deep in the money.
Put them on, the puts are so far out of the money.
The worst Bob on Fire trade I have is Oklo, because it's at the money.
Oh, that one those puts got at the money.
Yes, they're at the money. And I'm fine with it. I have a very small, I didn't put multiples on. I have a very small, and I'm staying with it because they're at the monies, but I have them until the end of the year.
And you know what? That's where if those puts become at the money, what I do and I have had that happen with my Bob on Fire trade. And when the puts become at the money, that's when I do take the whole trade off and switch back to just a straight up long.
Yeah. And that's your management technique.
Yeah, that's just closing that, because it's less of a loss than if I rode the stock all the way down and then get back into a long stock position.
Yes. So I'm just sitting with that when I have a very small position in it. But so I have not managed it. I do not manage my Bob on Fires. And then this is from Frank. I think Frank must be off today. Because April 17th, that was him. And then the Polish.
Yeah.
So we got to everybody. We got to Blue Wackadoo, which is great. Do you want to take a quick look at the SIBO's most active? because I do thoroughly like looking at these. I'm going to make it a little bit
I
bigger.
kind of like looking at the equities to see what equities are busy.
Let's go. So this is all options. So you can see if there's an equity peppered in there, that means like look at FXI and Apple are peppered in there.
Yeah.
So FXI,
Apple 275 calls.
Apple, let's take a look at those.
Does Apple have earnings April 20th? It says April 20th. That's today. April 20th, 275 calls.
April 20th, 275.
I bet it was closing. I bet it was a closing order.
Well, the open interest is 6,000. Let's change this to volume. Where is it? There we go. Whoa, look at that. 195,000.
Today?
Today. I want to go back and look at this. So Apple, April 20th, today, 275 calls. This is 12,000. More of them have traded. This is probably older. But taking a look at this, you've got the volume. Open interest is what was there when we walked in. The volume is what was traded today, 195,000.
Does that make you want to go out and buy some?
Kind of.
I know. Buy Apple calls.
So this, I want to see the Apple's high of the day. Buy Apple calls. So the high of the day, it was almost at the money because the high is 274.27.
Hey, look, everything's red, right? SPOOs are down, Nasdaq's down, Dow is down, Russell's up a little, but Apple's up. Buy some maybe Apple's going to get a little wind under its wings.
Now, I don't mind buying this. Honestly,
but
I will never be back in this account the rest of the day because I have doctor's appointment.
And I won't either. I've got meetings all day, so
I was going to say.
I will never be back in this account, and we could come in long Apple. So
not for this account, but I think Jenny's trying to press the button right now. That's why she's looking down. She's going to buy Apple 275 calls.
0 day 275 calls, 15 cents. How much money do I want to throw away?
$1,000. Just kidding.
Review and send.
But you can. That's something that this is what nothing in here should thwart or say you should do this. It's just interesting to look at. You know what I was going to say? Let's look at the volume. So much more has traded. I'm going to refresh this and see if that Apple changes and goes higher up the list. No, it's still 12,000.
I bought them at I bought them at 13 cents.
Good job. Congratulations.
I put in a 15-cent bid and got filled at 13 cents.
That's amazing.
Well, it's not really. I probably just threw away I bought 10 for 13 cents, so $130. Probably just threw away $130.
Yeah. Or you're gonna you're gonna put a little coin in your jean. One of the two is gonna happen. Or you're gonna have 1,000 shares of Apple, whichever comes.
Oh well, forget about it. And we'll come in tomorrow with 1,000 shares of Apple.
You might have 1,000 shares of Apple. So I went down to the equities here. So this removes all your SPXs and things of that nature. And just kind of going down the list, FXIs, aren't you shocked that the volume only says 12,400?
Yeah.
When we saw it was 197 or 194?
Yes. And we know that's new trades because the open interest was only 6,000.
Mm-hmm. Mm-hmm.
Which
so
is weird.
Let's do another case test on something else that's April.
Oh, look, there's Tesla puts. Tesla April 20th, 390 puts today.
No, here's 400 too. Where'd you see the other Tesla?
On the put side.
Okay, Tesla. Let's go take a look at those.
It's interesting. These are the dailies. I think people use the dailies for a quick directional shot. You're not giving up a lot of extrinsic value. They're expiring today. You got to get out of them, or you're going to have stock if they're in the money, but they're a quick directional shot for the day.
So do those match up? No, they're different. Okay. So we've got the 400 call and the 390 puts in Tesla for today. Let's take a look at it.
And I think when you see those 0 days trading, I think it's the customers are buying them. No, I don't think many customers are selling these 0 day.
No. So look at this, 94,000 right here on the 400. And was the 395 puts, right? Here's 81,000.
I mean, if Tesla goes to 400 today from 390 400, we'll get out of our diagonal. No, it was the 390 puts. It's the 390 puts for $1.40. And usually when you see customers buying them, they're pretty cheap. Like those 400 calls for 22 cents. But I would be shocked if we're over 400 at the end of the day.
We don't know what time they put them on either, right? So they could be different prices at that. But look at this 390 puts in the 0 day. The open interest is only 3,000. 157,000 of them traded.
Like Josh said, Tesla was in the news.
These numbers are astronomical though, aren't they? For the 0 days. And to your point, I think you're right. If it's customers, fine. I don't think it's like these are going to be gone tonight.
Yeah, 157,000. Playing for some Tesla move today.
Someone's taking a shot. Jenny took a shot on a 10 lot. Someone else took a shot on 157,000 lots.
I mean, I spent $130. I got them for 13 cents. They were 13 cents. So, and I'm going to open up my platform at 255 and close them.
I like that you said if it goes to 400, we'll get out of our diagonal. I was like, we're already locked and loaded in that one. So these are kind of fun to look at. I do like looking at the SIBO's most active, kind of seeing what else is on there. Tesla seems to be on there. And it's very similar to, the boys before us. They do that list of the most active ticker symbols. Yeah, it's very similar to that.
I mean, you go to our platform. If you go back into our platform and you go to the watch list, Tasty default, or go to the fast movers. Fast movers, Tasty, go up to Tasty on the top. Tasty, fast movers.
Oh, I see.
There's also Tasty right below that, the Tasty top, Tasty hourly top equities. So is that
Let's take a look at that. This is the list.
Yeah. So if you want the list here, I think this is it.
This is the list. No, I think they put it in numerical order, meaning, and maybe they do here. Maybe Tesla's number 1 today, Nvidia's number 2, IBIT's number 3. This makes sense.
I mean, Tesla's got to be number 1 with all those options trading.
Yeah.
Yeah. And if you look down this list, everything's red except, I mean, oil, forget about oil, but everything, if you throw oil out of here, everything's red except Apple.
Are you surprised with IBIT down as much that Coinbase is still red? I mean, when I say red,
Coinbase is still green.
Yeah.
Let's look at Coinbase because we haven't had a Coinbase position on in a while.
Oh my God, do you know what we're going to do in Coinbase? Just look at the price of Coinbase and tell me what I tell you we're going to do.
The 217 calendar. Well, earnings setup calendar. Sell that.
I know. And it's 420.
It's 420 on 420.
Can we do it?
Yeah. The 217 calendar. I mean, you put it in for 420, see if we get filled. That's when all the stars align.
I've got it in for 420. Now, we went through that kind of quick, but so we'll open this up. What we were surprised by is the fact that we're still seeing a little bit of green. And when I say a little bit of green, that means it's barely out of the red. But with the crypto down as much as it is, I was surprised Coinbase was up.
But crypto down, here's the thing. Like, just do me a favor, go to IBIT and because I was going to say like crypto trades all weekend, but IBIT just is from Friday to today. So IBIT will, if you want to see like what's the real move from Friday to today, look at IBIT, where if you're just looking at Bitcoin, that's trading all weekend long. So it is down. So I am surprised that Coinbase is up.
And I want to kind of look at this too, because it does confuse me when I look at these charts. So it doesn't stop. We don't know when it starts and stops here. So technically they're saying that Bitcoin is up, but to your point, it trades all weekend.
Yeah. So from Friday,
they have a bar on April 19th, meaning that you can see the prices. I don't know when it closes or when it opens, but there's April 18th. There's Saturday and there's Sunday. So on Saturday, it got as high. Is this right? Did it print 86?
86
on Saturday.
Now, because we've switched our positions from BTC to IBIT, so we wouldn't see that. But if we had BTC instead of IBIT, we would have seen it. So you could have two people with a crypto position. One could be BTC, one could be IBIT, and one could be saying like, "Oh my gosh, do you see how much Bitcoin's down today?" And that's the IBIT person. The BTC position person is like, "We're up. What are you talking about?" Because one closes the marks on Friday, and the other Bitcoin's trading all weekend.
Yeah, that's true. So there are so many different nuances. I had Shelly, the crypto girl, on. She does a great job. She completed her series of the shorts on Bitcoin and Ethereum and all this stuff. They are short, they are concise, and they talk about every question that you've asked. I sent it to both my kids, and they loved it. Yeah, it was really good. It was really good.
While we're still talking about this, can you go into Coin? I just want to see. I'm tempted to look at and put on myself a Bob on Fire in Coin. Just go to like Dees or Jan. I don't care. Oh,
So
not 2027 Ds.
Oh, sorry, yeah. It's so funny because they keep adding things. Okay, the Bob on Fire is buying the just out of the monies and then buying something for 50% of it. So I'm going to go 210, 290.
Yeah.
Wait.
Yeah, and then sell 2 puts for $11. That's fine.
Yeah.
That's $8,000 in profit. This is going to be $8,000 in profit potential. 2 puts for $11. Sell 2 125s. Bada bing, bada boom. You got $80,000 in profit potential. With the risk of getting long 200 shares of coin at 125.
Now, the Bob on Fire trades are very enticing because take a look at this. You're getting all the way down to 125. You get $8,000 in buying power. Or I'm sorry, $7,000 in buying power to almost $8,000 in profit potential.
If coin goes up. I mean, you're only going to make the 8,000 at the top of that call spread in December. But this is why I like the Bob on Fire, because my risk is getting long 200 shares at 125. If you don't want 200 shares, sell one put. Sell one put for 20. Sell one of the 160 puts instead of the 2 puts. Because this is what Tony from Mexico said he prefers. Sell one put for $22. You can go all the way down to the 160.
This is the buffer trade.
Yeah.
This is 100%.
Well, it's not quite the buffer.
It is the buffer. You buy, yeah, it is. It's a little bit less, but
yeah.
It's a little bit less, but you're buying a put spread. That's your buffer, and you're selling basically a synthetic covered call to cover the cost of it.
Right.
But I like what Bob on Fire did. I keep saying it's the buffer because that's what other people are using as the buffer. Mm-hmm. But I like what Bob on Fire does because he's using the out of the monies.
And I like the idea of 2 puts because you're going so much further. But if you only want the risk of 1 put, you can bring it up. And then you're right, that's the buffer. You're giving yourself.
And I have been liking these for earnings, meaning an earnings trade in December. Because if Coinbase goes up on earnings, and Coinbase has earnings, we'll do it the eve of earnings here. I mean, we put it in that calendar, but we'll do something else too.
And that's not filled. That's still working.
Yeah, and the eve of earnings, if we put that on and Coinbase goes up, you almost get about 50% of the move. It mitigates your risk a little bit too. You lose half as much and you only get half as much, but that's a big collection.
So, and if you think about it, the one situation like the buffer where we were selling the 1 put, you're giving yourself more than 20% in room to the downside because Coinbase is trading 206, almost 207, and we were getting our put to the 160. So like $47 away, $47 away, you're giving yourself a big buffer.
You really are. You're giving yourself a big buffer. Which it is the buffer trade. Like I said, everybody's working with the same set of tools, right? We've all got the same set of clubs. It's just how you decide to set it up.
It's crazy to me to think. I was telling this to Lily because, like, being with a million people for so many days, you talk about everything. I was saying to Lily, like, it's kind of sad that not everyone knows this or understands this or learns this because they're.
Not as cool.
Everyone who could trade options and really know how to put these positions on is at a way more of an advantage financially than people who don't.
100%. It's almost, and that's why I think it's a bad name because it looks like you're gaming the system, but you're not. We're playing with the same set of rules as everybody else.
Right. And you know, there's the old adage like, oh, it takes money to make money, or the people who have money are like the only people who can make money are the people who have money. But
it helps. It helps. You can start small.
But you could start small. You could start small.
Well, I think that it takes money to make money is the old fashioned way. Like if you have to buy a stock and it was so expensive, that is expensive and it's very challenging. But you know, our son's accounts, they use the leverage that options give them in order to make more money with less.
Right. I know. So, and honestly, like one of our top viewed, and I want to break down and go deeper into this because one of our top viewed videos is that one where I said, oh, my son started with $5,000. Now he has 20. I want to actually dive deeper into that account and look at some things and maybe do more of a piece on that because that gets a lot of questions. But you can use options and play smart trades and use them to your advantage to.
But you know what I think is fascinating, Jenny, listening to you talk like that, and I'm keeping an eye on the time because I have to go in like 2 minutes. But listening to you talk like that, I would love to see a deep dive. But it's not. I mean, it's nothing is cookie cutter. You can't replicate what you did. You can only bring them the ideas and say, okay, you know what I'm saying? Like it's not cookie cutter replicatable, but if you learn about it, you can do it in your own account however you want to when the market gives you what it gives you, right? So you had Oklo in your son's account and a lot of it went up and he got really lucky with that. But that was great and it was good timing on everything. But if you teach them how to do that, when the next one comes up or something that they want to be in, they can be.
Yeah, but when he wrote, like, he only had 20 shares of Oklo when it was running up.
No, I'm just saying nothing is like cookie cutter, like replicate these steps to go from 5,000 to 20,000 because the market might be different.
Right, like you can't say like, oh, they do this exact process.
Correct. There is no like formula for it.
But again, it was a lot of short puts and low price products. But now I feel like that Bob on Fire Trade, which we've been doing a lot more of, that gives them the ability to go into slightly higher price products and give themselves that profit potential, because they could use that in slightly higher price products instead of sticking with how JD's account is. If they want to sell puts in something, they can't sell puts in something that's a $200 product. They just
can't even sell puts in like a $50 product.
But I think that they can find ways to get into slightly bigger products by using options smarter.
No, I agree. All right, Jenny. This concludes our show for today. I got a doctor's appointment.
All right, everyone. Have a wonderful day. We'll see you tomorrow. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you live from the floor tomorrow.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
I'm still coming down from the weekend. Saturday night like we should. I know I should
What's up, TC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal, and of course, our Monday special guest, Kevin Davitt. How you doing?
I'm doing great. Good to be back.
Love to have you.
2 weeks ago, I just got to point out, you probably don't talk about golf all that often, but we talked about Rory, Scotty, and you were all over Cam Young. Right, like if you just tune in for that, I know the audience is not.
You had some
edge
to make some money, yeah.
Yeah,
it was fun. I honestly did not think that Rory could do it again, but I guess when the pressure's off, that's when you play your best, right?
I mean, it was off for like 2 days, and then it became on. And it
sounds like this market.
Yeah, right. Well, actually,
2 weeks off and couple weeks on.
Kindling.
Crazy.
On the fire. It's just completely exploded to the upside. Yeah. You love to see it. Well, you were talking about how cheap upside seemed, right?
I wasn't I? Thank you for calling attention to that. That has shifted meaningfully. And I think when you're just talking option concepts, right? Understanding that, and I say this regularly, but the market, and I would argue that index markets are arguably more information rich than some of the idiosyncratic like single stock names. That's just my opinion.
No, it's true. It's true.
But it really can give you a sense of how the world is positioned or what sentiment is like. And then again, to see how quickly that can shift, maybe something we'll talk about in a bit. But there is a very different index options market dynamic today than there was 2.5, 3 weeks ago. And that means opportunity.
Well, I mean, we sit here and look at expected move on the index just about every day. I mean, we talk about it. So, yeah, it definitely provides you information that you just don't get every day.
All right. I got one for you. Past 4 weeks, I track weekly at the money straddles. Old habits die hard. 4 weeks in a row, the Friday PM settle straddle has been so far off. I can't remember a stretch where vol has been consistently underpriced for that long in quite a while. I should have some metrics around that, but it just seems unusual. This week, for what it's worth, Friday on the close, the NDX at the money straddle was worth 500. I mean, we have been realizing moves like that. I'll bore you with one other number. The average weekly range for NDX going back 4 full weeks is nearly 1,500 points a week. We have been moving. And that's a backdrop that savvy options traders can really find opportunity in.
Yeah, and I think it plays into the concept of how implied volatility is a reflection of the straddle that you're talking about. And on the way back up, especially after a big move to the downside like we saw, you have these two things that kind of work together to help realized volatility exceed implied in that specific example, where on the way back up, we had this crazy vertical bar to the upside. But while we continue to climb, volatility continues to contract, and that just reduces the implied move the next week and the next week. And then you just blow right through it, and it gets crazier. I actually did an options video. I'm doing a new series called Options in Action, and it's basically taking like a beginner concept and parlaying it to like the real world situation. And I specifically talked about out of the money calls. Like if you were to time it perfectly from the bottom to the top versus out of the money puts, the calls you make way more, because not only is implied volatility and the call options cheaper on the way down because the price of the product you're trading it on is compressed, but then on the way back up, as the price gets more expensive, all the options get more expensive.
Yep.
So it's just like a great example of these options. If you played this to the upside, you made way more than if you played it to the downside.
You are absolutely right. And I think the world continues to wake up to the power of that flexibility, rather than planting a flag and saying, I'm going to try to buy the lows. You do not have to do that. And your risk reward dynamic can be distinctly different.
Yeah, it's, I mean, you talk about the straddle being off for the most part, because I mean, who the hell can predict what's coming up next? Like nobody, and I mean that in general, but I specifically mean that right now. I mean, as of today, can you specifically tell me that this war is over? No. And the rhetoric in the media does not help give you any insight to it. Honestly, I really haven't read much news regarding this current situation because it's confusing. I have no idea what to think next or what to expect when I look at the market that we look at every single day, I have an idea like, okay, maybe this thing is near an end just based on what we've seen over the last 4 weeks. So that has probably been the best thing because I can't figure out anything based on the news and the media. I'm completely confused if I read that stuff. But if I look at the market, I feel like, oh, okay, I know where the oil price is. I know where the markets are. This is telling me, and again, markets are generally forward looking. This is telling me that this thing is calming down.
Your point on looking at oil for the past 5-6 weeks, it has been such a powerful indicator. And when I think back just a couple of weeks, the term structure for oil futures did point to a arguably quick de-escalation with how steep it was. That has come to pass. It could certainly change. You see, whatever, WTI is up $5 or something today.
Yeah.
But the information embedded in derivatives is really something to behold. And I think you guys do a uniquely good job of explaining that and bridging those gaps between, right, like some numbers and what it means as far as somebody listening and the opportunity out there. So I tip my cap.
Sweet, man.
Appreciate it.
You got a couple of things for us.
Sure. Well, I mean, the first one we have certainly talked about. And visually, this is week over week. So the gray line plots the standard May NDX options term structure at the money roughly in the middle. And I marked 10% down, 10% up, and then the 25% up. When I was here a couple of weeks ago, we talked about how arguably NDX upside was unusually cheap relative to both itself, so a historical norm, and relative to the S&Ps. In part, that was driven by sentiment around technology writ large, but you can drill into that with much more granularity. And what we have seen over the past couple of weeks is demand sort of seep out on the downside and very significantly pick up on the upside. And that really has been what we have talked about for the past 10 minutes. And the opportunity, I couldn't make the same argument that upside remains cheap today, but if you played this well over the past couple of weeks, there was an opportunity to make a whole lot of money. And then the other thing that we were talking about before we went live was we had a market. The NDX has been up 13 straight closes going through Friday. So we're off 60 basis points or whatever we are today. That's unusual. And I have to admit, intuitively, to me, it seems like that's too much too quick. But you look, and I have something that shows forward returns over a whole bunch of distinct time frames post that trigger, as well as sort of top peak to trough drawdowns over that time frame. Again, I understand that your audience is largely focused on today or this week or shorter time frames, but it's interesting to see how often after runs like this that the market remains positive. You guys have a take there, and maybe more specifically over what time frame, or because I haven't been super active very recently. I'm kind of trying to reset what I think about the next couple of weeks. Mm-hmm. I'm open to input.
Yeah, I've to your point about too much, too fast. I feel like just about all of us have said that phrase over the last week at some point in time. As far as doing much as far as trading, Mike and I were just talking about this. I haven't really done a whole lot in the last couple of days. I mean, given everything that's happened, I feel, I'm mostly long deltas in a lot of Mag 7 names. I feel like those have been sort of underserved in this recent rally to some degree. I feel like I have a couple of short delta plays on as well. And then as far as like short vol plays, it's really been in oil and gold and silver. I mean, those have been the higher things, and they've started to calm down. Vol is coming in though, so that's my play. And until some weird, crazy, nasty reversal happens, I'm sitting in that for now. Again, it does feel like too far, too fast, but at the same time,
We got earnings over the next 2 weeks in a whole lot of the names you're talking about. And I would imagine a lot of your audience is familiar with looking at the straddles into earnings, the expectations, and how that trickles into the broad market. But it will be interesting to see how Q1 is digested and whether this sort of AI revolution or the beat and raise continues. That has been the case.
Yeah, and I think when it comes down to timing things and like just getting a scope of when markets are crashing and selling off aggressively, I think the best way to put it is like to your point, when you look forward from these things that happen and you see these reversals, the upside is substantially positive. It's like in the 90 percentile, where it's like if you look 1 year, 3 years, 5 years from now, it's like almost always going to be higher. So how do you play that with options? We say, the further something falls, like Microsoft or Nike is another good example, the more I'm inclined to just go into like the 1 year, 2 year, like long-term stuff. Because to your same point, the further something falls, if it's down 20, 30, 40%, Nike, I just bought a leap. We bought a leap in Nike because it's at 13-year lows. It's like, okay, it's at 13-year lows. This doesn't happen all too often. Let's get some long-term exposure.
That's hilarious. Those are two. I do not play a whole bunch of single name options.
Yeah.
Those two of late, certainly the case.
Yeah.
And I doubt Nike pivots into the AI revolution.
Maybe.
Hey, you never know.
I mean, maybe they should. Maybe they should do like an AI-related, like old type of Jordan thing. I bet it'll work. It'll easily work. Like a hologram, like they did with Tupac, do a hologram of Jordan, even though he's still alive.
Yeah.
I mean, it'll probably work somehow. The guy sells shoes no matter what. I mean, it just does.
Yeah. But another thing about the longer term stuff, like you don't have to just buy really expensive options. You can do a longer term calendar spread or longer term diagonal spread. And the nice thing about that is when you get these moves to the upside, instead of only having like 15 or 30 days left to expiration, where you have a lot more stress about closing it out, if you have a year left, you can just let that thing go. Like we have positions in Microsoft that I'm not even considering closing because I've got 300 days left on the option. And it's like Microsoft had a nice rally. The NASDAQ had a nice rally higher. It's a lot easier to hold on to something when you've got a ton of time for it to work out.
Right. And your audience gets to learn the sort of distinct behavior in terms of time decay and options, how incredibly slow it is on those longer dated stuff relative to what's going on the next day, the next week. It is really broadening your understanding of how these markets work.
100%.
It's a good chart, man. Friend of the program, Spot Gamma guy. You and I are both going to be at OIC conference May 6th through 8th.
Yep.
And I'm on a panel with him. So I'm doing a panel. I'm running a panel, and he's going to be on the panel.
That will be so good. I know.
I'm going to try and make it fun. I mean, it's the first time I'm actually running a panel. It's a lot of work.
Yeah.
I mean, it's a lot of work, but well, it should be fun.
Exciting though.
You got another chart. Let's check this out.
Which one now?
Oh, it's dealer's choice. They just
it is dealer's choice. Nobody's shouting anything.
I know.
Production now.
Well, we try to keep you just like moving around.
Toes.
Keep you on your toes. What we got? Oh, there we go.
That is it. So that's what we're talking about, or what we mentioned a couple of minutes ago. It's unusual to see a broad-based index up 12, and now through Friday, it's 13 consecutive days. And it makes my reptilian brain say, man, this thing needs to go down. But the data, I suppose the couple of things that jumped out at me, the rarity of occurrence. And I look back at dates and I look around like the early 90s. So in my mind, I'm thinking like one of those is probably around the OG Iraq War. I don't know for sure. I was kicking it in high school. And then we're talking one of them, 2017. So you and I were working together elsewhere. It was one of the lowest volatility years on record. For the S&Ps, you had to go back to 1965. And for the NASDAQ 100, I believe calendar year 2017 was the second least volatile year. So unusual. That's the other thing, is that after moves like this, they tend to get digested. Whether we see that this week, the next couple of weeks through earnings wouldn't shock me. The other one interesting tidbit, and I'll get out of your hair and let you guys talk about crypto, is how much implied correlation measures have fallen over the past couple of weeks. Now, the trade-off there, or the dynamic, is between constituent volatility, so all those names which have a tendency to remain bid into earnings, relative to an index. And it can only fall so far, just like volatility has floors. And at this point, unless constituent volatility really, really comes in, it's going to be difficult, or I think you can make an argument that it's going to be difficult for index volatility to fall considerably, given what's occurred over the past couple of weeks. So those are the handful of things that sort of make me tick and the way I think about the world, and I really appreciate the opportunity to talk about them every so often.
I mean, this is something to really think about, considering the year-long straddle, actually, as I have it. And you know what? I thought there was an occurrence during 2017. Most of the main media was showing how the last time we were up 12 days in a row was 2009. But as it has here, 2013, it happened, and also in 2017. So, yeah. I mean, well, we got history now, though. 13 days? Maybe 14.
Today would be 14. And really, you think about, yeah, for sure, especially given how markets sort of opened last night. NDX was down in the ballpark of 1.1%, just brushes it off so quick. This market seems to want to go higher. Mm-hmm. And I think into earnings, perhaps there's going to be excuses for that to continue. But at what rate, that remains to be seen.
Yeah. And I think with this, the chart, just looking at
they got the other one up, and I know you got to talk about it.
Now putting me on the spot here.
Real quick, I mean, like when you look at these, the 1 year later, 100% positive, it's just like these are the situations where, and also the situation where you have a day where you're up 12 days in a row is probably after the market's down 10, 15, 20%.
Mm-hmm.
Yep.
Except for 2017.
Yeah.
Somehow or another.
Yeah. It's hard to keep perspective when you see stretches like we did recently, stretches like into the tariffs last year. But markets are amazing. I know that's corny. Markets are amazing. And I think options give you the flexibility to be less likely to freak out March 30th or whatever day it was. Yeah. And think about a year from now, this could be a very different world. And there are ways I can use shorter dated options to pay for that. It's amazing. Mm-hmm. Choose your own adventure.
Yeah, it's been a heck of a run. We'll see if it continues. Dude, good to see you, man.
Likewise.
Every 2 weeks, we're doing this for sure. Yeah. Every 2 weeks. That's fantastic.
Thank you for the chance.
Absolutely.
Absolutely. Thanks for coming out.
Yep. We'll talk
Kevin Davitt, folks.
Perfect. E-minis down 27, NASDAQ down 150, Bitcoin down 2K, and ETH down 125. We haven't done anything too crazy today. I made those adjustments on Friday when we walked through our portfolios and created more downside benefit to those SPX butterflies, which I feel really good about now, because now these things, if we get a market that's down 100 points, these things are going to explode and hedge basically everything that remains in this portfolio. There's really not much left in this portfolio after taking risk off into the rally and whatnot. But
yeah, I still have the few downside SPX things that I've had. I am between either keeping everything the way I have it right now or closing, and I might just end up doing this, like closing an upside play and a downside play every day. That might be the thing. I'm starting to think about whittling some things down and just keeping the few short vol things that I have on. I'm really starting to think about that. I'm just trying to observe how the next couple of days are going.
Yeah. And to what we were talking about earlier with the NDX weekly expected move and SPX2, like we only have 100 points priced in for the rest of the week. Feels a little light, all things considered, because one tweet can change all that. So we'll see what happens. But we have another special guest today. It is Monday, so we got to have Ryan Grace on. Ryan, how you doing?
What's up, Ryan?
What's up, my friends? I'm well. How are you guys doing?
Good, man.
Living the dream.
Pretty good. Chill weekend. Didn't do anything really. Kid had a track meet. That's about it.
Oh yeah.
Yeah, it's cool.
Are they runner?
Yeah, he's running. He is running the 400 and the 200. This week he ran relays. It was a massive track meet. It was like 20 schools.
Wow.
Yeah, up in Grays Lake. So
I like the 200.
Let me tell you something though. I saw some of the this app that they have for track meets, dude. I want to be a part. I want to buy it or something. I don't know. It's the coolest thing I've ever seen. It lets you know where everything was going on. You could break it down by like 7th and 8th grade, boys and girls. It was just so on par. They had one of those little sticker things, so the tech was so good. As soon as the kid crossed the finish line, the times were immediately updated into the app. Dude, it was really impressive. I was very impressed by that app.
That's cool.
Yeah, it was really good. Like, you knew everything that was going on the minute. You could follow along. It was really good.
Sick.
But yeah, my kid ran 400, 4x4, 4x200, long jump. Yeah, just, broadening out the athleticism a little bit. I ran track in high school, so I'm excited about it.
Yeah.
I was going to say, it sounds like it's come a long way from our days of running track. I remember
You ran track? Yeah.
Run out and
Dude.
try to figure out where it was, and then you'd be doing one event, immediately have to run over to the other one.
Okay, yeah, exactly. Like they are so on it now. Yeah, there's not like bunches of things posted for like they got it all in the app. It's incredible.
What say you about this crypto market?
Looking better.
Yeah.
Feeling
nice.
The better.
Drifting higher.
Higher. I've got some slides per usual we can go over. Wrote about this over the weekend as well. You're seeing a broadening, of course, of some of the price momentum. Like I said, feeling better. This has been a gauge for volatility and maybe to some extent how things were going to open up on Sunday, week in and week out over the weekends. And so, of course, when we got some of those sort of risk-off headlines this weekend, firing at ships again, you would expect a little bit more weakness, but we're kind of back to where we were. We were 78 and change on Friday, so we're underneath that. But it's not like this is just getting clobbered back down into the 60s or anything. So I think it's trading better, but again, alongside the rest of risk assets, which we'll take a look at.
Sweet.
Yeah, so if we jump into the first slide here, per usual, guys, we got the performance update, and this is exactly what I'm talking about. If you go back to last week, it was really just Bitcoin and ETH that were showing some positive price momentum, and you're seeing that across a variety of tokens. That said, our 3-month performance is still very weak. The trend on the weekly basis, or that price momentum trend via those moving averages, is still bearish. I want to see that transition into something that looks neutral to even bullish. The faster that happens, the stronger the signal is. And you're not seeing a lot of encouraging signs on a monthly basis either, which ultimately reflects the environment that we're in. We're in a bear market in crypto. You're not seeing massive moves to the upside. Yes, it is participating, but the equity market's not in a bear market. And so you've got a little bit of a different environment here. That could change, but in order for that to change, you really need to see the Bitcoin price closer to 90,000 versus 75. So a couple things I'm keying in on, but of course, if you were buying this sub 70, mid 60s, you've had an opportunity here to sell at the top of this range, which has been about 75 or so. If we can break above here and we can hold on to it, I'll be a little bit more bullish. But right now, I still think you trade the range. Expect some dips in here. I think I heard you mention, a headline could change or a tweet could change anything. That's very true of crypto here. So you maybe look at that as an opportunity more so, given that price momentum is shifting to a more bullish view. But big picture, I don't think anything has changed. I don't think this is necessarily the end of the bear market for crypto that we've been in.
What would be fun is if you had not you, but if there was a clip of 6 months of this specific chart and showing it over time and how it changes or whatever. Because I bet you again, I'm looking at this thing and I'm thinking back, it was a lot of red. Yeah. There was a lot of red on this screen. And then slowly the green started filtering in up top. And then now on the 1 week, they're all pretty green. And then the monthly, you can see a couple of greens filling in. And again, there's been this kind of correlation to the equity market, right? And so that's been part of it. But over time, if you see this fill in, there could be a time 5 months from now where we see mostly green on this thing.
Yeah.
Kind of interesting.
When you look back at prior cycles and the way that the cycle in Bitcoin or crypto is often measured is around those halving dates, which occur mathematically for Bitcoin every 4 years. And that's where the supply is not necessarily reduced, but the rate of the supply growth is cut in half, right? The halving. And so you have this kind of disinflationary component, at least to the supply growth, which does have a scarcity element to it, given there's only going to be 21 million coins in circulation. So when you measure the cycles around that, what you've typically seen historically is that after the peak in price, post that halving event, you typically have a bear market that lasts anywhere between 12 to 18 months. The prices for crypto and for Bitcoin here, for the whole market, have clearly peaked in October at 126,000. That was the all-time high. So we're into that bear market. We had that initial just blow up, the flush, all the leverage came out of it. You got the quote unquote dead cat bounce, and then you got smashed back down to about 60 and a half, I think on February 5th, February 6th or so. I think it's safe to say that seems like the bottom might be in, barring any sort of just massive collapse of the financial system, exogenous shock, whatever it might be. I mean, even going throughout this kind of geopolitical event we're in, the war in Iran, it's held up. And so that's kind of what I would anchor in. You also have that big 200-week moving average that throughout every single cycle you've traded down into. Now, over time, if, of course, the price maintains these levels or moves higher, then that average is going to get pulled up as we progress through time. But last I checked, it was about 59,000. It's entirely possible we could break back down into that, but that would be a level where I, of course, would be looking to buy versus, chasing it earlier than that. But 60 and a half is very close to those levels, of course. So again, that's what I would key in on, trading a bit better. But if we just jump to, let's go to slide 5 in the deck for a second. We'll skip ahead. To your point, Jamal, when you look at the correlations, like this is what's driving it. It is risk on, maybe the worst is possibly behind us, who knows, in terms of the war in Iran. Equities are trading as if nothing matters. At this point, oil has certainly come off of its highs. Oil vol has come down. Rates are falling a little bit. Bond market volatility is coming down. So you have, some variables that I think are generally positive for crypto. And then you look at the correlations. So it's all the same trade. We've been talking about this week in and week out. Some of the strongest correlations that you can get to, of course, these are almost, pretty much extremes in terms of that positive correlation with the equity market, inverse or negative correlation with the dollar here, inverse or negative correlation with the VIX. And so I would caution everyone that short term, anything that could just upset this, you're going to see lower crypto prices, possibly unless you get a breakdown in short-term momentum here. That presents an opportunity to buy the dip for a trade. I think you still want to trade that range. We haven't broken out of it where now it's let's hold this and see, do we get to 100, do we get to an all-time high? I don't necessarily think that's the environment you're in, of course. But just pay attention to these. I mean, they're backward looking, they're lagged. It's not necessarily an indicator of what happens next, but the setup would indicate, I think, that if you were to get any sort of risk-off move here, it would be unlikely that crypto would go up, especially if there was a move where, we're back to kind of get me out of some of these things that just went up very, very quickly over the last month. Get me back into dollars. You see a little bit of bullishness in the dollar. I think you see a reversal in some of these moves. And the same thing for gold as well, which also has a pretty strong positive correlation over the last 3 weeks between Bitcoin and gold. So those are the correlations. If we go back 2 slides, we can take a look at our expected moves. Vol has come in a little bit here, looking for about a $4,500 move in Bitcoin, $200 move in ETH. The ranges are inching higher, I think is the appropriate term here. You're not pricing in new highs versus what the moves that we were pricing in over the last week. But right around 80,000 is the one standard deviation, 1 week move for Bitcoin at this spot price and this volatility. 70,000 on the downside, or almost 71 there. ETH 2,500 to about 2,100, 2,000 or so is the 1 week, one standard deviation move there. Uniswap back underneath 3 on the downside. XRP has been very tradable from that 135 to 145 level. You can trade futures in there too to get a little bit of leverage, but that range has been very tradable. And Solana Sol here has just also been moving sideways. If you look at that as one of the larger market cap tokens versus Bitcoin versus ETH, it's been the weakest. It's lagged Bitcoin and ETH ETH has been outperforming at times. It's been outperforming Bitcoin. We're starting to see that slow down a little bit as well. But if I had to pick, two of the three, I would still stay with Bitcoin and ETH. Doesn't mean that there isn't a trade, but Solana is just showing you much weaker signals at this point. Jumping to the next slide, we can look a little bit more of that relative performance quickly. Bitcoin market cap dominance has been 60% for the better part of it. Seems like 2 years now. That's strengthening here. That ETH BTC ratio was showing us some positive momentum. It's flipped back to neutral, and you can see that on a 1 week basis. It's underperforming Bitcoin, and then Solana versus Bitcoin, Solana versus ETH, and then Doge is a proxy for a lot of other alts. Everything is underperforming Bitcoin and is pretty bearish from a momentum perspective. So again, I think at this stage in the bear market, I would stick with Bitcoin and also look for short-term opportunities in ETH. Jumping ahead, we looked at cross-asset correlations already. Short-term, this is all going to be driven or has been being driven by the same thing. And then just looking at this, from a couple other angles. Oil vol, the dollar we talked about, interest rates, all again showing the same thing, which of course, if you get a spike in oil and oil volatility, which is going to be the result of something else happening in terms of the war in Iran, you're going to see risk assets sell off short term. That's not a surprise to anybody. I would suspect then that you see a short-term spike in rates as well. There's going to be the inflation dynamic, which is going to be persistent regardless of what happens short term. You're going to get a spike in bond market volatility. And I think given how these things have been trading, unless something magically has changed, you're going to see lower Bitcoin prices. That said, let's jump over to our last slide and take a peek at the macro momentum. And wow, what a difference a week makes, guys. We were down, as you know, we were down 10% or so correction in equities in the S&P and in the NASDAQ. It was starting to look like that could pick up some more steam to the downside and very quickly completely reversed. So all of those signals that I would look at as, okay, this is a market environment in which I want to sell rallies and actually think about shorting equities, because that's a terribly difficult short. Most of the time they've gone up and every once in a while, obviously you get a big correction in there, but it's hard. It's been very hard to short equities or to do that kind of consistently or persistently. We're back to bullish as you can get. Now, that doesn't mean that you chase it higher, of course, but you look at what we just did in the last few weeks to take us back into positive territory on a 1 month basis and a trend basis being 3 month. Positive momentum just about everywhere. Volatility breaking down here, at least short term. The dollar is showing some weakness. Interest rates that just spiked higher have reversed, and everything else is off to the races. And I think when you look under the surface too, you have a handful of these mega cap tech names that are trading a hell of a lot better than they were, right? I think we were kind of looking at maybe further weakness in names like NVIDIA or Apple or Google. I know you guys have talked about Microsoft a bit. I haven't checked that one recently. But all of those big tech names have since reversed and are trading a little bit better, at least here in the short term. So that's the last chart that I wanted to, or table I wanted to call out here was, you look again at that kind of bigger picture macro backdrop. And regardless of headline risk, regardless of what could happen here, at least for the time being, market is pretty positive.
Yeah, it's been insane. But I want to ask you one thing about oil, because I know that you used to trade oil a lot. You're trading oil a lot now. And with the increased negative correlation when it comes to oil and Bitcoin prices, I know you're inventorying a lot of delta in crypto and Bitcoin, ETH, what have you. But how do you see, or how are you trading oil against those positions? Are you just using it as a proxy of, if oil's ripping higher, Bitcoin's probably down? You mentioned vol. Are you doing more neutral positions? Do you see that as a hedge against your Bitcoin products, or is it just an isolated trade?
No, I think it's definitely, I wouldn't necessarily call it a hedge against Bitcoin, but in terms of something that could offset it given this setup.
Yeah.
When you think about what would be the reasons as to why oil is ripping higher, is this because there's increased demand and there's a growing economy? Is it because of geopolitical risk? And of course, it's the latter. And maybe we do see, that demand picture get better. But let's focus on the geopolitical risk. So if that's the reason why it's going higher, then on the other side of that, you're likely seeing a spike in volatility, could see a spike in interest rates, higher dollar, all of these things that at least short term have been headwinds to crypto. I think you could almost look at it the same way. I want to lean a little long energy here, or more specifically crude oil versus longs in the NASDAQ, because if that really does accelerate to the upside, it's likely that you could see some weakness. If it's for these geopolitical reasons, you could see some weakness in equities. So that's how I would think about it. So I feel a little bit better about carrying some long deltas in there, though I wouldn't get too overextended either. I mean, we saw just how quickly this whole thing could reverse on Friday last week, where I believe at one point WTI, Brent were down, well over 10%, maybe closer to 15% at the lows. And you have crude oil prices that are moving on average about 7 to 10% every single day. So volatility has come in, which if you've been selling strangles in crude oil options, that's been a great trade. As long as you can manage your deltas in there and can stomach some of the, the short-term moves. But that volatility is still very, very elevated. So you have to expect that you're going to get large moves on both sides of that, hence why you want to manage your deltas. But I think you look at that trade almost separately. That said, if you're carrying a long crypto position, you're looking at the setup here short term, I probably want to lean long a little crude, knowing that that big spike in crude oil, if it does happen, is probably going to weigh on risk assets. But that's how I think about it. But I think, again, the trade has been to probably just take more of a, given the opportunity that you could sell, and I'm going to kind of arbitrarily throw out strikes. But at one point, you could sell 125 calls and you could sell 75 puts in CL, and that trade has been pretty profitable over the last couple weeks. Maybe it changes, but I would look at that separately.
Love it. Looking at the crypto watch list here, Aave's down 13%. Is there anything that related to that you see as an opportunity to get long, or is it
just a Monday?
It's just a Monday.
No, there was, I believe, an exploit related to Aave. So, anytime that you're in DeFi, you have DeFi risk, and you should, or hence why you get paid DeFi yields. I don't know the specifics around this, but yeah, there is a reason as to why Aave is down. Now, what does that mean for it going forward? Haven't spent a ton of time on it, but something to call out. Now, when I zoom out of that and you look at, okay, does this make it stronger over time? Is this the end of Aave? I don't think it's the end. You've had exploits previously. Could there be an opportunity in this? Possibly long term, but let's see how this plays out. I don't think it's a reflection of DeFi more broadly, but is a reason for this to have a spike lower within an already pretty, structurally weak market.
Cool. Thank you for that. Love it. And we are still long Bitcoin and ETH with IBIT, ETH. IBIT got caught with this short call that's now reversed a little bit, but against 100 shares, so no upside risk there. But we'll just keep selling premium around these things and picking up the value where we can find it. I'm going to pop into the YouTube chat now. If you want to join us there, we're streaming live on Tasty Live. You can throw in your trade ideas all on the right-hand side chat. You can check them out right now. Doge is still doging.
Doge is still doging.
I mean, yeah. It's always going to be doing something.
Yeah. I have some of that in the personal.
Do you?
I do. Yeah.
This is a fun chart. Avis Rent-A-Car.
Oh my God.
What
up again?
Is
happening?
I mean, this is just
no idea.
This is funny. This and what? Allbirds.
Yeah, this
getting out of shoes, getting into AI. That's the funniest. It's like this reminds me of the pot craze and like the crypto craze, where all these companies like Green Mountain Coffee Roasters is getting into
that one too. Yeah,
Radio Shack.
Dude, this is bad. The stock doing this right now is bad. Like, seriously, it's not good.
Yeah, do you guys know? Is this just a short squeeze?
Man, I don't know. I've seen theories. I forgot what the theory like a couple of weeks ago was that people are going to be renting cars more or whatever, because I don't know what that, it didn't make sense to me at the time. It doesn't really matter. There's no reason the stock should be doing this. Yeah. There's really no reason. This is bad. I know people see stuff like this and you want to trade it. I used to be that guy many years ago. Be like, oh, I got to do something with this. No. Staying away.
That's
it's probably untradeable.
That a while.
Yeah, it's insane. I know you mentioned, Ryan, you were looking at kind of buying the tail end of this curve here. How are you trading? There's a question in the chat. How would you set up a new strangle in MCL right now?
Oh, I've actually been selling premium in the short end of it, or the front of it, excuse me. So short-term options, like, I'm in MCL. I think there's options that expire in the next 4 days. So this week you have less choices there. Now I prefer this product just because it's a lot smaller. It's a tenth of the size of CL, so you can scale into it versus, when you have crude oil moving $10 a day, well, that's $10,000 on a single CL contract. You can't really do much to scale into it unless, and I simply don't have millions of dollars in my account. So, this is appropriately sized given the volatility and the money that I'm trading. But, what I would do is, or what I do is try to model volatility in there. So I like to look at the vol of vol. So if, let's just say, the current OVX volatility, the index is 75% or so. Well, I want to look at what is maybe one standard deviation of that over a shorter term time frame to get a sense of, well, it might not go there, but what would be realistic or probabilistic in terms of where a volatility expansion could take you, because you really don't want to get on the wrong side, of course, of a short-term vol expansion in crude oil because the ceasefire is open and over and something much, much bigger is happening. Even if that resolves over time, you don't want to be on the 75 to 90 rip higher, even though the longer-term volatility trend in oil is down on a 4-day basis. You better have some capital to be able to manage the deltas in there. But that's how I would look at what options should I sell on a per strike volatility, or even just looking at this and saying, well, if a 75% vol index here for OVX gives you a 1 week, 1 standard deviation move of X, when I model that volatility out, what does that higher vol give you? And you kind of have a little bit of a buffer possibly. Unless you really see a massive expansion in volatility. So I kind of start there. At the same time, I'm not coming in here at any volatility and selling 20-cent options in oil. If you're just simply looking at it from a return on capital perspective, and the buying power is about $1,100, $1,200, whatever it might be, I typically, and this is true of any option that I sell, I want 10% or better in terms of my return on capital. I'm not going in there and selling, these tiny little options and, 20-cent crude oil options or whatever. So it's kind of how I would look at it, just to start with in terms of modeling volatility and strike selection. Also just look at the chart, right? I mean, where have we seen oil prices trade over the last month? It's a pretty wide range. You have to be comfortable with revisiting probably close to a 120 level. And you have to be comfortable with, on the downside, the potential for sub 80. That's where, if you go a little bit further out on the forward curve, that's where you're kind of seeing oil settle here. If you're about a year out or so, I think you're closer to 70, 72, somewhere like that. So I don't know if that's helpful, but that's how I think about it. The trade that has worked until it doesn't, of course, is to sell the vol in the short term, because that's where it is. You can sell the May 14th expiration for the June contract here. But, those options all got a bit more expensive today.
So we always, when I first came to Tasty, I never knew about research about the 45-day window and closing stuff. I just remember being young at a prop firm, and these guys who used to sell vol big, what they would do is after times like this, now it could be any instrument, but after crazy moves, right? Like what we've seen in oil, what we've seen in gold and silver, when nobody else wants to touch them because they're still worried about, silver going back to 100, or because it faded from 100, now it's going to go down to 50 or something like that. People are worried about the huge moves, and yet you just sit here and watch this thing calm down. those have been the times to sell it. That's why I'm short gold. That's why I'm short oil. That's why I'm short silver for that exact reason. Because that's usually the best time to sell the vol when everything is still so dislocated and it's experienced these wild moves. The vol is still elevated, anticipating potentially those moves again. And if it doesn't happen,
yeah.
And so that's why I kind of sit. That's why I'm in those right now.
Yeah, and to your point, Ryan's point, like selling the 45-day or getting involved in 45-day trades as a general rule, like makes sense because you're blending time and volatility. However, when you have situations like this, where in crude you have a 7-point implied move for the next 4 days, and barely anything higher in the next cycle, and then twice the amount 24 days out. If you look at the vol versus time here, 4 days versus 24 days, that is, 5x, 6x in terms of the time. But you don't have 6 times the implied move here. You have 2x the implied move. So your vol exposure selling this 4-day, you're getting way more premium in terms of implied volatility if you're selling the 4-day 95, for example, for $1.50. And at the same time, even if crude oil creeps up there, let's say crude goes up 2 points over the next couple of days, it's not going to matter if it goes to 93 and you're in the 4-day cycle on Friday, because this is still going to be zero extrinsic value. But even if it's not, if you get a rip higher over the next couple of days, you can buy back the 4-day and then you can roll out to May 14th. And all these options up here are going to obviously be more expensive, but you could buy this back for whatever it's trading for. And just to give you an example of like the price equivalent, you could go up to the 110 or the 115 and still pick up a credit or do it for a scratch. So you can move this thing 20 strikes higher going out 2 weeks and, move your deltas way further up and still collect a credit or do it for a scratch. So you can manage your deltas in here very effectively simply because implied volatility is through the roof and you have 100% IV for these cycles.
I do want to mention, though, that of course, when we look at the vol spike that occurred and then where we are today versus that, yes, vol has come in from extreme levels, right? Mm-hmm. When you look at, how many standard deviations of a move that was versus what's normal, that was historic. There's only a couple times prior to this where we've seen higher levels. All that said, a 75 vol in crude oil is massive. Yes. I wanted to say something different. It's huge. It's priced like that for a real reason too. This is not, of course you have to be comfortable taking risk and you have to be comfortable with position sizing. I think that's, of course, the way that you manage risk. I'm not going to say this is a safe trade necessarily, right? Again, it's priced like that for a reason. You can hedge the real extreme, the tail, or at least you were able to do that on Friday. And what I mean by that is you go and you can buy call spreads at levels that we probably can't fathom right now, $150 a barrel. But you could do that so cheaply that it almost makes sense in some ways. Like you want to own that upside tail. I don't think there's a downside tail in this scenario where you're looking at, a supply-driven collapse in prices to 30 or something. But I think you want to hedge the upside, of course. And you have to make sure that if you're trading these positions, because it's very easy to get very big in this sort of volatility environment with these products, right? You started selling some strangles, and then you have a lot on, and you're like, oh, wow, now I have a massive position. You need to make sure that you have enough capital to be able to manage those deltas. And when you're managing your deltas, you can't get caught up in the delta position, right? The way that I would think about this is if I'm going to have a short-term massive theta or sized position, then I don't want my deltas that are even really much bigger than that, right? Just if I can get $500 in theta for that expiration, or in some cases even on a daily basis if you have a larger position, I don't want my delta at 1,000 or at 500. I want to keep that very manageable just given how much this is swinging around. And you want to be able to go in and have that capital so that you can very quickly, versus what you're comfortable with, and the Analyze tab is going to be a great way to view this, but you want to be able to go long or short those underlying contracts against how your position has changed because you're not trading the delta. You're trading the theta, the volatility or the vega here is what you're trying to capture. And so just keep that in mind and have the flexibility to be able to do that. And so in some cases like this might make sense to do the straddle and then manage the deltas versus the strangle, but kind of the similar trades, of course.
Yeah. And to your point, this is a smaller product, so the notional on one contract's 8,700 if it goes to zero. So also, if you were selling, like let's say you're buying MCL into the sell-offs, and then once you capture these rips, instead of closing it, you can close it if you want to, but instead of closing it, maybe you're selling these options that are now increased in price. Because like if we look at the change here, we can see these options have increased pretty dramatically over the last trading session. Really, this is under $1 or under $2 coming into today, and now it's up 80 cents into this move because we have a 5% move to the upside. So it all makes sense. And yeah, even like worst case scenario, let's see it keeps ripping higher and higher and higher. You can buy the contract if you have the buying power available to offset that delta completely. And sometimes that's always in the back pocket, but the more volatile this thing is to the upside, if you have a hard time managing the deltas, you could consider doing something like that. And the premium you collected is going to hedge a little bit, but got to be really nimble in here for sure.
Yeah, they're not super liquid, right? Let's be clear about that. Open interest and volume in there can be very low at times, and you can see what the spreads look like. But I think that in some ways that creates opportunities as well. Of course, if you're trading size, you want to be able to trade something that's very liquid, and then presumably you'd be in CL. But you can work orders in this overnight. Some of the bigger moves happen when you might be sleeping here in the U.S. The other thing you have to be ready for is if you have oil positions on in this environment, well, you can't be out at the bar Sunday afternoon. You know what I'm saying? Like when this opened last night at 5 o'clock, we got all the way up to almost $90 a barrel and pulled all the way back to I think 84 or so. And that was all within the first 15 minutes of trading. So there's a lot of noise, there's a lot of volatility, but you've got to be locked in is the point if you're going to be in these sorts of trades.
Yeah, 100%.
Bats did a car trade.
As
we were sitting here and you were talking, flashed up on the screen. Ooh. Look at these guys. And by the bats, I mean, this is clearly a Nick trade. There's no way Tony can trade.
Getting into this silliness. Diagonal spread.
This is popcorn material right here.
I Googled the reason behind the move, or the supposed reason behind the move, if you guys are curious. Maybe you already knew that.
What is it?
Avis Budget Group is climbing sharply as widespread airport disruptions and TSA staffing issues drive a rush for rental cars. Giving the company stronger pricing power and lifting demand. By the way, the rally is also being intensified by a massive short squeeze with more than a quarter of the stock's float sold short.
That's how it works.
This is nuts.
Insane.
Yeah, so you picked your catalyst. Pick a catalyst.
Is it TSA or not? I'm going to say no, but
amazing.
I mean, this is a really expensive trade, but these options are insanely priced.
Yeah, they are.
And these are the situations where, like, to the point in MCL, like we were talking about selling a call about the market, like you couldn't pay me to sell anything in here. Like, these are the markets where 200% IV, like to Ryan's point earlier, the IV is priced the way it is for a reason.
Yeah.
And you're looking at 100-point range on a $500 stock over the next 4 days. There's no situation where you can sell a call or sell a strangle and manage the delta effectively, especially in a product like this. The real problem is these markets are closed. MCL, you have a lot more flexibility because you can have the markets move, you don't have the gap risk is what I'm trying to say.
Mm-hmm.
Here, you could have this thing close at 5:30 and you wake up tomorrow morning and the pre-market action has it at 6:50. Like there's no telling where it could be.
Yeah, to get at what I was describing earlier, the big vol selling guys that I know, they wouldn't touch something like this. Even though the vol is so high, they don't touch this because it's like you said, the gap risk, it's too much. You're going to get crushed selling vol here. You're actually probably better off buying something like he did. He did a diagonal. You're better off doing that than trying to sell a strap. There's no way you should ever sell a strangle in here. I don't care how wide it makes. It's not going to work. I promise you it won't. Because the ball's going to stay elevated as it's still doing this. And when eventually it does fall, it'll definitely go through your strike and destroy you somehow.
Yeah.
And I mean, honestly, the people, you could probably be better off buying an at-the-money call and hedging it perfectly, right? And then just wait for the huge move to happen to the downside. It might collapse, fall, but if it happens huge enough, you'll win on the stock, not on the option. But that's the kind of thing that this is going to be. I mean, this is going to be crazy. I'm rooting for you, Nick. I hope this thing works out for you, man. It's going to be fun.
Yeah, and one last thing about these type of moves too, and we saw this during the AMC and GME squeeze. People were playing for a reversal. They're saying this is not sustainable. It's going to go from 540 down to 300, and I know it's going to happen in a certain amount of time. The issue is the same thing we were talking about earlier with calls versus puts. If you're buying puts out of the money in a 200% IV product at a price point of 500, and then you get a price point that goes from 500 to 300, and the IV goes from 200 to 60%, you can lose money on that option because not only is the stock price cut in half, which cuts in half all the at-the-money options at the new price point, but now you have an IV of 200% that has gone down to 60. So we saw this with AMC and GME. We saw people buying out of the money puts. You got the move to the downside, but the vol crush was so dramatic and the price dropping was so dramatic that those out of the money puts lost value. Even though you were directionally correct. So you got to have something like this where you're long something, but you're also short something to offset that vol crush, because the vol crush will happen if CAR goes to the downside, which I assume it will. You're not going to see a vol increase. You're going to see this 200% go to sub 100.
Or you just got to be like at the money, which who can afford that, right? Like you got to be at the money and watch it completely go in the money.
Yeah.
That's the only way. That's crazy.
Absolutely nuts. But yeah, that was a great session. Thanks for joining us, Ryan.
Thanks for having me.
Yeah, absolutely. If you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Jamal is at Jamal Chandler. And Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. They've got a Substack you can subscribe to get all that juicy info in the newsletter that they send out twice a week. So yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for backtesting? Nah, trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. What an interesting market we have on our hands today. We have the Avis rent-a-car situation continuing to rip. We have, much to my dismay, and we'll get into it in a second, American Airlines saying they're not going to merge with United. They basically said, what the hell are you talking about? And we also have AST Space Mobile sliding after Blue Origin messed up one of their satellites. Not their fault. Feels bad. I'm joined as always by my wonderful co-host Errol. Errol, how you feeling? What's going on?
Pretty good. How we doing today? I know it was another weekend. We got more headline risk over the weekend too. So I know we had some things going left and right, up and down, whatever you want to call it. It was a little bit chillier this weekend, so that was different. I think last Friday, Saturday, it was super foggy. I thought there was like a fire or something coming in, but I don't know if you had seen like the clouds all the way down on the skyline. It was kind of cool, kind of freaky, but it was pretty cool. But no, nonetheless, nothing really too new. Cold weather, more headline risk over the weekend, but that's pretty much what's new on my end.
Yeah, I've been better. I'll tell you what. Okay. Because this American situation has really frustrated me because I was so right with my trade conviction last week. We can jump over to the Tasty platform here. You guys will recall last week, United, the CEO of United Airlines, Scott Kirby? No, it's Kirby, came out and said, we're thinking about merging with American. And American immediately jumps 8% on this news.
A lot of fiasco, craziness going on,
yes.
Right?
And I said, there's no way in hell United is going to be allowed to merge with American. This makes zero sense.
Right.
The stock just continued to run all week, partly driven by that news. And then this morning, American comes out and says, we don't know what they're talking about. This would totally get blocked for antitrust. We're not going to merge with United. And then they fall back down. Now, my entry was wrong regardless. I was looking for it below 12 because it had gapped up to just over 12 on that news. So even if I had more time horizon on this, it wouldn't be home right now. But I am frustrated because I exited this almost for a total loss on Friday, and my thesis was exactly correct. I was just too tight on my time horizon, too soon on my entry. So sometimes that's the way the cookie crumbles. But and I'm not surprised to hear Americans say that because there was no way this was going to happen.
Right. I mean, right back down to those previous trading levels. I mean, less than what, 24? I mean, the weekend, but less than a 24 to 48 hour trading time span at least. That's super interesting though how they come out and posture that way because it seemed right from the outside some of the points that you made pretty much aligned with pretty much what they said. But it's like, how did that catch so much steam, right? Like when they come out and say that, it's like, okay, checks your box off that you already had there, but it's like, the sky's blue, right? So it's just kind of crazy how it caught so much steam, after them coming out and actually saying what everybody was thinking inside their head or what you were thinking inside your head, right?
Yes.
I don't know. For them to kind of come out like, yo, we didn't know anything. This would never go through. It's like, so what? What kind of conversations were had for this to catch so much steam? I don't know. That doesn't make too much sense to me. But no, I know those ones are always, literally by the bell.
Yeah.
You just barely missed it by the bell.
Just a reminder, sometimes you can just be totally right and do everything right and still get it wrong.
Yeah,
It's the way it works out sometimes. That's what I always say about earnings. It's like you can be totally right about what's going to happen on an earnings call, but will the stock move actually, happen the way you think it will?
Right, absolutely.
With that result. And very often that's not the case. Some other headlines happening today. As I mentioned, AST Space Mobile trading down 8%, a little over 8% now. It was down more on the open. After they paid Jeff Bezos' Blue Origin to put up their 8th satellite. This is ASTS's 8th satellite in orbit. And they put it in the wrong orbit, and it is now lost.
Okay. That's a smidge of a mistake. Wow.
Yeah.
I hope I'm not that intern.
Yeah. I've made mistakes at work before.
Right.
But they don't cost $2.3 billion in market cap.
No. That's not a drop in the bucket at all. So the reaction's been pretty negative so far, right? It looks like we gapped down and we've kind of slid a little bit lower since then.
Yes. AST, they had a goal of putting 45 satellites in space by the end of the year. Now they're
48.
What?
48.
45.
45.
Yes. And now they're probably not going to be able to hit that because they're behind schedule. However, this satellite was covered by insurance. Did you know there was satellite insurance?
Did not know.
I certainly didn't. I guess it's just business insurance at the end of the day.
I'm curious to see what those premiums look like and to see when they need to strike a policy or how many policies they get for that. But got to be a very small private business. I don't even never heard of it.
And I mean, I feel like putting things in space goes wrong all the time. I mean, it has to be pretty high premiums.
It's got to be pretty high. I mean, that can't be cheap technology to reproduce. Not only to reproduce, but to get back up in space. So
yes,
can't imagine.
So, yeah, that's one element of it. Not going to meet their goals for the year anymore. But it is covered by insurance. And moving forward with Blue Origin, they're looking to do like 7 or 8 satellites per launch. This time it was just 1. So this could have been worse. Blue Origin should be able to get this figured out now. But the sucky part for ASTS and sort of why I bring this up and why everybody should maybe beware a little bit is that because of this and because ASTS has a long-standing partnership with Blue Origin, they are now going to be tied to Blue Origin. If a Blue Origin rocket blows up, even if it does not have an ASTS satellite on it, expect this to go down because that would obviously indicate that they might have more failed ASTS launches in the future. So things now need to go well for Blue Origin also, which kind of sucks again for AST because it's not their fault if an unrelated Blue Origin rocket blows up. It's not their fault that they didn't get this satellite into space. They did their part. But that is going to be the situation for AST. I expect there to be some tie in between Blue Origin performance and AST share price.
Yeah, 100%. It's giving me it's giving me almost Elon and SpaceX vibes. It's almost giving me like Tesla and SpaceX vibes a little bit.
Yes, where Tesla doesn't actually have anything to do with SpaceX, but you're just you're buying the man sort of. What's going on, everybody in chat? Brandon, Steve, Jared, good to see all of you. I've never made I lost my rocket ship mistake before, thankfully. Yes, I haven't either. I suppose it's a privilege to be put in the position where you can make an I lost my rocket ship mistake, but I'm happy to have never been in the position to make one to this point.
It's hilarious. It's like these Lambo oil changes, man, so dang expensive.
Yeah, for real. Lastly, we still have Avis Rent-A-Car continuing to rip. We are now
holy moly.
Yes, we are now up nearing the 550 level, well clear of 500. I am so happy I wasn't able to find a way to get short this at like 430 when I was considering doing that last week. It just continues to moon. How much more liquidity could possibly be pumped into this thing? I don't know, but this is incredible.
I think we're in an AI bubble. I mean, good Lord, nobody likes to say it, but everything's ripping to the highs. So something that was also interesting. It's always nice when there's more market participants, right? But I had seen somebody tweet something, and I had seen more friends posting on their Instagram stories, and I was like, holy! I've never seen this many people engaged in the market. Is this another shoe shine boy deal, or has the industry just really expanded that rapidly? I don't know. But then when we look at things like car, we think about oil, we think about the metals, we look at the indices busting to all-time highs. With still uncertainty and no resolutions, I'm like,
it's supposed to be up on Wednesday,
right? And I'm just, and it was almost like last Friday. It was phrased as like, we're Gucci, we're good. So, with that being said, a lot of uncertainty. Car, one of the most irrational moves I've ever seen. It'll be fun to watch to see how it plays out, though.
Yeah, incredible. Still not getting as much national attention as I feel it should.
It keeps catching me off guard every time you pull it back up, right?
This is a GameStop level thing happening with Avis Rent-A-Car, and the only way that this can keep happening to me is if, and I would say wisely so, the shorts that got burned down here are continuing to try to cover all the way up. Is how this seems to me, because obviously at this point, whenever the collapse comes through on this, it's going to be immense. Like I would imagine that the unlimited capital people of the world, the Jane Streets, the Blackstones, etc., have immense short leverage on this right now. But as retail continues to prop this up, and feel free to watch my TikTok about this on the Tasty Live TikTok channel if you would like more information. But the deal here is that 70% of the float is owned by two companies, and then the CEO owns like 90% of the remaining float. I said last week that the CEO owns 90% of the float. That was incorrect. It's that he owns 90% of the tradable float that is non-institutional. So there's actually only 10% of shares floating around in the ether right now. So there's not, short of just buying up every single share in circulation and being short 10% of the company, there's not really a good way that these shorts can do this because there's just not that many shares. It's easy for them to get squeezed out over and over again. So we'll see what happens with this, but the collapse obviously is gonna be big whenever it comes through. It's not GameStop level of real buying, just fake price action. Yes, that's true as well, Agent Pure. Well put. What's going on, Ranch? Good to see you. Chart is gonna start bending backwards. Yeah, we're gonna get the the reverse chart. And then, lastly, Allbirds continues to move. It's holding these levels. This thing, I'm telling you, this is crap, is what this is. This thing is going to go away. I can't believe that it's managed to hold these levels at all. We're still talking about a 500% increase off the lows before they decided to do this AI repositioning thing. BS, I tell you. There is no way. I don't think, and honestly, it might take a little while. It's very possible that they could get a cash infusion from an NVIDIA or somebody giant who wants to, prop up the AI space, get in on the ground floor, all that, and go even higher from these levels. I think that's very much in the realm of possibility. Yeah. My qualm just lies with the fact that these people could not do a shoe company. Mm-hmm. That's the problem. Oh. If Allbirds was this crazy successful, great growth stock shoe company, and then they decide they want to reposition to AI, maybe that's a different story. The executives, the C-level people have shown that they have the ability to grow a company. But this company failed. It is dead. They have $50 million in cash in a dream. Now they're going to get into the most competitive field and expensive field that you can possibly get into in 2026. It just doesn't make any sense.
Yeah, and I think moves like this, once again, adds to my bubble thesis a little bit here, is because the most irrational moves I think we've ever seen on assets are happening right now. I haven't been in the market that long, right? I wasn't trading in 2010, 12, 13, 14, 15, 16, all the way till 17, 18, but I've barely even seen these market cycles. So with my little experience, this seems to be very odd, but with the bird situation and shifting to AI, I almost feel like they have a better, I know it's a little bit of an opposite opinion, but I actually think they have a little bit better of a shot because they did shift. I think they would have been more for sure to go bankrupt if they didn't do anything else. So I think their probability of success has increased a little bit.
Yeah, I think it's increased from 0 to like 2%.
Yeah.
Like, I mean, it's, maybe a little bit higher than that. This definitely increases your chances. Yes, they were going to just die. So doing anything is better than doing nothing, certainly.
I wouldn't even say anything. I think the pivot into AI was pretty strategic. You know what I mean?
Certainly, yes. I mean, they're trying to take advantage of this, emerging industry, but it's a really expensive way to.
I don't know if they're gonna be able
to go about it. I mean, like, you can't try to get in some Lululemon stores or something, man. Like, man, this just doesn't.
Yeah, it's not looking too hot.
Yeah,
I will say that it's not looking too hot.
I don't know. I mean, it's looking very hot, and there's lots of people who made a lot of money on this stock, obviously.
Hot right now, yeah.
But I don't know. I think 2 years down the line, this thing fizzles, even if they get the Nvidia loan.
Yeah.
Yeah. So, and actually, I think that this sets a precedent. Okay, I think if you are Spirit Airlines, why not just pivot into AI? If you are a dying company and you have $50 million or more in cash around, just do this. Why not? I mean,
well, I think that's what I was gonna say. I think it's a little bit of love of the game.
Sure.
Like, those guys might seem like they wanted to be tech bros. Like, it's probably a little bit of the love of the game. Some people might walk away with the bag, and some are like, yo, I'm trying to really make something happen.
They did.
So I don't know. Good Lord, they're definitely betting on themselves, though. So hats off to them.
And Spirit,
if they can do it, there'll be another story later on.
You got a bunch of planes. Those are valuable assets.
Yeah, absolutely.
Sell all those planes and get into GPUs, man, because apparently it'll send your stock through the roof. GameStop would go down announcing AI. I'm not sure. GameStop will be the next to get into the AI infrastructure game. Man, that's actually might not be a bad prediction. They kind of have been trying whatever. They've tried being a crypto treasury and all this different stuff. They also, their CEO, his name escapes me, but he is a tech guy. Like, he built his own tech company and sold it before he moved into the CEO role at GameStop.
Oh, really?
Yeah.
Oh, wow.
It's like a company I've heard of. Somebody tell me in chat. I don't know why it's escaping me. Maybe a payment processor or something, but he is a tech bro. He's the one who decided they wanted to do the crypto treasury thing. Mm-hmm. So yeah, perhaps something there.
Maybe. Hey, new thoughts, new ideas. I'm surprised GameStop is still around. I heard a lot of great things about GameStop 2-3 years ago. They said they're changing their business model, they're doing this. None of that ever fizzled. Everything that had to do with GameStop never panned out. So when it comes down to GameStop, maybe a short squeeze will allow them some run to the upside. But good fundamentals, I don't know about that.
Yes, Ryan Cohen, and thank you, Agent Pro. I was just looking this up as well. Ryan Cohen is the CEO of GameStop, and he did Chewy. So that's not really a tech company, but it's e-commerce.
Okay, so it's
innovative. It's adjacent.
It's more innovative than GaMstop, for sure.
That's for sure. Yes.
So it's a step in the right direction.
Yes, Chewy, and then up into GameStop. So he's willing to take some shots.
Very interesting though. GameStop is an industry where people are very passionate about like video games. It's like niche. Same thing with like Chewy. It's like a pet niche. People love their animals. They'll do anything for them. They will die for the animals. They'll buy whatever. So it's kind of funny how he shifted into another industry that's very kind of niche specific. Different business models, but niche specific.
Yeah, and it's worth noting too that he has a Elon Musk style pay package that is like no salary,
with incentives and everything.
What
you said with incentives and everything?
Yeah, it's like he has no base salary and it's all purely tied to GameStop performance. So he clearly thinks he can do something.
Why would somebody like Elon taking that deal and then him taking that deal is so different? Why would he do that? Is he extremely well off because of his ventures with Chewy? Why he would take that deal?
Well, yes, yeah. He has hundreds of millions of
okay, because like Elon, it's like, of course, the richest man on earth. Of course, he's not going to take a payback. Like, he doesn't need the money. But somebody like Chewy, I'm curious why somebody else would take a deal like that.
Yeah, he's worth $5 billion as of 2026.
Something like.
Yeah,
it's no Elon Musk.
No, but that's
you definitely priced yourself out of whatever you might
get paid money.
Exactly.
So, I mean, you got $5 billion. I mean, how much? What's your passive income? I mean, it says net worth, so it's obviously not all real, but at the same time, it's like I would assume a fair amount of that is cash, because when you sell Chewy, that is a cash.
I'm sure he has his taxes set up really well. Too. He's probably got to have a lot of real estate, writing off a bunch of
He's
stuff.
probably got a CPA that has no other clients.
Facts. Well put.
And it's somebody $200,000 a year.
Well put.
He probably $5 billion. Yeah, I think I'd be okay.
He probably wants to make sure they have no other clients either, right?
Yeah, exactly. But anyway, that's all the big movers for the day. No real activity for me today. I did take off my shortest dated short oil position. Decided that was dead in the water after we failed to have any further recovery. So 88 DTE is my closest expiration now on the short oil. A little too aggressive with that first one, but not the end of the world. Continuing to look for a dip there. If the ceasefire does in fact end on Wednesday, I'm going to be in terrible shape on those, but we'll cross that bridge as it comes. Yeah, I mean, that's sort of it for the excitement. Everything trading just, slightly up or slightly down for me today. Silver shorts have theta coming through. I'm pleased about that, although we are starting to test the danger zone a little bit on silver. Under 75. We got just barely over 75 on Friday. Back down below it now, but when we were down here, I thought that these were a sure thing. Now I'm not so sure, but looking at this objectively right now, this does look like we're chasing lower lows. It looks like we've failed the retest on the highs there. It might continue to move down, but silver obviously not a purely technical thing by any stretch of the imagination. So a little bit fearful.
Yeah.
Yeah. Aside from that, Salesforce looking good, chugging. This one was incredibly high risk at the time that I put it on. Low risk, high reward, but high risk in that it had a very little probability of success. I was able to get a 4-to-1 risk profile because it had about 25% probability of profit. But I pretty much have bottom ticked that, and we seem to be chasing down this 200 level pretty quickly. So 39 DTE, I'm feeling good about those. But that's what I got on my end. You would slaying anything over there?
Not too much today. I mean, a little bit. We can go jump over to the Trading View platform. We were short biased this morning getting into things. Nothing too much. I know we'll actually start off with Micron. Micron has finally been pulling back a little bit here. I assume maybe SNDK, SanDisk, is probably doing something similar because it's looking like this down move is a little bit more significant than from what we've gotten. They've been bought up pretty quickly. So I'm just hoping Micron can actually pull back, somewhere down to these lows. I know we had a gap over here. What was that? Towards the beginning of April. So, I mean, if we can just even pull back within this range, we can take off that out of the money call spread, or at least we can get out of in the money in which we are in right now on Micron. So that's nice. Those are pulling back a little bit there. But no, we were pretty short biased this morning, and the market was pretty difficult. The market was pretty much on hard mode this morning. So we were short biased, looking to get short. We had some pretty tight risk on these trades. Here, we'll go to the 15 second, get a little bit more detailed. And don't worry, guys. I know it's a lot of moving on the screen. Let me just adjust the scaling of this real quick. Don't want to give anybody a headache over there.
Always shift around. Some guy on the radio said silver to 50. Well, let me be some guy on YouTube, and I'll say silver to 50 also.
Hey, once I get my short position on, then I'll also be on there. So silver to 50.
Now, some guy on the radio and two guys on YouTube say silver to 50. It must happen.
No, speaking of silver, we'll circle back around to that here in a minute. But when we had pulled it up, this does look like an area where I'd be a little bit more comfortable getting on some short delta at least. So might be looking at selling some type of out of the money call spread either on gold or silver there. I feel like still horrible at you feel like you're still horrible at trading commodities, or at least they all seem to have their own way of moving around, lack of better words. Absolutely. I would probably piggyback off the same.
They do all
thing that
they
you
do
just
definitely
had.
all have their own way of moving around.
Yeah, most definitely. Gold acts a little bit differently than silver, especially they diverge a lot from the indices and crypto and those kind of things. So all have their own personality. But this morning, the market was pretty much on hard mode. I would say maybe even veteran mode. Good Lord. We were chopping around so much. And sometimes it's quite expected, especially in a time where everybody's expecting something to happen. So since we gapped down, we rallied just beneath that all-time high. It's like, okay, we're going to poke to another all-time high. I mean, we're pretty close. Or is this going to actually be the sell-off? And sometimes whenever we're at that pivotal moment where everybody's playing tug of war with what the market wants to do right here.
Careful with that gesture there.
I got to get out of frame there. Everybody wants to play tug of war. The market can be a little bit choppy. So we were looking to take a couple shorts near our value area low, looking for a directional move to the downside. things were looking pretty well so far. So we sized in a couple contracts at our value area low. And then we got stopped out, you can see here with this wick. And this is a 15-second chart, so you can imagine how quick this pop and drop was. But because that wicked me out of the position, I prefer to manage the risk and re-enter if I need to. I entered a few more contracts right after I got wicked out because, I mean, that was a very quick wick on a 15-second chart. So I re-enter, get short. Things are looking pretty well. We're up a couple $100 down here at these lows, and then we get this reversal. So once we get this reversal and we head back into our level of value, I'm like, you know what? I'm going to be a little bit more hands-off now. This is when I then go and buy a put on QQQ. So whenever we're trying to get surgical here, really trying to scale into some of these positions for that directional move that we're trying to get, if the market is being very difficult, but that directional bias remains, sometimes I'll look to just buy the actual options contract themselves. Usually to buy it because we're looking for a very directional move. Or if you have a larger time frame, then maybe you can look to sell those if you would like. But because of this choppiness and how difficult the price action itself was, I decided just to buy a QQQ put. So we still have that on. That expires in about 7 days. And we're going to use that put to express the trade idea that we have it around this price level here. But that's what we did this morning. And then market ends up selling off later on. Did we do anything else? I believe we just sat on our hands. So we'll watch to see how price responds once again at this value area low, but very difficult day. Nice to finally get a little bit of a pullback. Nice to see the gap down. I know once we got the news over the weekend, we could see that the futures market was opening up about 200 to 300 points lower. Will the market make lower lows? I don't know, but it'll be nice to reposition depending on what happens at around 26,757. But that's pretty much what I had on my plate for the day. It was a tough one. You're short NQ right now, 26,696. Okay, Rumo, you out here putting your money where your mouth is. You put in the actual price where you're short at. Okay, we can all check that out now. 26,696. Oh, you just got about short here. I don't hate that either. I mean, that's about half of the move from the sell-off this morning. And then if we pull up this volume profile, I believe there was a pretty low volume node somewhere around there. So if we take the high and the low, we put the volume profile on the leg of that. Let's go over here. You could find this, and we'll just mark off this here. This low volume node just represents where the market really did not trade any volume and really did not like to spend any time here. So
just on that level right now.
Yeah. So we'll see what happens there for you there, Rumor.
What's going on, E-Media? Good to see you. I just want to know what the orcas are up to. No salmon hats as of late. Grumpy Mike. Late 2024, early 2025 is the last time we saw the orca salmon hats. Need I remind you that shortly after the salmon hat phenomenon in early 2025, Liberation Day happened. So the orcas stay undefeated on giving us bearish signals for the market. But no recent updates.
I totally forget. Why did we bring up orcas again last time?
This is a thing dating back to Bad Trader.
Oh, never mind. I'm not a part of this then.
The orcas.
I'm outside the club right now.
Orcas do this thing where they put dead salmon on their heads and they swim just barely above the water. It's called the orca salmon hat phenomenon.
Okay.
And it's very rarely documented, but like once every decade or so, they do it. And I have put together a thesis that has preceded all of the great market crashes. They did it in 2008. They did it in 81? Is that when the big crash happened in the 80s? But it's like every year that the orcas do the salmon hats, there is some kind of giant market crash. And then it happened early last year, and then we got the Liberation Day sell-off.
Did the orcas, so as of recent, update me now?
But yes, nothing since early 2025.
Okay.
So, and it's rare. It's like a once every 5 to 10 years sort of thing.
Good Lord, I can't believe I almost was out of the loop for that one.
Yeah.
Come on, guys.
When the orcas start wearing the salmon hats, it's problems.
Be curious.
You gotta be short.
All right.
They can feel it. Animals, they have senses for these things like the weather.
I'm picking up what you're putting down. I like it. Let's see.
I'm going to follow the bats into Intel 25 DTE put, looking at 60 strike instead of the 55.
INTC. Yeah. I know you were speaking about Intel, I think, a little bit last week.
Yeah, I had gotten short.
I mean, it's been selling off.
Didn't pan out for me. It's been selling off today, but I was short like into the end of last week and never quite got that drawdown. I had basically the same thesis with Intel and SanDisk and got burnt on both. That's the way the cookie crumbles sometimes, but they're getting long into earnings is what I'm gathering.
Oh, okay.
They sold a put into earnings. So
yeah, the more you know, absolutely. Orcas.
These are important things to remember. Next time the market is crashing, Google recent orca salmon hat sightings and see if there are any.
All right. Lastly, before Josh yells, just taking a quick check at silver, see what silver's been up to. I don't hate a little bit of short delta on in the metals. I know the metals haven't been getting as much love as they were like last month, but I think they're still in play and they still have a lot of range to offer. So I'm going to keep an eye on that silver and gold, and we'll see what we get there. I know last time we were marking it up. We'll circle back around.
Josh is making threats.
What do you say
in the team's chat?
Oh, but I give him this knuckle sandwich. I'm just kidding. No, but with that being said, nothing else top of mind on my end, and we'll see how we pan out for the rest of the week.
Nothing top of mind for me either. Is it? You want to say something, Josh? The floor is yours. Oh my goodness. Okay. Yep. Well, that'll do it for us today. Be sure to stay tuned for Futures Power Hour coming up next. Ariel and I'll be back here tomorrow, same time, same place, 12 o'clock noon Central Standard Time. Thank you so much for watching. We'll see you guys next time.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out tastytrade today. Pay for back testing? No. Pick from hundreds of symbols.
We're back. It's still Monday, April 20th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, the market's dealt with a lot of smoke over the weekend in terms of those headlines, not necessarily seeing fire here today. Maybe a U.S. delegation on its way to Islamabad right now. So we're getting a little bit of a pause here in these markets to start the week.
Yeah, I mean, that's exactly what it is. There's a lot conflicting things to digest back and forth. So, I mean, as always, the next 24 to 48 hours, they're always important. We can have headlines swing us either way.
And the headlines right now, the market is treating them like they're half-baked because you can't really trust what you're seeing there. The sides are going back and forth and flooding the airwaves with different perspectives, if you will. Over the weekend, we saw that a U.S. naval escort interdicted a Iranian cargo ship and ultimately blew a hole in its engine room. So the blockade remains. Iran saying they're not going to participate. But then again, the delegations are on their way to Islamabad. So do you trust the propaganda or do you trust the movement of the people still? I'm going to take the movement of the people there, Thomas, because 20,000 people are on the ground in Islamabad preparing for the second round of those negotiations. We'll find out tomorrow night with the deadline for the ceasefire quickly around the corner, approaching on Wednesday. Thomas, quick little overview. Past 72 hours, traffic through the Strait of Hormuz. Do you notice something here? There's not a lot of things making their way through the Strait of Hormuz right now to the east.
Yeah, I mean, a lot of things turning back right before they get there. I mean, captains are nervous and, there's no clear purview on what's actually being allowed.
There are ships that are trying to make their way to the strait. There are ships that are turning around from the strait. There are ships that are being told they can go through the straits. There are ships that are getting fired on as they're being told they can go through the straits. So it's an absolute mess right now still. The oil market here, for what it's worth, only up around 5.5%, 6% here today. They're off the session highs like stocks. We're seeing that stocks have moved off of the session lows here. We had the gap open lower last night on first call, Thomas. And Ilya and I were surmising, is this going to be another one of those Mondays where we see the market sell off right at the open and then stabilize and continue its way higher? Sure enough, kind of like last Monday where we have our gap open lower, that first hour of the trading week marked the low so far for the trading week. Like last Monday, we continue to proceed higher from there. And this week, after closing at 71.61, we'll call it 71.64 on Friday. We're now back to 71.36. Thomas, volatility is up a little bit more. It's a 48.3 IVR, so we can't dismiss that unto itself right now. Front month volatility, if we go to the VIX, it did jump a little bit at the start of the week, but it's still pinned below 20 here. When you're taking a read of the land right now, as we kick off this new trading week, what is the market telling you about the path of least resistance for stocks? Is it still higher after this historic run?
I mean, I think we're still a market that wants to go up. And I mean, the fact that, you got oil up 5%, ES down like 0.3%. I think a lot of people don't want to miss the move where a ceasefire is actually reached or some kind of breakthrough in the deal. And then we run higher and, you miss the rally. I think it's a resilient market considering, the back and forth on what's happening with the Strait of Hormuz. And, we've talked about this before. The longer things go on, the more impact there is. But so far, the market is digesting that, at least the equity market. And I think that's a bullish signal.
It feels like it's a bit of an inside day here, even though the market's down from Friday's close. But where do we find ourselves trading back above? Still holding that 1 week moving average. The momentum profile in this market has not eroded whatsoever, even with today's pause, if you will. We do see that MACD is still trending higher through its signal line. We can see here that stochastics are still overbought right now. Since the close on March 31st, for the entirety of the month of April, the S&P 500 has been able to sustain a daily close north of that 1 week moving average, and that is thus far the case today. So if we talk about the character of this market move right now, the short-term momentum, for better or for worse, seems like it's still in effect, that those dip buyers are still out in force trying to pick the pieces and chase this to the upside.
Yeah, I'm still in my MES call spread, long call spread. I'm I'm keeping that on. It hasn't done too much so far, but I'm going to stay in it. If we get an upside break, it'll be a nice little payoff. I'll get out of it. I'm not fully committing here, and I think that staying small or staying balanced is the right thing to do right here. We're also going into earnings now, so that's going to be, the market is going to have to weigh earnings against, if this conflict stays the same, if it escalates. So, another factor to consider there.
Thomas, I think the shape of the vol curve here, even with today's move, that it offers an interesting, or at least useful look at market psychology here. So we still see that upward sloping term structure right now. Spot volatility below front month, which is below the next month. In plain terms, the market's pricing more uncertainty over time than in the immediate future, which is normal. It's a sign of caution because you need additional compensation as more time goes on, right? It's easy to predict what's going to happen in the next second, but to say where you're going to be a year from now, 5 years from now, it's a taller tale. I think if the market was embracing or at least looking for a near-term shock, we would have seen front-end volatility move more than we did today. It's why I call these headlines half-baked. The volatility doesn't want to get much higher right now. It almost feels like the market's looking for a reason to keep stocks pointed higher in the very short term. So it almost feels like normal functioning again. I don't want to say that we're in low volatility, buy the dip, mindless float to the upside. But then again, what do we see here today? Positive technical momentum. We see low volume, 951,000 contracts traded by this time of day. That's the lowest that we've seen here in several weeks on the show. I would have to think going back to early March. So low volume, volatility, sticking below 20 in VIX, holding above the breakout level. We tried to break below it, below 70.96, the January 28th former all-time high. We're holding it right now. Bears just, you're calling a top if you're fading this right now. And it's a difficult endeavor as long as the market structure persists in its current state.
Yeah, it's hard. I mean, low volume, one day I'm not taking much of that. Volume starts to decline. I would kind of equate that with slightly lower conviction, perhaps, in this market. People more sitting on their hands.
People are sitting on their hands, although the rotation today is picking up nicely. The Russell's up by 0.32% right now, Thomas, 27.97. That's getting close to taking out its high that we just saw on Friday. Overall for the market, looking at the sectors that we track here, 26 sectors that we track on Futures Power Hour, I'm counting 10 that are red and 16 that are in the green at this present time. Led higher by home construction, home builders, which is an interesting little twist here, considering that oil prices are up and it's not exactly like rates are going anywhere fast. Notes are actually down on the day, so you are getting higher yields. Do you read into anything about the shape of this sector rotation today? I see telecom is up, retail's up on the downside. XLK is off by 0.2, semiconductors off by 0.5%, XLY consumer discretionary off by 0.75. Churn?
I mean, yeah, it looks like there's some rotation. Maybe it's like slightly defensive the way I look at it, but if we were making new highs, it wasn't an inside day. You'd expect to see technology leading, SMH up. It's not happening right here, but with the headlines, we're waiting for the last phase of negotiations. The ceasefire deadline is coming up. There's a bigger question of what's going to happen in the next 48 hours than there was last week, where we still had, a week until the ceasefire.
There is another ramp up of escalation, right? I mean, that's clear. We had that before the ceasefire was announced. Civilization annihilation was on the menu at the end of March, and obviously that didn't transpire. Trump used the next weekend to, obviously, last weekend, I should say, to institute the blockade, which seems to have brought some folks to the table. Maybe not, given the weekend news. Thomas, I'm curious, in terms of interpreting the news that's coming out of Iran right now, I felt like it was pretty instructive for like who we should be paying attention to and who we should be ignoring. You had Aragachi and Galibaf, the foreign minister and the speaker of the Iranian parliament, respectively, last week talking about how the Strait of Hormuz was reopened. The IRGC seems to have different machinations right now. Is there, the longer this goes on, is the U.S. playing Iran potentially to a stalemate where their internal divisions grow such that they can no longer have a unified front to sustain the war? I'm trying to wrap my head around why the market, again, after this weekend, doesn't seem to care.
I mean, I think you really have to be an expert in, Iranian politics to know the inner struggle of what's happening.
Fair enough. I don't think that's either you or me here. We're not going to be this kind of tourists.
From what I've read from a couple of people, the longer this goes on, the more the IRGC, the hardliners, the more room or advantage they have in kind of controlling. So the longer it's a military conflict, the more leverage the IRGC is going to gain in the internal politics. Whether that's true or not, I don't know. And there's so much noise. You're right. Who to follow, who to listen to, who does the market listen to? Something comes out a little later. It turns out that's not true. So trading these headlines, it's hard, and at the end of the day, you got to take what the market gives you, and you got to do the best you can with it.
I'm looking at some of these names that are fighting back here today, Thomas. XRT trying to reclaim the uptrend from the April and November 2025 lows. That's interesting. We went over to ITB earlier, but you can see how there's a little bit more room to chop, perhaps. Although if we were to take those same April and November swing lows, we're back in there again today. So I'm not going to suggest necessarily that all is done, all is well here, and we're going to go back to where we were prior to the war. But there is, we have to give deference to the fact that many of these trends that carried some of the sectors higher over the course of 2025, those beaten down sectors have started to reclaim those trends in the span of this rally here in recent weeks. Some have done better than others. XTL, for example, the telecoms never lost their trend. They're just accelerating, pushing ever higher into new highs. And it feels like, we could see we never got close to touching our April to November trend. But however we want to look at this right now, Thomas, you're beginning to see more, you're starting to see the signs of a little bit more participation come together, which, yes, the financials are joining the leadership group. Yes, it's been semis. However, the number of stocks setting 52-week highs over the course of this rally has been lacking, to say the least. Less than 15% of stocks in the S&P 500 have set new 52-week highs with last Friday's close. So while the leadership group is broadening out, it's not necessarily a huge number of stocks that are participating right now. And so just going over to something like RSP, for example, the equal weighted S&P 500, it has not scaled its all-time highs just yet. It is still struggling there, although to its credit, it too has retained the uptrend from the April and November 2025 lows.
Yeah, and I mean, I wouldn't expect to see the breadth really increase too much until we get, some kind of resolution. So I think this is still a market where you can pick, where you have to pick where you want to be. And of course, all this is going to be, some of it's influenced more by energy than others, some by risk sentiment than others. So it's really, there's a lot to dissect. And, I'm trying to look at places where I want to, maybe find more volatility. Like, I'm always looking at IGV. I haven't put on a trade there, but I was thinking about a short put spread at 80.75. It's a 4-to-1 with a 71% POP. I'm trying to pick more places where things have been kind of being down, but they're found a bottom perhaps. And maybe if it ends, you get a lot more upside. If it continues to go on, maybe you just get more consolidation. It's already beat down.
Playing the short covering. I mean, it's worked. We've seen that over the past week and a half still. Momentum names are running to the upside, as it were. And then you're looking at the unprofitable part of the Russell 2000. And over the course of the past week, the Russell 2000 has seen the unprofitable companies outperform the profitable companies by more than 300 basis points. So folks are in the process maybe of buying some stuff. Pigs fly, maybe, Thomas. But there's just the technical momentum here is too strong to try to short again. You're seeing it in the Russell, the 1 week above the 1 month, which is above the 50, stochastics MACD, where you want them to be. Volatilities come in. Same thing for the NASDAQ here. It's a little bit of a weaker day today. Inside day, though, and we're up from the open, digesting the news that we had over the weekend. I feel like bears just, obviously the moment's been lost. It was lost last week, so that hasn't changed at all.
Yeah.
But what are you doing here right now? Again, we're back into this territory where how do you measure resistance? Are we looking to an all-time high anymore? No, we've broken them. So where do you keep your risk to? If you're trying to call a top, we're trying to say this thing has gone too far too fast. Technically, today will be a day that breaks that trend, Thomas, but it's going to be another day where we close higher than we opened and we're still above our 1 week moving average. So, are you feeling lucky? Is that really what you want to do? Is that a good trade? 52.5 IVR, you're going to buy some out of the money puts in order to express that view. And if we break through last Friday's high, you close them out. I mean, what else do you have going for you right there? I don't know any other way to approach this, and that seems to be not the optimal use of capital given the trend.
Yeah, and between picking a top and picking a bottom, I'm more comfortable. I don't like doing either, but I'm more comfortable picking a bottom just through the nature that the stock market always goes up essentially if you give yourself a long enough time frame. So I think the path of least resistance in the long term is always to the upside. And when do you short something where you don't have notable resistance? I mean, it's almost like you got to do that on a vibe, So it's a little dangerous, especially because there's headline risk too. You get a good headline, market goes up more.
So interesting that you say that. This morning for our Trading Trends interview, I had a chance to sit down with Sven Carlin, who's a value investor based over in Europe. And we were basically talking about this exact problem. If given the structure of the market, what happens if this thing moves into the background? And he points out that given 401ks and passive buying and institutional flow and pensions and this, that, the other thing, right now, if all else considered, the market's probably going to get inflows that could help support at least a 10% move to the upside this year. And that's just passive, right? And I know Elliot complains about this a lot too as a bear, where if you're going to be a bear, you have to be very episodic about it. You cannot do it on a sustained basis because there's this underlying draft higher in the market to keep things elevated unless you're in a recession. And we're just plainly not in a recession right now. We may have inflation coming down the pipeline. That seems like that's fully baked in right now. But in terms of recession, much more difficult story to sell, particularly when you look at growth trackers still giving you 1.5 to 2.5% growth for 2Q.
Yeah, I mean, you have to consider when you're looking at the market, it's easy to get caught up in looking at it as a trader only and assuming the market's going to behave like, there's only traders influencing it. There's only speculators. If you go out in time, especially, you have to consider there's long-term investors, there's pension funds, 401ks. I mean, all these different groups of participants that have different philosophies and make decisions based on different assumptions, different information, and philosophy.
I'm not sure there's much more we can cover here. It's an inside day. The market's still up. It retains its positive technical drift. Volatility has jumped a little bit here, VXK up to 2075. Although, given where we closed, what was it, last Monday, thinking about the ceasefire announcement, Thomas, 2071. Is the market really convinced that this thing is about to go head over heels into a ravine and the war is going to escalate again dramatically? I don't think so. And until proven otherwise, I see this Wednesday deadline, Thomas. I don't think we're going to get to that deadline without it being shifted again.
Yeah, and at the onset of the war, it was at very first, the assumption was that Iran wouldn't be attacking all these Gulf states. It was assumed that their government cost benefit analysis, they wouldn't do some of the things they did. So I think that is still in play there, and the market's kind of not paying attention to that much. But if we go back to where we escalate, there is Iran still has options to really escalate this, as does the U.S. But things are fragile right now. But it's still a market where it's the trend is higher, the technicals are strong, people are optimistic. So there's bullishness with a caveat of anything can kind of happen right here.
You say don't assume. I'm reminded of Michael Clark Duncan's character in the movie Slam and Salmon. Slam and Salmon's a terrible movie. It's made by the same guys who made Beer Fest and Club Dread and the Dukes. Okay. Super Troopers is great. And Beer Fest is pretty good. But Slam and Salmon is just, it's not of this direct to DVD kind of thing. But Michael Clark Duncan in the movie says, you know what it means to assume. When you assume, you make an ass out of yourself. Right. So assuming that Iran wouldn't attack the Gulf states, it can't believe that they shut down the strait. Oh my goodness. Well, if we knew they were going to shut down the strait, how come we didn't blockade it right away? Like, why would we let them just shut down the strait? We should have just blockaded it right away. Thomas, I'm not going to try to make sense of it. Rates pinned, bond vol in, nothing doing here in the long end of the curve. Again, notes get back to a 20 IVR. Last week, we were between a 14 and a 23 on Friday into the close. Today, we're between an 18 and a 24 and dead set in the midpoint of that range. Much like last week, stuck to the 50-day. Can't really move from there. You go over to ZB. We had that bounce higher into the 50-day, and then we got rejected. Well, we're a little bit higher today. It's another inside day. Thomas, it feels like these are springs that are coiling, or they are flatlining charts. Make the case that this is a spring that's about to unfurl, because I see a lot of ping-ponging between like the 1 month and the 50-day here in a market that's kind of getting trapped into a corner.
I mean, for rates to really make another big leg down, I think the energy pressure needs to come off. And for the energy pressure to come off, the war kind of has to cool down a lot, So I think the top side in ZB, ZN is a bit limited unless there's some kind of breakthrough in the negotiations, right? Kevin Warsh, he's saying things in his confirmation hearing, and the market is not really able to act on it, right? They're paying attention. People that, they're watching. They're just not able to really act on what he's saying because there's factors that are holding bonds back and energy prices, things like that. I'm not trading bonds right now. This looks more and more to me like, you can do an iron condor, but I'd want volatility to be higher to really make a good trade with that. So I'm just not really seeing too much for myself that I want to trade here. I'm watching the charts, but that's about it.
Maybe we get a catalyst this week. 20-year bond auction is on Wednesday. We have a 5-year TIPS auction on Thursday. I don't think that's going to move the needle. Next week, we're going to have 2s and 5s due up. We'll also have 2-year floating rate notes and 7-year notes. It's a few more weeks, Thomas. 1, 2, 3 more weeks until we actually get to the auctions that we really care about. The 3s, the 10s, and the 30s. But the 20-year along the way is a nice consolation prize for this Wednesday. It's a week, of course, when we think about the long end of the curve and rates, we're not going to get much from the Fed. Fed is in their communications blackout window right now, so anything that they say publicly cannot be related to monetary policy. It can't be about the economy. It can't be used to infer anything about what they would do next week, so don't expect any remarks from Powell if he goes public. He won't be talking about inflation or the jobs rate. And so that kind of leaves us adrift right now, where we need the macro catalyst to get us going here again, but the Fed can't provide it. We don't have the data due out over the coming days, Thomas, to provide that catalyst for the long end of the curve either. I'm looking at the next 7 days here. Top US data due out. PMIs on the 23rd. I'll let Ilya make that case, but I just don't see much of anything that could push this around besides a reaction to what's happening with the Iran war. Maybe we talk about the tariff refunds and what that does for treasury supply, but even so, I don't see many people looking at that as a catalyst, and the market's not thinking that's going to be a huge issue. Dead in the water right now. If we get moving through 115, long, if not. Yeah.
Don't you love how the tariffs, it was like this big talking point all the time last year, and now it's just like, who cares?
Yeah, what's the big deal? I mean, the tariffs are probably going to go back into place, over the coming weeks. I've seen that there's some talk about how if the administration sees the courts remove them under a certain section, then they'll go back and they'll get reinstated under a different one. I suppose that makes sense, Thomas. This was a really interesting chart that I came across from Scott Lincecum over at the Cato Institute. It was from The Economist, but he tweeted this out in recent days. It was U.S. manufacturers PMI survey comments about tariff sentiment. For some reason, when people are talking about tariffs, they're really negative about them. The folks whose companies are the ones that are reshoring and redomiciling everything. They don't think it's been a rousing success, so to speak. So, I mean, maybe we get past the Iran war, Thomas, and Trump needs a new object of fixation.
Cuba.
Tariffs on America's 250th birthday, less than 3 months from now. Why not? Sounds good.
Yeah.
Sounds great. Yeah, I'm with you. I'm looking at this right now, and if you're going to get a rally, you're playing for recession. I feel like that's it. And just the data is not supportive of one transpiring here soon. Doesn't look like it.
No.
All right, well, we move on. We go over to the metals, which the metals here today shows, well, actually, we'll go to oil first. We're switching this up again here, Thomas. Let's go to oil first. Oil is higher, but off the highs. Coming in a little bit here right now. It got that nice burst higher over the weekend. We can go to we'll go to the hourly chart just to draw this point, but here we have our close on Friday, 84. We open up at 88.15. We're currently at 87.53. So market gap open higher, moving in over the course of the session, not substantially. Of course, we're waiting on these headlines related to the Middle East. JD Vance and a delegation are headed over to Islamabad. So even though there are ships being blown up in the Strait of Hormuz right now, Thomas, the market, of course, is forward-looking. And if we're angling towards a world where those kind of events won't occur anymore, then we need not be worried about them in the rearview mirror. What do you do here? Last week was a rough end to the week for oil. It did bounce back. Are you still of the mindset where if you want to have long deltas, it's better to be short puts than long calls? Or are you taking a different tact in oil now as we embark upon this third week of April?
No, I still think selling put spreads is the thing to do. I mean, we talked about it last week where there's a couple things that could put somewhat of a floor under oil. The U.S., other countries still need to release barrels out of their SPRs. There's damaged refineries, there's damaged oil infrastructure, and just the time it takes for these large tankers to transit and then get back to their destinations. It's just a market where I'm selling short puts. I'm short two put spreads in the 24-day outs. We're going to be closing those soon. I'm short a put spread in 57 days out at 76.5. And Friday, it was like, oh, these are getting a little, you're getting a little nervous about them, but then
Only a
right
little.
away, one headline is all it takes, and we're back up, So I still like it, selling the put spreads there. I'm going to close these 24 days out and add a couple more probably in the 57 days out.
I hear you. I mean, I'm looking at mine right now, and I have two at 77, 79. And right now, even though we're sitting above those strikes, it wouldn't work out so hot for me if I were to close them here. But I do have a bunch of short calls as well. So kind of playing this both sides. Are we getting back to 150? I don't think so. I don't feel too uneasy about making an adjustment there. Same thing here for the short call spread at 111, 113. I unless this thing goes off the rails the next few days and folks stop talking, I like being short call spreads above 104, the cycle highs that we had in CLM6 here, 104.34. I think we could have the best of both worlds, Thomas. We are just off of our 50-day moving average. This is where the market closed above on Friday in the CLM6 contract and has since bounced. It still looks very much potential for a head and shoulders pattern here, right? Very clean left shoulders, head, a lower right shoulder, a very clear neckline. If this thing breaks, you're talking about a move 101 down to 84, $17. I don't know if we're going to be playing for a move down to $67. But it does bring in a technical overhang where all of a sudden a return back down towards the pre-war lows, depending upon the contract you're looking at, doesn't become an unreasonable view to express. I know that we're thinking that this market stays elevated for longer because of the supply problems, but technically then it just becomes a market where the momentum is pointed lower. So taking that into consideration, Thomas, that would be all the more reason. I wouldn't necessarily be looking to play for a move down to 65, 66, 67 in oil. But if we started to see one of these necklines break in like CLM6, it gives me greater confidence that we can start scaling more into short call spreads here and be a little bit more patient as the market comes in to look to sell some short put spreads back under the pre-war lows near 63, 64. I would much rather sell those put spreads if we're trading at like 80 or 75 than we're up here at 67 right now, purely because of the risk to reward. You mentioned 57 days to expiration. So if we were to go under the pre-war levels, 64, 63, just a buck wide, I'm not in the business of risking more than 10 to make one. So it's just not really appropriate to do unless you want to pick up pennies in front of the steamroller right now. Maybe we get that headline out of Islamabad that leads to another one of these flushes in the market, that a tentative ceasefire has been agreed upon, extended. A peace deal is starting to come together. They're going to meet again in 2 weeks, right? Oil is going to start to leak out a little bit more. So if I'm playing this long delta still, which I am, and I'm also playing short deltas, but predominantly long deltas here, it's not vis-a-vis calls. It's short put spreads around swing levels in the market that have been proved to be important before. And this one, more recent one from March 10th, is closer between 73 and 74 right now, which is why I'm looking out here at CLM6. I'm trying to keep some risk on the other side of there. And on dips, I'm looking to sell puts down there right now. But timing is important. Friday, when we were below 80, 61, 63, reasonable to sell. Now that we're back to 86, 87, not so much.
Yeah, you definitely want to wait until there's a dip if you're selling the put spreads. And we're seeing like a 5%, 6% swing. That's if you go from Friday, a lot of this is just geopolitical premium that's being pumped back in. The talks aren't going as great. The Strait of Hormuz blocked. That's kind of a physical thing, but it's still a war headline. So wait for the dips if you're selling the put spreads, because you could get a better position. And there is somewhere, it's hard to say where, but there is some type of floor at some price from pre-war levels. Maybe it's like $4 or $5 above it. Maybe it's more, maybe it's a little less. But I'm pretty confident trading it that there's some kind of lasting premium that's going to take time to get out of the market. So yeah, today I won't be putting on those new put spreads, but the next dip we get, I'll probably be doing that.
The that steep backwardation that we were looking at, Thomas, when it was $15 a few weeks ago, it's obviously disappeared here. It's 87 now, down to 83. So just under, we'll call it what, $3.50 at this point in time. That's still fairly elevated, right? But it's a lot more reasonable right now. And I think, again, as we watch the shape of the oil futures curve here, it speaks to the degree of fear that's in the market. If this thing completely flattens back out and the U.S. still has 2-3 carrier strike groups sitting in the Gulf, then what are we doing here? That's going to be ridiculous. Right now, the market can't go back to a normal sort of looking curve, as it were, as long as we have this threat remaining. But Thomas, the market's clearly signaling to you that we're no longer expecting this supply shock to reverberate or have a significant tail here moving forward. At some point soon, we're going to see a reopening of the Strait of Hormuz as the market's priced. And while the destruction to infrastructure and maybe insurers aren't willing to get some ships going through the region, it keeps supply tight through the end of the year. It's also not going to lead to substantial demand destruction. So watching the CLZ6 contract throughout all of this in recent weeks, this is a market that is still holding up very nicely. It's still sitting at 74. The market clearly not wanting to take a dip below 70, it seems, despite all the news. Pre-war levels, Thomas, you're talking about a market that's trading down closer to 61, 62. If we can get any sort of pullback here and we can get some longer dated short puts underneath the Iran war pre-lows, or hell, the yearly lows, I think that's going to be a terrific opportunity to take advantage of. But patience while we're here, because that's 20 odd bucks away and there's still much more wood to chop. If this thing starts going higher, all of a sudden 76, 78, you look at this pattern in CLZ6 like a bull flag, and maybe, again, reinforces when you should start operating in that contract cycle, which is well beyond the typical 45 and 21 out. But we have to take advantage of opportunity where we see it. And the shape of the oil futures curve should not be dismissed or ignored while we're dealing with these issues.
Yeah, I think that'd be a great trade if you could get under the pre-war lows on a big dip. Then that'd be great.
Under the pre-war lows here, just a point of emphasis, we could go 53, 52. Again, some of these risking 9 to make 1, 10 to make 1. Yearly low is going to be under 55. So, I mean, if we wanted to do this, 54, 56, you're starting to get closer. 7 to 1 still, Thomas. Not great. But pull back, keep it on the watch list. I have a watch list of things here if we get to extremes. Some of the longer dated stuff I want to put some capital into and then just kind of set it and forget it and check back in like a month or two to see how it's doing. And with that much time, if it's 200 odd days to expiration on an idea like that, you can build into it over time. I just don't want to do that starting today when these are 10 delta. I'd rather do that when they're like 20 delta, 25 delta.
Yeah, because oil going under 54, that probably means recession. So you're playing, trade where you're not expecting that.
No, if oil goes under 54 in the Z6 contract, then we have a much bigger problem on our hands for many other assets as well. Can imagine bonds aren't going to be stuck in the mud anymore if oil's crashing like that. Thomas, natural gas, it hasn't been something that I've been trading here recently. I've been avoiding it. I know last week you were starting to look at some short put spreads down here as we were maybe turning the corner, getting out of the immediate thrust lower in April. We'd seen a previous pivot low and we started to poke back above there. Did you end up putting on those short put spreads? If so, how are you managing them? If not, what made you change your mind?
I didn't put on those short put spreads just yet. I'm still interested in it. We got pretty low, 2.5, right around there. That's the lowest for a while. We've been in a sustained downtrend. Spring going into summer, weather's been very, very conducive to beating down these prices.
Not here today.
I would be in this trade already, but the IV rank, 12 it's not giving us anything great to work with, you know, and I think it would be a really nice trade if you had a 50, 60, 70 IVR right now. Yeah, it's just it's nothing, you know. And you trade natural gas partly because it gives you that great vol, right? That's not here, so why? I'm not in a rush to trade it right now.
There is this a Widowmaker trade that we're getting around the corner to, Thomas. You know, we just got through the March, actually not getting through it. We are through it. The March-April spread in these futures. I know that the idea here is to take advantage of potential shifts in seasonal demand as we flip from the drawdown months to the inventory build months right now. This is you know, as you make your way through March, April, May, historically, this has been the time of year that when there are natural gas traders that blow up, this is usually when it occurs. I'm thinking of Brian Hunter over at Amaranth almost 20 years ago when he was martingaling into natural gas futures. Literally like, oh, I was long and lost money. Let's go the other way, double down the other way. We can make our money back. Lost over $6 billion martingaling around natural gas futures. Are there periods of time, just generally speaking, just taking a step back here, are there periods of time when you're looking at these energy products or commodity products that are more cyclical in nature for demand? Wheat, corn, the soft ags, they obviously have a sowing season and a harvest season. Do you pay attention to any of the stuff like that?
Yeah, I mean that's why you trade the Widowmaker. It's the you know, you're going from winter to the spring. I think they call it the shoulder season, but there's seasonality into these products based on supply and demand. And for natural gas, it's the demand portion is the weather changes through the year. Grains, the supply changes through the year. In autumn, you get corn supply coming onto the market, you know. So for things like lean hogs, live cattle, it's, you know, barbecue season. You start getting seasonal strength right now as all the farms and ranches start butchering more to meet that demand. So you're trying to play the misallocations between that supply and demand. The market, you know, sometimes does a good job balancing that. Other times you can take advantage of it.
So we got through the winter spread. I mean, just generally speaking, the idea there is that people are like, oh, I'm going to buy March when inventories are running low. I'm going to sell April. The spread's going to widen out. I could take advantage of that. You get hit hard. Like, let's say the winter is warmer than expected. Then your front month contract isn't going to run to the upside and you're not going to have the spread blowout and you're going to get hit. Or what if on the other end, you start to see that supplies are going to be drawn down longer than anticipated. So then the summer contract starts to rise because the cold weather, the forecast ahead, it's going to be 6 more weeks of winter and blah, blah, blah. I personally don't trade the Widowmaker spreads. There are 2 during the year. I suppose you could be long the winter strip, short the summer strip. That's the one that we just went through March, April. You could also go the other way where you're long the summer strip and short the winter strip because of what's happening with storage coming out of the summer months. And that's what you do in the fall. But right now, I mean, natural gas, 12.8 IVR. We have spent far too much time talking about a product with a 12.8 IVR here today and something that neither of us are trading. Let's talk about these metals then, which seem to still be hinging on this liquidity perception in the market with the news that the blockade would continue over the weekend and potential re-escalation between the US and Iran. Oil jumps out of the gate here and gold and silver take a step back. They're off their lows for what it's worth. And you can see this here again, another Monday, gap open lower, wash out below the end of last week lows. We've bounced back. We've covered the gap and we've now started to edge higher, 48.35 here in GC. Silver a little bit weaker, down 2.34%. Thomas, both of these charts look similar to me. Markets that are going up 2 steps, down 1, up 2, down 1, up 2, down 1. And here we are. We just burst higher the other day. And now we pull back in and we're setting a higher low once more. Is this an opportunity for folks to get long? We had a pullback here after breaking out. Is there a chance to get on the train before it leaves the station again to the upside? Because after all, if we have a ceasefire on Wednesday that's expiring and definitely not being kicked down the road, given how gold and silver have traded around those news, wouldn't that theoretically be good for them?
Theoretically good if the ceasefire breaks down.
oh no, if the ceasefire gets kicked out, like Trump saying it's not going to get extended past Wednesday, I don't think anyone believes that.
Yeah, I mean, silver looks like a nice long. I mean, you're right. It's kind of it's trending. It's taking 2 steps forward, 1 step back. So selling the put spread on the 1 step back is probably a good move. I've been looking more and more. I haven't traded silver or gold throughout this whole entire war. I'm starting to think more and more I should get a little long exposure in either one. I don't really care which one it is, just wherever I can find the better trade. Similar IVRs. Gold sometimes a little easier to get in and out of. I don't know. I do like the silver chart, a little more of the back and forth within the trend. Gold looking like it's kind of maybe rounding out a top, but it's still above its EMAs. I'm probably going to get long 1 this week in a small way. But, gold's
Silver looks
still
better than
having,
gold.
yeah, gold's still having trouble really gaining momentum.
It's been trapped amongst these moving averages in recent sessions. We talk about MACD. That's a moving average convergence divergence indicator. You can see it pinned near its signal line. It's because there's no divergence among the moving averages right now. 48.29 is the 5, 47.95 is the 21, 48.23 is the 50. So they're not in sequential order. They are tangled up right now. Stochastics haven't gone anywhere, but they're not exactly falling out of overbought territory. So a lifeless market, still not able to get through the trend line from October, November, struggling at the 50-day. If this thing goes up, it's going to go up on its own terms. But right now, traders haven't been able to push it through the key levels, or they're not ready to commit. Silver, on the other hand, Thomas, you've made mention of the fact that silver may see constrained supply moving forward because of various issues around some of the various inputs that make their way through the Middle East into Asia as it pertains to the copper smelting. And of course, this process by which you're liberating copper from its ore, likewise, is how you get silver. And so if you're diminishing your copper refining, then chances are silver supply could be hit as well. I think that's really compelling right now. But I'm looking at these 2 charts. I see silver comfortably through a horizontal line of support and resistance over recent weeks. I don't see it there for gold. Like you, I have not placed a trade in silver in months, not since the end of January, when I got caught in my last chain in the trade of long silver calls when it blew up. I still have, it's going to expire worthless this week. It's nice to have on the, just keep going. Just keep going. Are we still here? That's what's the point. 117, 118 expire. That's not happening. So we go over to 36 days, Thomas. I think maybe even a little bit longer in the SIN6 contract here. We can look for just the highs that we had last week. High last week in SIN6 is 83, 83 and a half. Playing into there, let's just go on the other side of it and move up towards $84 wide in SI. 2.5 to make 1. I have a feeling, though, if we're going to get movement on this potential peace deal this week, Thomas, or a ceasefire announcement, maybe something shorter duration with a little bit more convexity would be worth looking at. I'm looking at the 84, 85 potentially. 7 days to expiration, risking 5.5 to make 1, or excuse me, risking 1 to make 5.5 isn't a terrible set of circumstances here. The sweet spot, however, may be the 36 days where we go to 85, 86, 2.5 to 1, perhaps. There are many different ways to skin this cat right now. Silver just looks like a better chart here than gold. I'm going to have to break this down with Ilya later today on overtime, but this feels like the better long. And if we do get a pop coming out of any sort of kick the can down the road announcement, last week's highs look like an easy thing to reach for with a decent risk to reward setup right now if you want to be a bull.
Yeah, playing for ceasefire to go well, that kind of angle. Yeah, I'm gonna look at something after this. I'm not sure if I'll get in. If I find something I like, I will. I'm not dying to get into the trade, so we'll see.
83, 84, maybe 45. No, 45. SLV might be the better product to do this in. Before we turn the page, Mr. Westwater, I don't want to say you've got some splaining to do here in copper because you've had a really nice run here in copper. But copper hasn't advanced recently. It ran into the highs that we saw at the end of February, and it's been pinned here. I know that you've been looking at various iterations of short put spreads as this market has been moving up, and you've been rolling the short put spreads up. What's your new approach right now to this market? Stay the same course or make adjustments given the lack of follow through to the top side?
Yeah, I don't have a new approach. I did try to roll last week in 36 days, so I'm not, I don't need to roll it yet, but I'm in the short put spread 557, 56, and I want to roll out to the 66 day. I still think it's going to stay above like 5.9, maybe 6, but I'm not seeing it endangered technically here. I don't think we're going to get a big pullback necessarily. I'll still roll this. I think I'm going to stay in it with the short put spread.
I think that's reasonable. Bottom left to top right here over the past several weeks. Looking at this 4-hour chart, we've run into resistance, sure, okay, but it's after a strong run. So seeing folks who are trapped at the former highs now use this as exit liquidity to get out, not a surprise. What may be more surprising is the fact that this thing has just moved sideways here. It really has not given up its rally, and the broader uptrend remains in place. So Thomas, I'm with you. I see CPR here with its 31 IVR though, so trying to find the equivalent appealing strikes in CHG K6. Recent swing level that we have here on the charts where the market you could see gapped open through last Monday, it's roughly 585, 586. It also means if we hold 585, 586, Thomas, over the next few weeks, chances are that we're holding the rebound bounce, okay, here in copper. I'm looking at where this chart goes. That's not that far into the future. We can go to 36 days here and maybe play for something shorter term. We can go into the 5.8, 5.8, 5.75. This is directly a 3-to-1, right on the nose for what it's worth. 62% probability of profit, risking 3 to make 1. Thomas, I like that for now. I'm going to join you in this trade. It's not the greatest risk to reward. I'm not thrilled with the amount of buying power it's using relative to the profit potential, but it is something to get going here. Dollar mixed at best as we wind down the show. US dollar here in the futures market, you could see the only thing it is up against is the Japanese yen. That's down 0.17%. Otherwise, Thomas, this is part of the reason why I'm having trouble getting worked up about this move and this weakness in stocks on this Monday. The dollar is the liquidity gauge. It is still the world's reserve currency, despite others' best efforts to not have it be the world's reserve currency. It still fulfills that role. And so today it gets its bounce open higher. It puts in a bearish piercing candle of sorts. It's now below where we closed on Friday, despite the gap open higher. We're back below the 1-week moving average. So stocks have bounced from their 5. Silver's holding up at its 5. Oil is trying to get back off of its 50. I mean, the dollar's not turning the corner. The weekend news wasn't great, Thomas, but all it's been today is another Monday where traders have been conditioned. If you see a gap that's negative on a Monday, you fade it. If you get long dollars going into the weekend, sell them on Monday. Do you see any astounding opportunity here outside from that glaring 100 IVR in the British pound?
Yeah, I mean, the pound's what I've been looking at. Big move from the lows. I mean, I guess not that big, but it's, I still want to get long. It's had a nice run. It's let off some steam. I think, here's a decent place to get long. Probably should have this morning. If you're
shoulda,
doing
woulda,
something
coulda.
like a short put spread. Yeah.
Yeah. You could see here, I'm just going to look at this on the daily for a quick second, Thomas. Let's go. Let's go to the weekly chart. Okay. Weekly chart here off the lows that we had in 2022, the British pound. This is why this is such an important chart. The broader thrust of the British pound off the 2022 lows remains intact. And that seems like a long time ago, but when we go back to our daily chart here, the downtrend that we've seen more recently has likewise been broken. So if we were expecting that there's going to be a big multi-year breakdown in the pound below 130, I think you have to cross it off your bingo card. Instead, Thomas, you talk about recent swing levels, 131.5 up to about 138.5. That's 300, 400 points in either direction from where we sit right now. And if we were to look out to those strikes, where would we find ourselves? The one standard deviation move right around there. One standard deviation move yielding a little bit better than a 4-to-1, worse than a 3-to-1 risk to reward. Almost a 5-to-1 actually at this point in time. So perhaps some strike tinkering is warranted. But even so, if you pull up those short strikes on the short put spread side, you can get closer to that 3-to-1 if you're just inside the low. Again, we talk about the low here being 131.50 or so. You're going to have to come right inside to 132. Sell the upside, 3-to-1, 62% probability of profit. I'm going to take it. It's a 100 IVR, Thomas. How could we not take a 100 IVR and look to do something like short volatility with the appropriate risk to reward? It's what you need to do in the market. Stay mechanical, even if it hasn't always worked out recently, which I know that's been the case for me in some cases. Thomas, macro calendar for tomorrow. The U.S. has retail sales due out. I suppose that's worth paying attention to, considering we've seen gas prices go up. Of course, the retail sales number itself has purchases at gas stations included. Retail sales control group is what goes into the actual GDP figure. So don't pay attention to the top line. Look for it beneath the surface if that's something that you care about. Beyond that, though, we are done here for today. We'll be back in just a few minutes. Dr. Jim Schultz is up next with From Theory to Practice. I'll be back later today with Overtime and Ilya, 4 Eastern, 3 Central. So get some coffee, get some lunch. Thomas, thanks for your time with us here today. Good luck trading. We'll see everyone soon. See you on the other side of this break.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade. When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do. I'm so glad that you are here because it is only because of you all that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because if you do so, you can join the conversation, man. You can join the discussion and communicate with your brethren who are also watching the program. On a day like today, I don't even know, man. Nothing is moving. So just celebrate being here. Just celebrate the simple fact that you are here, you're doing it, you're making the most out of a market that does not want to go anywhere, not up, not down, not even really sideways, and you are part of the team. And of course, don't forget you can drop whatever questions you have for me down in the chat, and I'll try to get to as many as I can right around the midway part of the show. And if you are late to getting your question in, if you feel like you're joining midstream and I will never get to it, that may not be true. You can always bank on a surprise and delight. You can always push all your chips in the middle on that one outer, that surprise and delight. Because what I do is I typically go sequentially down from the beginning of the questions, comments, stories, and jokes. But then before I even do that, we have a surprise and delight section where I will just grab a question or a comment from the middle, maybe from the end, and it could be you. It could absolutely be you. And so put it down there in the chat because the algo is dying to know what is happening in your world. So Paul, bring us into the markets. Man, what are we doing today, guys? What are we even doing? Like, really? EME S&P is down 19. Risk-free instrument, also known as the NASDAQ futures, down 101. You got the boomers down 62. And the Russell 2000 futures index up 1290. But I feel like they've been pinned at about minus 19 for the last 2.5 hours straight. I mean, the morning was a little back and forth, like the pre-market was a little back and forth. The opening bell was a little bit of action. But man, ever since then, we have just sat right here for basically 2 to 3 hours. And it's been brutal. It's been absolutely brutal. This doesn't feel like a VIX at, 19. What is the VIX at? 19? Almost 20? I mean, the VIX, VIX is just over 19, 1902. It certainly doesn't feel like a VIX at 1902. This feels like a VIX at maybe, VIX at, hold on a second. There we go. VIX at maybe 15, maybe 14 and a half, maybe 15 and a quarter. This doesn't feel like a VIX at 19 at all. But nevertheless, this is the market that we have, and you have to trade the market that you have. You can't trade the market that you want. I still have no idea what that even means, but it feels right to say right here. And so there you go. So, all right, EME S&Ps in the exact same spot that they've been in. So, okay, let's go ahead. Let's talk about a few things going on in the portfolio. We'll see where the wind blows us. It might blow us into a new trade or two here today. And then we will see where you guys are at right on the halfway mark of the show. Now, don't forget, we do have, it's getting pretty close to earnings season, man. Like, we're getting pretty close to all the heavy hitters that are about to report. You can see this coming week is a little bit slow. I mean, we've got Tesla, right? Tesla coming up there on, 422. That's Wednesday. So Wednesday show. Not going to want to miss Wednesday's program. We'll do a little Tesla action for sure on Wednesday show. Got IBM also on Wednesday. It's got to be after the bell, though. IBM is not. Is IBM a before the bell type of deal? I don't think it is. I think it's almost always after the bell. Let me bring up my. They're not telling us. They're making us work for it. Look at that. Tasty Trade. Keeping it a bit of a mystery. I'm pretty sure that IBM is an after the bell type of deal. Like Pepsi, we know that's before the bell, right? Like Johnson & Johnson, we know that's before the bell. Goldman Sachs, we know that's before the bell. In fact, I think all the financials are almost always before the bell. Goldman Sachs, JP Morgan, Wells Fargo, all these guys are before the bell. But I'm pretty sure that IBM is after the bell. So IBM and Tesla both on Wednesday. So that's going to be fun. But then looking on down the chutes, everything's going to happen next week. Everything is going to start getting rolling next week with Amazon, Chipotle, Google, Meta, Microsoft, Apple, and of course USA is right in there too with Uncle Jay coming out on the Fed Wednesday, which, oh my gosh. So I just did the math over the weekend. So I alluded to this is crazy. I can't believe this. I'm going to really be letting you guys down. I'm going to be letting you guys down, and it's going to be up to you guys to save the whole season. Like, it's 100% going to be up to you guys to keep this thing above zero. So I alluded to the fact that later on in April, we're going back to Great Wolf Lodge. Like, I talked about this a couple weeks ago, so I'll be out for 2, it might even be 3 days, I'm not sure. It's either 2 or 3, but it's next week. So it's next week, and it's Wednesday, Thursday, and I think Friday. I'm pretty sure it's Friday too, but I know it's Wednesday and Thursday. Well, what is happening next Wednesday and Thursday? Look at this. So Amazon, I won't be here. Chipotle, I won't be here. Google, nope. Meta, not a chance. Microsoft, I'm gone. USA, it's all up to you guys, man. Like USA, I'll be nowhere to be found. I mean, you can find me at the Great Wolf Lodge. You can find me, picking up all the diseases and the, sicknesses and the viruses that are in those pools and whatever else. But I'll be having the time of my life with my kids. And it's a homeschool deal. So all the other homeschooling families that we're obviously a lot of friends with, and all of our kids are friends and whatever, like, we're caravanning up there or down there. I think it's down there. Yeah, it's down there. It's in Naples. So we're caravanning down there. It's going to be super fun because we're all just going to be there. And, while all the other, peasants and plebes are in regular school, we're going to be at Great Wolf Lodge. So I'm super pumped about that. And, but it's coming up next Wednesday and Thursday. So I'm going to be gone for the Fed meeting, like totally gone. And it's like crazy because it's Uncle Jay's maybe last hurrah. And then that's going to be all she wrote. But anyway, hopefully you guys can keep it above zero while I am away. So, okay. Let's see, where are we at though? Okay, so everything's come up next week. I'll be gone, but you guys should be able to survive without me. I may have to still post like what I would do, just so you guys can fade it easily. There should be like obviously it wouldn't show up on the follow page because those are actual trades. We got to figure out a way. I mean, obviously my Twitter feed might work. So at JSchultzF3 if you want to follow me on Twitter, because your boy needs the followers, that's for sure. But yeah, we'll figure something out. So okay, let's go ahead and let's go into the portfolio. Let's take a look at where the wind is blowing us in the portfolio, and we'll kind of go from there. There's not that much going on. I mean, we only have 6 positions on. I can actually open them all up here on the positions tab, and I don't even have to. You can see them all there on the screen. I don't have to minimize things or get rid of things. I mean, they're all right there. Here's MES. Here's our short call that we never even wanted to do, but here we are. So now, of course, we're just going to leave it on. So now, of course, let's battle this thing out until the end. All kidding aside, this is actually going to be a really, really good little case study. I don't think it's going to be as long as the Starbucks case study with the investment style covered call and all those kinds of things. But, one of the things that I've said many times before on the show, and Nick actually kind of reiterated this morning on the Skinny on Options abstract applications when I did the piece this morning about 3 reasons to potentially be a bear, like 3 reasons to consider the short side. And I mean, the long side is doing quite well for itself. I mean, the long side doesn't need us to help us, or doesn't need us to help it. The long side is doing swimmingly, but the short side sometimes it can be hard to think of good reasons to be on the short side. Like sometimes it can be difficult to figure out, okay, why would I want to be on the short side? So we offered up 3 reasons why that could be a potential, side of the market that you could consider from time to time. Well, one of the things that Nick said this morning, and I was like, man, there's a lot of wisdom in that. It's almost like I've said that before myself. It's easier to be short delta the indexes than it is in the individual stocks because of that, as Nick put it, that convexity risk. And that's 100% right. Because of that extreme outlier risk, a la Dell, because of the potential for huge up moves in a hurry, a la Oracle from last year, right? These types of things don't usually happen in the indexes, at least not like overnight or in like a week or 2 weeks or a couple of days. They oftentimes take, a much longer time window to actually unfold, to actually play out. And so the markets can certainly do crazy things. We've just seen, the market has just ripped up 10, 11% in like 2 weeks. That's a pretty wild move, but still, it's nothing compared to like what Dell has done this year. I mean, that's been super crazy. So for us holding a short call here in MES, that's not really, it's not going to be quite the problem child or the potential problem child. Maybe it already is a problem child. I'm not sure, but it's not going to be quite the problem child that an individual stock would be, in my opinion. And so let's hold this. Let's kind of see how the wind blows us, and we'll kind of, adjust it on a day by day basis. So that is MES. That's all you ever wanted to know about my MES position. Let's go to Alcoa. So AA. And before we go to Alcoa, first and foremost, I see you guys in the chat, man. You guys are doing some work. Man, look at you guys. I see Ron Bashar just snuck in. Right, Zozo Baggins is here. Oh, Daniel is here. Man, Death Sneeze even showed up. That's crazy stuff, man. Ash Finn is here. A Wills is here. Mrs. A Wills is probably not too far behind. And Point B is here. Look at DMZ here. Look at Viggy Zags here. Man, Brett Munn. Too Late Jake. Man, I appreciate you. Or Danu is here. I appreciate you guys so much. Sam L in the house. Let's go ahead and let's talk about Alcoa for a couple of seconds. So number one, so you can see that we're down on the trade, obviously. We sold the put for $3.90. It's currently marking at $5.02. So we're down a little over $1 on the trade. But we are still out of the money on the put. Remember, right? What is rule number one about selling out of the money premium? You don't talk about selling out of the money premium. But what's rule number two about selling out of the money premium? If it's still out of the money, it's working, right? If the strike is still out of the money, in my humble opinion, you don't have to do anything. Now, you can if you want to be hyper aggressive with adjustments and what have you. That's okay. It's not typically what I do, but there's certainly a strong case to be made for that pathway forward through the forest. But for my purposes, in my opinion, I think we don't do anything. Because again, remember, like, what is the pathway that this position is on? Like, what is the end game if nothing changes about the stock price? Now, obviously, things are going to change. A lot of things are going to change, but that doesn't mean they're going to change against us. They could actually change in our favor. So for now, let's just assume it doesn't go anywhere. Let's just assume it chops around, by 25 cents on either side and it basically just sits still for the next, 59 days, which again, is that going to happen? Probably not. But does it help us understand kind of where we are right now? I think so, because I'm going to need the stock to beat me on this position before I'm in trouble. And right now it hasn't beaten me. As long as the option is still out of the money, the position has not beaten you yet. Now, obviously, the keyword there being yet, it still could beat me. Alcoa could crash, boom, bang, and the short puts deep in the money, and now we've got a big problem on our hands, of course. But in my opinion, when you have an out of the money position that you sold premium on, you can always just sit tight. You can always just sit still. You don't have to do anything. And so for us looking at this Alcoa trade, it's like, sure, I'm down a little bit now, but it's not that big of a deal. I mean, we just flushed $20 down the drain in Dell, $30 down the drain in Dell, whatever it was. And so $1.50 in Alcoa, it's literally nothing. Like, why did I even put pants on? I may not even have pants on. You guys have no idea, but you get the idea. You get the picture. And so when I look at Alcoa, I have shorts on, actually. Of course, I put pants on since we moved down here. Pants. I don't even own any more pants. But Alcoa, we do nothing, and those are all the reasons why. And so there is AA. Let's go to Johnson & Johnson. So Johnson & Johnson down today, down about $2 on the trade. Down about $2 on the day. We are actually about a scratch on the trade. We're down ever so slightly on the sky, but it's going to be the same story. The same kit and caboodle that we just laid out with Alcoa, same exact thing with Johnson & Johnson. Right? In fact, it's even more so the case here because you have more distance between the stock price and the strike price. And so the stock price at 232, my strike price at 220, it's like, man, I've got $12. I've got like 5%. That the stock would have to go down further before my strike is even hit. And so right now we sit tight. Like right now we've got plenty of positive theta working for us. It's not a ton, right? This isn't like a tremendous amount of theta, but it's enough. It's enough to just kind of grease the wheels and keep the whole operation moving forward. And so with Johnson & Johnson, it's out of the money. We still need the stock to beat us. This is a really favorable position to be in, regardless of, or even irregardless of, if you want to play it that way. I mean, it's 2026. You can make up your own words. You can make up your own math. You do whatever feels right to you in the moment. In this position, doesn't matter what the P&L says, right? Irrespective of what the P&L says, you are in a good spot on the position the way that I view it. So Johnson & Johnson, we sit tight, we do nothing. And those are the reasons why. QQQ, this guy's actually coming back to us a little bit. Not a whole lot of it, but a little bit. And so we've got our short call spread on. With the Qs being down a couple bucks today, that's obviously good. We need this guy down a little bit more. Not a ton more, but a little bit more would be nice. We have a 645, 655 short call spread, and you've got the stock at 646 right now. And so we're down a little bit. This one is a do nothing situation, but for a very different reason. It's defined risk. Right? Defined risk, doing nothing is definitely the default setting, and it's actually the default setting that you almost rarely deviate from. From it when it comes to management and adjustments. Of course, you take it off, for a winner or what have you. But in terms of going in and like trying to finagle around the strikes and trying to get super creative, the way that I look at it, a lot of times you're just kind of chasing your tail. like a lot of times I'm just kind of spinning my wheels and I don't really end up in that much better of a position than I was in before I even did any of that. And then I'm incurring extra transaction costs and potentially I'm turning this into a strategy I'm not as familiar with, and so I don't really know how to manage it or adjust it moving forward. I think that is actually something that sneaks up on a lot of new traders. Like a lot of new traders, you put on a strategy and it doesn't go right, or it kind of does something weird and you're not sure what to do next. And so what do? You pop into Google. What do? You hop into AI. What do? You have lunch with your AI agent. You're like, hey, I'm not exactly sure what to do. What should we do here? And then obviously it's 2026 and your AI agent just takes over for you and you just go live your life. But rewind 2 years, 3 years. What would you do? You would go to YouTube. You would hop onto Tasty, like you would go somewhere and try to figure out what to do. And there's usually solutions for you, the strategies that you can deploy. But a lot of times without kind of the understanding and the experience, and then of course the skill to really understand what you're doing, you put those things on and maybe they helped, maybe they didn't. It would depend on the scenario. But oftentimes new traders don't even know what they've gotten themselves into. I've answered that email thousands of times over the years. Hey, Jim, I started the position with Y. Now I'm sitting on, Z. I don't even know what Z is. And so can you help me kind of work through this and kind of piece together, what I should do next? And of course, I'm always happy to do that. But I've just seen it happen over and over and over again. And so this is why when it comes to defined risk, I much prefer kind of more of a laissez-faire, kind of a hands-off approach. And just let the strategy work, man. Let the strategy do the heavy lifting. And it's defined risk anyway. So even if you're dead wrong and it never comes back, you're only going to lose the maximum loss on the trade, which is obviously very, very beneficial. And so QQQ would do nothing for all those reasons. Hey, look at Starbucks. So Starbucks is actually down a little bit today, which is, I guess that's good for us from a short call standpoint. It's bad for us from a long stock standpoint. And so, again, my hope is that this guy goes in the money by an appreciable amount. I hope that because that's good for me. It's a covered call. It's a bullish position. But I actually hope that from a teachable moment standpoint. So I'm hoping this happens so that we can learn some new things. Even just last week when I didn't make any adjustments or I didn't make any rolls, I think this was actually just on Friday. I wanted to show you guys when Starbucks was up. Starbucks was a little bit over 100 or right around 100. I know that when you have a covered call on something you want to hold for a longer period of time, that's not really like in a 45 out of 21 type of deal. You want to hold on to this guy for an indefinite period of time. When the stock runs up to your short call strike, a lot of times you're probably wondering, is there anything I should do? Like, what should I do, if anything, right now at this point in time? And I wanted to address that it was either Thursday or Friday of last week. And so now we're not going to do that again because we've already done that. But if it were to go in the money, so let's say Starbucks goes to 103. Let's say Starbucks goes to 105. Now that's going to be a different scenario because now it's in the money. So I'm kind of hoping that happens. So we can talk about it as it's actually happening, as opposed to pontificating about it potentially happening sometime in the future. And that might make sense to you, it might not make sense to you, but actually seeing it happen, you're seeing real-time prices and all that kind of stuff. I think it can be really valuable. So I'm hoping it happens for that reason alone. And then Snapchat, obviously this is the linchpin of the entire operation, the cornerstone of our financial future for the From Theory to Practice account. Snapchat down 2 cents, which is basically like up 3 or 4% for Snapchat. So we'll take it. Snapchat at 601. And then that's going to be that. So, okay. So what I'm going to do today though, let's do one new trade. So I was looking at this. Let's do a little TLT. We haven't traded bonds in a really long time. I'm not going to do anything with individual stocks because of earnings season. It's going to be very difficult to find stocks that don't have earnings coming up in the next couple of weeks. And so I was like, all right, let's maybe look at some indexes. TLT, we haven't traded TLT in a very long time. And so looking at TLT, the IV rank is not super high. So you have an IV rank at 17. So probably looking to sell, I'm probably looking to buy premium here, not sell premium, because the IV rank is just not as favorable as we would like. Typically like to see IV ranks over 20 or 30. And given the fact that volatility has been so high the last couple of months, really, probably more like 40 or 50 usually to kind of, implement a short premium strategy. So for TLT here, I'm really kind of thinking we just keep this thing really, really simple. We go to the June cycle with 59 days to go. And what if we just get bearish a little bonds? Let's play bonds to the downside, looking for a little more weakness in little old ZB and TLT. And we do this with just a long put vertical spread. So this is a very simple way to take a directional shot where You want to play a stock higher, you want to play a stock lower. You just kind of straddle the at the money price. You buy a strike, a couple strikes in the money, you sell a strike, a couple strikes out of the money, and you basically end up with a 50-50 shot for that directional position that you want to take in the stock. Now, a lot of times, excuse me, a lot of new traders are thinking, or a lot of traders are thinking, wait a minute, Jim, wait a minute. You're making this way too complicated. If I want to take a directional shot in a stock, I just buy a call or I buy a put. And you could do that, but you have to understand the gimmies and the gotchas of the landscape that you are indeed going to be traversing going forward down the pathway forward through the forest. You have to understand all those things. And so if I go into TLT here at 87, if I buy an 89 and I sell an 85, right? This is a long put vertical spread, very straightforward, right? I buy this guy for $1.98, right? It's a 50-50 shot. This is exactly how we would typically set up a directional shot. This is what I was alluding to a couple of seconds ago. Okay. Well, some people might be looking at this thinking, well, wait a minute, Jim. What I'm going to do is I'm going to just buy a put. If I want to play this thing to the downside, I'm not going to mess around with spreads. I'm not going to do this at the money vertical. I'm just going to buy a put. Well, let's look at a couple different puts that you could buy. You could buy an at the money put. I could buy like the 87 put, but notice how there's significant negative theta on the position, right? The maximum loss is obviously what you pay for. So that's not too different. That's a little bit less than our spread that we had set up, but we could have spread up. We could have set up an even smaller spread if we wanted to. But the real big problem is you have time working against you in a pretty significant way when the spread was essentially a wash when it came to the theta. The probability of profit is 38%. So this is no longer a 50-50 proposition. This is a worse than 50-50 proposition. So this is not a coin flip. This is a weighted coin flip where you're not the one holding the weight. Like this is a coin flip that is weighted against you. And so that's not necessarily going to be a super favorable position. Now, some of you out there might be looking at that thinking, Jim, all right, that's reasonable, but I would never buy an at the money put, which is ironic because some of you might be looking at that thinking, man, I would never buy an at the money put. I would buy an out of the money put. Well, let's look at that. And some of you might be looking at that thinking, Jim, I would never buy an at the money put. I would buy an in the money put. Well, we'll look at that too. But starting with the at the money put, this is not a really, really great setup. And so, okay, so what if you wanted to buy an out of the money put? So what if you went down and bought like this, this 29 delta put for 78 cents? So first and foremost, you can see my maximum loss is a lot less. I basically cut it in half from what the at the money put would be. And so my maximum loss is significantly less. My overall theta is going to be less because there's less to lose. But look at the probability now. Now it's 27%. So now, you're in a situation where this is not a weighted coin flip. Like this is like not going to work out for you most of the time. Like 3 out of 4, it's not going to work out. And so obviously buying out of the money options significantly worse than at the money options, in my opinion. And I don't like either one. Like I 100% don't like either one. But if I had to choose, I would go at the money as opposed to out of the money. Now, of course, you could lever these up. You could buy even more, but that actually compounds the problem in my opinion. And so at the money doesn't make sense. Out of the money makes even less sense. So what about an in the money option? What if I went to like a 90 delta? We'll go like 89 delta. So you buy like a 94 put. The probability of profit is about 50-50. So now it's actually starting to make a little bit of sense, right? My overall cost on the trade is 730, so significantly more than the spread, but you're buying mostly intrinsic value here because you're only buying 29 cents worth of extrinsic value. So if you want to take a directional shot on a given stock, I think the at the money spread is the way to do it. But if you are dead set on wanting to have, the deltas or more of a 1-for-1 move with the stock or whatever, don't do an at the money option. Don't do an out of the money option. In the money option is the only way to go because it's going to give you that kind of stock substitute. And of the 3 potential options, it is by far and away the most favorable of the bunch. And so anyway, I'm going to do the spread because that's what I prefer of all of these. But if I had to choose a plan B or a second option, it would definitely be the in the money option. So okay, so let's do an 89.85 long put spread for $1.96. And we'll see if we can get filled. So no takers at $1.96. I'll try $1.98. Probably get filled, I would think. Yes, we got Phil. We got approved at $1.97. Okay, perfect. So $1.98, $1.97. So we are in a little TLT, and man, we are beyond the halfway mark of the show. Man, we are way, way, way behind schedule, but I appreciate you guys so much. Oh man, you guys got me. Man, Scramble Everything snuck in at the very end. It got me. So I was talking about my plan B, and Scramble Everything says, what about choosing a plan B minus? I see what you've done there, my friend. That's very, very nicely done. Oh man, you guys got me 100%. Okay, so let's go to you guys. I'm going to surprise and delay somebody very close to the end here, very close to Scramble Everything. Flub21 is in the house. What's going on there, Flub21? Flub21 says, hey, Jim. Hey, Dr. Jim. Could you explain the gimmies and the gotchas for buy the guts, sell the wings while managing a losing position? I've heard it a few times on Tasty Live, but I might have missed the explanation. Yes. So buying the guts and selling the wings, this is essentially going to be when you either have, and I don't have one on, so it's going to be very difficult for me to like show you. You're going to have to follow the sultry voice verbally forward through the forest. When I get one on, remind me of this and I can show you a bit more kind of tactically in the portfolio. But buying the guts and selling the wings refers to one of two scenarios. You're either in a straddle or you're in an inverted strangle. Usually it's going to be maybe a straddle or a tighter strangle. So I guess it could be three different scenarios. You're either in a straddle, a tight strangle, or maybe even an inverted strangle. And the basic idea is, if you think about straddle is the easiest way. If I'm in a straddle, right there, Flub, if I'm in a straddle, I have shared short strikes at the same level. And so if I want to take that straddle and then transform it back to something that has a higher probability, because maybe I got into the straddle after starting with a regular strangle and then doing what? Then adjusting it, right? I'm rolling up the untested side, I'm rolling in the untested side, and then I eventually end on the straddle, right? Just focus on that. Don't worry about the other ones right now. I end up on a straddle. It's fine. It's okay, whatever. But I actually would like to kind of, for lack of a better phrase, reset the clock and put myself back into a strangle, because there's so many more things I can do that give me a lot of ways to win, a lot of time, a lot of maneuvers I can make. Whereas once you get to the straddle, you're kind of running out of rope a little bit. It's like there's not too many more moves you can make. You can go inverted, sure. You can roll out in time, sure. But you're running out of different things you can do. Well, if I go in there and I buy the guts, so I buy the two shared short strikes of the straddle, and then I sell the wings. So I'm buying the two shorts in the middle that would essentially flatten out my position, but then I sell wings on either side to essentially reestablish a short strangle. Now, when you do that, obviously, if I did that and stayed in the same cycle, it would cost me a significant debit to do that, because clearly everybody would prefer a short strangle over a short straddle if everything else were held constant. Like all else being equal, ceteris paribus for all my Latin buffs that might be watching the show or listening to the show, everybody would prefer the short strangle. And so if I'm going to do that in a way that's going to make sense, oftentimes what I will do in combination with buying the guts and selling the wings is rolling it out in time as well. Because remember, when you roll anything out in time that's short premium, you pick up extrinsic value for that. Like you pick up additional, time premium for that, because you're taking on unlimited risk for a longer window of time. You have to be paid for that. Like you have to be compensated for that. So because of that, I can use that extrinsic value to offset the debit that I would have to pay by buying the guts and selling the wings. Now, sometimes it completely offsets the debit. Sometimes it doesn't. Sometimes it just takes the debit down by 70, 80%, whatever. It's going to depend on all the other variables in the strategy, but that's the basic idea, Flub. I really hope that helps. I wish I had an example to show you, but that's all I got. And so hopefully that helps, though. I appreciate you there. Flub. And so let's see, where are we at? Can we go to, I'm just scanning, man. You guys are the best. You guys are 100% the best. But let me surprise and delay somebody else in the middle. I see DMZ is in the house. What's up there, DMZ? I appreciate you. Hey, Jim, Daniel here. What's going on there, Daniel? Great show, man. I appreciate you so much. Congrats. Did I do anything that's congrats worthy? I mean, certainly not the Dell trade. I mean, certainly not the aforementioned Oracle trade from last summer. Maybe it was the TLT vertical spread today. I don't know there, Daniel, but I'll take the congrats. If congrats are in order, I'm a taker, man. I'm a buyer of congrats being in order for the From Theory to Practice program. So DMZ says, can we do something with CAR? Little old Carolina. Let's do it. CAR. CAR is Avis. Oh man, I can't trade Avis. Oh, they're the worst, man. Avis is literally rock bottom. Well, dollar is rock bottom, but everybody knows. Everybody knows. Dollar is rock bottom. Avis is maybe one tick above. Like we're talking a single uptick. If you're going to rent a car, this is basic stuff, guys. We should not have to go over this. If you're going to rent a car, the only choice is Alamo. The only choice is Alamo. 100%, 15 times out of 13. 101 times out of 100, you got to go Alamo. We're not going Avis. We're not going Dollar. Oh, Enterprise, make me vomit. Not doing that either. So car, yeah, I'm going to trade it, and I got to trade it to the downside. So thank you there, Daniel. Let's do a little something to the downside in Avis. Again, just using common sense. Oh, no, they have earnings on May 6th. I can't do it. I can't do it there, Daniel, because I don't like trading stocks that have earnings coming out because it makes things harder. You're not going to get paid on the decay because of the implied volatility expansion. But I already know that the earnings for Avis are going to be awful. They're going to be terrible. And I know this because I'm just a man of the world. I know this because I'm just a regular consumer out and about in everyday life. I mean, I'm about 34 to 35% sure that this is the way that we should play it. But remind me on May 6th there, Daniel, and we'll play this guy. We'll play this guy to the downside for sure. And so sorry, man, I was going to do something, but then the May 6th thing kind of just snuck up on me. But all right, let's see. Where are you guys at? I see you guys. I see you guys in the house. Orgenu is in the house. What's going on there, Orgenu? Hello, Dr. Jim. Do you think that symbols like EEM, EWZ, and FXI are tradable? If they are, how would you trade them in low IV and high IV? I'm just asking because before earnings, they can be an option. They can definitely be an option. And I mean, these are definitely viable options. You know, I would use the same parameters we use for everything else. I mean, the liquidity in these international names, EWZ is Brazil, FXI is China, and then EEM, I think, is Mexico probably. Is that Mexico? Yeah, it's Mexico. I get that confused with EEW. EEM. Oh, that's emerging markets. Yeah. EEW might be Mexico. EEW doesn't exist. And so what's Mexico? Hold on a second. Wait a minute. EEM is emerging markets. What's Mexico? EWZ. Hang on. We got now I got to know. Where are the indexes at? Indexes. Liquid ETFs. Here we go. Where is Mexico? Oh, it's EWW. That's what it was. So I was close. Yeah, EWW. All the same thing from the standpoint of being an international play. They're all pretty liquid. They're not the most liquid in the world. I mean, they're not like trading SPY or QQQ or whatever, but they're doable. They're serviceable for sure when it comes to, exposure. And so, I mean, as far as what to do, the same things you would do with every other strategy. And so it's the exact same list. And so I would definitely lean into these with earnings season coming right around the corner. And of course, you can trade the actual earnings of the stocks on the day of earnings. I just wouldn't do like Avis today or whatever because they do have earnings coming up in like 2 weeks. And so we've got Tesla and IBM on Wednesday, and then you could do these other indexes now. But I would just use the same strategies that we use with everything else that we're getting you. Nothing really different. And so Danish Dynamite is here. What's going on there, Danish Dynamite? Dr. Jim. I want to thank you. I recently added undefined risk to my portfolio. My man. Particularly naked puts and ratio spreads. My man. It's been a game changer. That's what I'm saying. Thank you for your lessons and transparency, man. You're welcome. Thank you for being a part of what we're doing. That's really awesome. I'm excited for you. I'm proud of you for stepping out and doing it because it's a little scary. And it still might be for you. And it might be for a while. And that's all very normal. Like we all experience that, when it comes to kind of being used to defined risk or whatever, and then kind of stepping on the limb a little bit and doing some undefined risk. Like the first couple times you do it, it's not going to be super, comfortable. I mean, it's going to take a time or two or 39 before you finally start figuring out like, okay, this makes a little bit of sense. And so, but it's awesome. And I'm not surprised. I'm not surprised at all by what you're finding by doing that. It's counterintuitive, I know. And there's going to be some bumps. Don't get me wrong. It's not going to be just strawberries and sunshine. Like, for as far as the eye can see, there's going to be a little tuna fish. There's going to be a little applesauce. And at times there's going to be tuna fish plus applesauce together. We already know all this. We've talked about this many, many times before. And so we're ready for it. Like we understand what we're getting ourselves into, but still by and large, if you zoom out and take enough iterations and observations, then you're going to be in a situation where, you're going to probably notice that as counterintuitive and backwards as it might seem, the portfolio volatility smooths out a little bit. The P&L volatility smooths out a little bit, which again, that seems totally counterintuitive, like so counterintuitive, but I've seen it so many times. I've experienced it myself for years and years and years now. And so I'm really excited for you, man. And so congrats. Now the congrats are in order for Danish Dynamite for stepping out on the limb there. So good stuff, my friend. SC Golfer is here, back from vacation. What is going on? In for the algo, my man. I need a sustained down move and get some high price underlyings back in Iron Condors. 12 days of up and tiny move down ain't gonna cut it. That's true. Makes no sense, Dr. Jim. Makes no sense. Dr. Jim's the best. I appreciate you, my friend. It does not make any sense. And so this whole like stairs down, elevator up business, this is different. This is new. And so maybe this time is different. Like maybe this time actually is going to be a little bit different. I mean, I don't think so. I mean, it never has been, but this is how it kind of always feels. They always like to keep you on your toes, right? Like they always want to keep you guessing. Like, is this really going to be different? Like, have they kind of rewritten the rule book? Like, no, they most certainly have not, but they're going to make us question everything before they show their true colors in the end. So Point B is in the house. What's going on there at Point B? Doc, now the market's doing absolutely the most right now. The market's doing the absolute most right now. Is it really? I feel like it's not doing anything. But you could be being sarcastic there, Point B. And so nicely done, my friend. What's the one thing a retail trader should not do this week? Man, I don't know. Man, that's a hard question to answer. I mean, I would probably say, I'm going to zoom out and give you a more general answer, because we just talked about it a few minutes ago. I would not buy calls or buy puts. Right? I just wouldn't do it. If I was going to do it, I would do it in the money. If I was going to do it, I'd be 80, 90, 85 delta to simulate, underlying stock or asset exposure and on a 1-for-1 basis in a buying power friendly way relative to actually just buying the stock or whatever. And so that's the only way that I would do it. And that way you can have a lot of, redemptive qualities and a lot of merits for what you're trying to accomplish. As long as you understand it's a purely directional play, it's not a premium play anymore, but you don't have to just bleed out on the street corner from negative theta, right? And so because of that, that can be really, really beneficial. And so that's the one thing that I wouldn't do this week or any week for that matter there at Point B if I was a retail trader. Brian Dowdy's in the house. What's going on there, Brian Dowdy? Hey, Dr. J, UNH earnings are pre-market. Oh, is it tomorrow? Is UNH tomorrow? Man, yes, they are. Look at you, man. This is it, right? This is it. My 310 put has $7 left in it. And you're down $1.20. I'm either going to roll to a lower strike in May 15th or to the 424 cycle to collect $1.20, which makes more sense to do. Okay, so honestly, I know that you've been battling this for a while. It's been at least a few months now, maybe even longer. This has been quite a ride for you, Brian. If I'm remembering this correctly, I mean, you wrote this thing. You were in this in the money put all the way down into like the mid 200s to low 200s, whatever. Like it was crazy stuff. You have earnings coming up tomorrow morning. It's most likely going to be an explosive move either way. In my opinion, I would just close it and be done. Because when you say you're down 120, I think you mean $1.20, and so you're talking about a literal scratch on this position. You're talking about a non-event. Like something that at the end of the year or the end of the quarter, whatever, when you're tallying up like how you did and your results or whatever, it's not even going to register. Like if you're like on like your history tab and your performance tab and you're sorting by like the highest P&Ls or whatever, the biggest winners, biggest losers, it's not even going to show up on the screen. Like it's so modest and so minuscule that's not even going to show up either way. I would close it and be done with it. And just give yourself a day off, man. Like you've earned it, my friend. And I would chalk it up for your mental records as a win. It's a W, man. Even if it is right on the screen, even if it is red on your broker statement, it doesn't matter. Mentally, man, this is a big, big, big W. And so that's what I would do, my friend. And hopefully that helps you a little bit. So Ashfin is in the house. What's going on there, Ashfin? I appreciate you so much, my friend. Too Late Jake is here. What is up, Too Late Jake? Good job this morning, as always, man. Thank you, my friend. Yeah, it's fun with Nick and Tony. Like, I enjoyed it a lot. And, it actually worked out really, really well because Nick was talking about his short delta portfolio during the opening bell. And so then I came on for some reasons to consider being short. And it just kind of meshed well together. It's almost like we've been working together for 10 years, man. It's almost like we're going on a decade plus at this point. And what a ride that has been. And so Samuel's in the house, Doc. Appreciate you as always, man. I appreciate you. Appreciate me. Quick one for the 15th. Is the Hormuz open or closed Or do we just keep enjoying our banana natty and let the market figure it out? Well, the second part of that comment or question is absolutely true all the time. But is this trade open or closed? I don't think that's the right question. I think the right question is, are we blockading the blockades blockade? Or are we blockading the blockades blockade? It's hard to pull off live, and we definitely botched that. But that's what I would try to figure out. Like, which side are we on here? Like, what are we actually doing from a blockading standpoint? And I think that will tell you everything that you need to know. But Sergio is here. What's going on there, Sergio? Appreciate you, my friend. Very, very much. Ashford, let's get that B- humor going for the algo. Let's do it, man. Let's 100% do it. And by 100%, I'm only expecting about 77% out of you guys. And so get after it. Griffin Jones in the house. 14 trades today, only CL and ES, staying small, taking profit on the swing, and grinding theta. That is it. That is the way to do it. Emmett Morrison here for my daily dose of B- humor. You got it, my friend. I think we are more at C+ levels today, but that's kind of the expected move. It's kind of C+ to B-. And so, you got the bottom end of the range today. And so let's see. Sam L says, Doc, I see you work, Daniel. I appreciate you talking to Sergio. That's good. You guys should be buddying up. Sam L says, Doc, Dell moved again. And iPod Touch clearly front ran the fade Doc signal again. Yeah, I'm not looking at Dell. As the last thing I do today, yeah, I'm definitely not doing that. But look at BBB Fine is in the house. Man, Zozo Baggins is here. Ron Bashar is here. Death Sneeze is here. Man, I gotta go because I'm out of time, but I see you guys in the house, man. Look at you guys getting work done in that algo. Hayden is here. Man, I appreciate you guys so very much. E-Media showed up. Man, thank you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Hello everybody, happy new week. I missed you on Friday. I was traveling and I intended to do a show, but I considered the kind of technical circumstances and figured, no, I'd rather not. Plus you'd probably have found me screaming into a pillow because this market just won't stop. It seems like good news, or what seems like good news, is embraced wildly, and bad news is like, whatever. And the funny thing on weekends is that when the bad news comes, you'll see the markets, such as they are, like Bitcoin, react pretty appropriately to them. But by Monday, it's just like, who cares? And so Friday, of course, we had an extension of this mega rally that's been going on, predicated upon streets 100% open, this war is good as done, life is grand. And then the weekend is sort of like, no, it's not. None of those things are true. The street's very much closed. We're boarding the ship. There's all nastiness going on. And yet, The ES is down 0.24%. Couldn't care less. Couldn't care less. So the market wants to go up, that's for sure. But what's confounding to me about this is that in the past, when you've had these mega rallies, you could point to something specific as to why. So when COVID hit and the Fed threw trillions of dollars into the financial system, it made a certain amount of sense that stocks went up because they were down a lot and you had all this new money squeezing into the system and naturally, whoop, everything zipped higher. This time it's like, I don't know, there's been no multi-trillion-dollar injection or anything. And the weirdest thing is that if you compare the state of the world right now to where things were on, say, February 26th, I mean, to me, things seem kind of a lot worse in a lot of ways, and yet the market's way higher. So I don't get it. And, as much as I'd love to come here and just lay out the truth for you and say the following things are going to happen, we are in literal and figurative uncharted territory right now. Because, if you're driving around town, there are medians and lines in the road, and there's curbs and pedestrians and buildings and all those other things, and you can wind your way around town sensibly because you know what the boundaries are. You know what objects to avoid, what things to go to. It just all makes sense. If you find yourself driving in the middle of Antarctica, it's just white everywhere and featureless. It's like, well, I guess I'll just keep going. Things seem okay. And that's kind of what it feels like right now, which is why I'm continuing to keep things light. During like a month ago, it'd be like, I have 35 positions, I have 40 positions. So it's not like that anymore. I'm keeping things lean, keeping a lot of cash. And, the fact is that I just would rather keep the powder dry and until things are a little more clear, because they're not clear at all right now. So, having said all that murkiness, let's jump in. And there's still a few charts, bless them, that still have interesting setups, and I definitely want to show those. So let's go through the good and the bad now. So here's EFA, and this is an ETF, which is equities outside North America, and it's a pretty clean setup. And like I said, I don't have a lot of positions now. This is one of them. I'm short this, but with a lot of stocks just today. It opened kind of weak and it's trading kind of strong right now. It's still down, but not much, 0.5%. But the setup is, we've got this beautiful wedge pattern. And we have, and I'm seeing this in a number of places here, an island reversal pattern. That is to say, we have Thursday, last Thursday, then we have Friday, and then today. And the key thing is that Friday's low is higher than today's high and Thursday's high. There's air between both of those bars, so that's an island reversal gap. Whether that'll actually mean anything or not remains to be seen. But so far, that's kind of a classic reversal setup. So yeah, that's EFA. Short that, and for the moment, it's looking good. Also short a smaller amount of FXI, China. This is a right triangle setup. It's up a little now, 0.19%. If it pushes past this line, okay, forget it, I'm out. But as of now, it's still a nice little pattern. These are just good old-fashioned classic technical setups. What I'm definitely not short and not going anywhere near is anything domestic, like, say, for example, the spider. This illustrates nicely just wackiness of this, because look at this. This is the pre-Liberation Day setup here. So here's the spider. It fell, it retraced, tagged that pattern beautifully, so pushed it higher, and then the real fall came in. Whee, down we go. So that's a nice classic setup. Fall, push back to resistance, then fall harder. Ain't nothing doing like that this time, because we had a beautiful pattern here. Let's, RIP pattern here. Let's just kind of highlight it. And it fell and then pushed back, so that seemed to be the retrace. And then it just went blasting higher. This huge gap here in particular changed everything. And it has just not cared one whit in the world about news, good, bad, or indifferent. Since then, it just keeps flying higher. We are off a little right now, about 0.25%. So this will probably be the first day in a while. We're not at lifetime highs, but you can see just how sharp and brutal that lift has been. And the first little signal that maybe things are turning bearish again would be if it cracks below this former peak again. But yeah, this goes back to the whole Antarctica thing. It is just white outside. The small caps, IWM, are actually up right now and are almost certainly going to close at another lifetime high. So IWM is up about 0.6%. And it has been, just like with everything else, pretty much unrelentingly higher since the end of March. So there it goes. And terribly sorry, there's nothing I can say about this chart except, gee, it sure is going up a lot, which is the case with a lot of charts out there. Definitely separating the wheat from the chaff is an important part of the process these days. XLK technology, very similar situation of just a heartbreaker of a pattern not doing what it's supposed to do in the end. This was a beautiful rounded top. I've seen a million of them. I've done this a while. Next year marks 40 years of doing this. And so we had our break, our retrace, and then things started acting kind of funny, which these 4 or 5 bars right here. And then they got not funny at all and just blasted higher. So it is just ripped past this. It's almost like there's this unknown force happening that is just compelling these prices higher with this force of volume, this force of buying pressure. And I do not know what it is, but it is out there clearly because it simply refuses to weaken, no matter what the news. The news is pretty bad right now, and nobody seems to care. But, you know, it's a phrase I can't stand, but it is the truth. Trade the chart in front of you, and the chart in front of you just seems to want to go higher. Same deal here with the what we were talking about with this spider earlier. Exact same setup. Look at that. Setup here, fall, retrace, fall hard. No falling hard here. The retrace happened, and then it just changed the story mid-chapter. Here are the cubes. Kind of a similar setup. Not quite as dramatic a blast higher, but we are down a little on this, 0.3%, and we are above that range we've been in for months. So it's, you know, and here's the other thing. If we start falling, even I am not going to be like, well, here we go, now's party time again. No, it's just, this is so messy right now. I'm a neat freak. I like things tidy, and I'll be the first to report good, clean patterns. But there's it's going to take a while before the smoke clears, and we can see what's going on more clearly now, because this is just a crazy mess right now. And there's some weird things going on, as I talked about last week with like Bird and Car, things like that. Just it's not just canaries in the coal mine. It's more of a funhouse mirrors going on. Very hard to suss out what's happening. Semiconductors. These two were in a pattern, broke down, and have been blasting higher ever since. They're looking a little weary now, but this could just be digesting all those gains. It's down to 0.1% right now. On an intraday basis, actually hit another lifetime high. It's just kind of hanging out here in the ionosphere. And of course, more dramatic than that is SOXL, which is the leverage bullish semiconductor fund. And this had this nice little wedge pattern, which it broke and then also went blasting above it. And it is up over the course of the past few weeks, over 100%. So there are times, I mean, oftentimes levered funds tend to kind of eat themselves alive. But if you have a trend that's persisting, it can just compounded interest. It just feeds on itself. You know, if you have a market that's going up and down pretty consistently, that leverage fund will just grind away to zero. But this is a strong trend for a few weeks, so you can get triple-digit percentage gains. Speaking of weird charts, Car is still loony. The past, probably every single day for the past month, you could just hurl money at it, and you would just make more money every day. It is a green bar virtually every day. This is the one little exception. But it's just blasting higher, and it would be amazing to figure out what on earth is happening with this. I guess the simplest explanation is that it's a really hot meme stock, and it keeps attracting more money, and it's the very expensive game of musical chairs. Because car rental companies going up 500% in a month, the music will stop at some point, but it hasn't stopped yet. And I guess maybe some people out there have tried to short it, not me, promise, and have gotten run over. And then when it does collapse, they'll be like, oh, I missed it. But, you know, it could be $3,000 a share next week. There's no telling with this. So really amazing to watch from a really discrete distance. As I said, semiconductors might be taking a bit of a breather here finally. Here we have AMD down 1.17%, which is like a crash these days. Micron, lifetime highs on Friday, but we're slipping today about 1.75%. NVIDIA is down less, 0.3%. And the only kind of technical feature to keep an eye on here is this gap, this price gap, which is getting pretty close to. But this has been range bound for like 9 months now. Pretty amazing. ASTS that I have puts on took a tumble today, 6.29%. I guess there was a mishap, I think, with Blue Origin. Something did not go right in Rocket Land. I also on Friday shorted Infosys INFY because of this tremendous. This is not my charting platform, so I can't speak to it. But I think this is maybe a data spike that shouldn't be there. I can't say. So just pretend it's not there. But I think we've got a nice head and shoulders pattern here, and we fell and we're retracing. It's a pretty good looking pattern to my eyes. Meta. META is down pretty decently, about 2 2/3%, following this big push higher. We're starting to weaken somewhat on that. And the handful of puts I do still have are at least to September. So that Meta is an example. Also, Amazon, strangely, on Friday, which was a really, really bullish day, Amazon rose, but just a little bit. And as you can see, it was a rather weak day. It opened very strong and closed off weak, and it's falling some more. And there's a cool little trend line, which does a pretty good job showing where it conked its head on resistance, and it's reversing away from that. Another high flyer that's taking maybe a breather, shorted this earlier today, is AXTI, which is AXTI. And they're down 6.5%. Who knows if it'll stick or not, because this thing has had lots of backing and filling for many, many months now. And because I missed you on Friday, we didn't get a chance to talk about Netflix, but it took a hard fall. It's about the only red on the screen on Friday. Took a hard fall on Friday, and it's adding to those losses today. It's down another about 2.5%. And it was a pretty cool setup too, because you can see it peaked here, and since then it was just a bunch of lower highs. You got lower high, lower high, lower high, and so forth. And the last major lower high was right there, which is we got just below it. So that price line did a pretty good job showing where resistance was, because it got quite close on, I guess that would be Thursday, and then fell out of bed on Friday. So that big pop started to undo that. Over in precious metals land, a bit of a slip here, about 0.8% down on GLD. We've got some gaps working in our favor. As I said, I think precious is going to be prone to weakness. Miners, which I'm short, GDX down 1.09%. There's the gap on that one. That's key. Just stay beneath that. Silver had its crazy peak here on January 29, and since then has engaged in a series also of lower highs. And my old friend Palladium, I actually think is probably in for a rough ride too. Here's a pretty well-defined head and shoulders top on this one. We're starting to sink beneath that. So closing out, a couple of items here. Bitcoin, we are down on this. The future's like $1,280, but the critical resistance is right where that price gap is, around 81,000. And lastly, one last look at this Zany ES. There it is. We are down at the moment, but you'll note the bar is green. Like I say, we may be opening weak, but the market just seems to want to go up irrespective of the news. So there we have the slice right higher, and we'll be closing near lifetime highs. So, okay, well, I missed you on Friday. Glad to be back, and I'll see you here tomorrow. Take care. Bye-bye.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Ring the alarm, hey, ring the alarm, boys! Turn up the charm, listen up, y'all, get out the damn stall. It's the last call, hey, the last call, the last call, the last call.
Jamal, my friend, we are back for the last call, and it's been a choppy, dare I say, boring day in the market. Even the S&P 500 futures down 21. We've been kind of chopping around this range of about a 70 handle intraday range, including the overnight session that we had a little bit of weakness, but not much of anything really throughout the day today. About 1 million cards have traded today, 1.1 million contracts here on the E-minis. NASDAQ down 100. It's the weakest of the group here. You got the Dow down 59 and the Russell actually bucking the trend up 13 here, about 0.5%. So a little bit of strength there in the small cap stocks. You've got oil up to 87.05. We got into the 90 handle, I believe, in the early part of the Sunday session. 89.60 is the high mark that I see from midnight of last night. But oil has remained right here pretty much all day. Volatility as well has remained kind of sticky. Got into the 21.22 handle. Been sitting at 20.77 pretty much all session here, up about 50 cents, a little over 2.33% with the VIX at 19.12. We did see a 17 handle on Friday, which was a shock to me, but I guess into a 12% face ripper rally in the E-minis. Where else would volatility go? Bonds basically unchanged here at 114.19. They've been relatively strong throughout the session, a little bit of two-sided action, but they've been kind of chugging along here right around 114. Gold and silver both kind of weak. I mean, gold was down about 150 handles on Sunday, down 47 right now. at 48.32. Kind of much to do about nothing here. Silver as well, down $2. It was down to 77, 78-ish. So it's kind of in the middle of where it's been trading. And Bitcoin as well, 76,000 here. Kind of a risk-on flight there. How do you feel about this market? How did you feel last night? Were you watching futures like around the open?
Alert went off below 1K. So I saw that.
That alert, I hope it got to you quick enough because we were there for all of about 5 minutes. It's unbelievable.
I didn't do anything. I didn't expect anything to happen. Look, I'm worried. I'm really worried.
Really?
Yeah.
See, I was.
You know why?
I feel that.
Well, I'm worried because we might not have 14th day in a row in the NASDAQ up. That's why I'm really worried here.
Oh,
yeah,
no.
I'm worried. I'm really worried.
We don't get the 14th day. That's ominous.
That's what I'm saying.
12, definitely not enough. 13, almost enough. 14, you don't get the 14.
We're 90. I mean, we're 0.3 away. That's too far. I don't know if we're gonna make it. Yeah, I saw it down last night. Again, the alert went off. I thought it was fascinating, but I don't know. I mean, look, if we don't get the 14th day, I think this is probably a good thing. We had Kevin David on the show today, who represents NASDAQ. He said too far, too fast. I know that I've said it. I can't remember if you said it. I know Tony said it on Friday when we were talking. Yes. I feel like everybody feels like that.
Yeah.
So I don't think this would be the worst thing in the world for us to have a slight pullback today. You mentioned VIX and a little bit of little bounce. I mean, that is kind of fascinating. I don't remember where it was on Friday, but it could be one of those situations where the weekend effect is being taken out, where we went. It might have been down heading into the weekend, and then a little bounce back here today. This is not enough to move the needle, I would feel, on volatility, but somehow it is. The oil thing was definitely 90. Seemed a little elevated, but all in all, I'm short 200 Vega here on the 25K book. I am slightly long Delta, very slightly, and I'm collecting Theta. And honestly, I don't want to change that. I mean, at all. I honestly feel good about that, especially considering what we're talking about. And I feel like volatility might still continue to come in here. This is those times where you've had a huge shock to the system, and it seems like we've moved away from it, but yet we're like, this is still scary, and it could get scary. And then months later, we'll look back and be like, damn, that would have been the time to really sell vol. That's how I feel. And so that's how I'm playing it right now.
Yeah. I was a little shook up on Sunday because I felt like, okay, you had this absolute face ripper of a rally. It was amazing. I mean, historic in all sense of the word. We had the recap this morning. It's the 99.8 percentile. So it's this and like two other occurrences of this magnitude of the upside move. I mean, we're talking history book type stuff. You have that sort of move, and everybody knows the weekend risk, and you kind of realized that risk on Friday. You had the tweets, you had the ceasefire off, the bombs flying around, sinking Navy ships. I mean, it's pretty crazy what's going on. And on Sunday, it's been the MO to just buy the Sunday dip. It has worked pretty much every week of this war. And I was like, okay, this is the one where they don't buy the dip. You know what I mean? We come in on Monday and we're down 3 or 4%, which puts us back to like middle of last week. It's one of those dips where in prior times we'd say it's day one, but we're really back to just like middle of last week. It's like nothing. It's a haircut. But at least you get a little bit of, VIX expands, vol expands. You get a little bit of a washout of kind of the late bullish, traders. Alas, we don't get that. You just get an instant buy the dip where by the time I got home from my golf outing, the E-minis were 40 handles higher. And I'm like, how could that be possible? How can we do that again? But here we are.
I mean, this is this particular segment has really signified the bottom of every week. I mean, so far, is it going to be 4 for 4? I guess we'll find out by Friday. But I mean, by all based on a lot of the things we've seen, first of all, the worst is over. But is it completely done? Is the real question. Now that's the question we're asking. Before it was like, is the worst of this over? The worst has clearly been over. It's just a question of is this really over and done with? I'm not sure, but it almost seems as though we moved on to earnings, and that's where we are right now. There's a few coming out tomorrow morning. I saw 3M. I'm you know what? How are you feeling about playing earnings this time around?
So here's what I was going to get at, because on a day like today where you have volatility slightly higher, but nothing really, I mean, you don't really have the same movement today. You got, like the stuff that I've been trading around, like, Microsoft is down a couple dollars here. You got Meta down a couple dollars. I've been getting into some of the, ASTS. I took off a position. I got paid in there. Rocket Labs as well. Taking off, I had some long delta in Shopify. I've taken off so many positions. And I'm, from a capital allocation standpoint, I'm at like 20% of what I was 2 or 3 weeks ago. So I'm really, really light. This is when I get itchy fingers. And like, I get a little jumpy. I'm like,
I'm glad you said this, because
I need stuff.
I'm very interested in the trade that you put on today. I know it was you.
Which one?
I know it was you, Fredo.
Which one?
The car trade. That had to be you, right?
I did do it.
I knew it. I knew it.
So I've got a little couple extra bucks in this account now.
I love this.
And I have been looking at the stock. I mean, the stock has gone absolutely parabolic.
Look at that. Look at that chart. It's crazy.
I will say, in the light of this stock, as well as like Bird, and I had people texting me about AMC today. Like, we're in
people need to let AMC go, bro. Like, this is
but AMC was up. It's up like 100% in the last like it was trading 80 cents.
It's $1.85.
Okay, I know.
Go. They need to let it go. Move on to fun stuff like car.
But what I'm getting at is good. This is silly season. When silly season starts, you got some downside risk. So I'm cautiously watching this market, because silly season comes around. You remember all the memes and the GMEs, and then we had that like quick little mini crash of sorts where that was kind of the unwind. Everybody was like, "Oh, there's liquidations because you're margin called on GME, and that's why the market went down." Anyway. Car is one that I've been watching, which
amazing. It's amazing.
Which is
it's at the highs of the day right now. Oh my
I did a silly little. My thinking is here, and this is an expensive trade. And it's moved about $300 today. Even though when I did this, the stock was probably trading. Just to give you how much of all this trade is at. So the stock was at 435 when I put this stupid trade on. Okay, 435. So the stock is $60 higher. I have short 11 deltas here, but I did a diagonal spread.
No, it was 535, right?
535.
Yeah. I was about
530.
yeah.
But it's really 60 handles. Okay?
Yes, 60 handles.
And I got $5,000 in this goofy little diagonal spread that expires in 20 days. Just to tell you about volatility here. That spread on a 60-point up move in the stock, where it's short delta, it's short 11 deltas, has moved $3. Okay? It tells you, and when you look at the volatility here in across the board, I mean, volatility through the roof. You're 270%, 216, 220. Back months are in the 180 handle. It tells you that volatility is basically saying this thing is going to double or go to zero very quickly.
Exactly.
And
that's why I like the trade. You're either going to find out you're really right or you're really wrong, and you're doing it. But you're doing it defined risk. That's the best part about it.
It's a big because of the volatility and the price of the underlying. This is a trade that like most people can't do. Because it's too big and it's too risky. Even me doing it, I recognize it's stupid.
Yeah, but you know your risk. It's different.
I know the risk, but I recognize that it's a stupid trade.
I wouldn't call it stupid. It's just it's a high level trade. It's a high level trade, and you're taking a shot, and you're doing a risk defined.
Yes. So this one,
like in this, like I think it's important to make that distinction, because there's people who are learning about selling vol and they're seeing this volatility. And even if, say, they do have the money, they're like, oh, well, I would sell a strangle in this. I would not sell a strangle in a name like this.
No.
I know major trading players that would not sell a strangle in a name like this, because even though the vol is high, the type of move that it'll eventually either have in the upside or downside will smoke you.
Yes.
It just will.
This sort of trade, which is a calendar spread, diagonal spread, it's not going to move all that much in the short term. You get another 100 points to the upside. It's not going to be a winning trade, but it's going to move a couple dollars, just like it has today, where I was $60 lower and it's moved $3. I can stomach that.
You might end up being, even though it's moved $60, you probably might be making money on it somehow, huh? Because of skew or something, huh?
Well,
you're not losing that much if you are.
If you have 1 or 2 days of no movement in the stock or minimal movement, I mean, 100%, a $100 move here, 20% move in the stock is probably closer than what implied volatility is saying than a $20 move. And so if you have a $20 move in either direction here, you probably are profitable on that trade. You need it in the next week or two.
For sure. You need it, and that's the thing. That's the thing.
But I am glad you mentioned it because you other than that sort of kind of big capital outlay, you can't do anything here. You've got
no, you can't.
You look at a call spread. You say I want to sell a 25-day call spread 700, 720 or whatever strikes because there's limited on the upside here. How do you price this? It's at a dollar debit at a $14 credit and it's 20 points wide. It's impossible. These are going to trade for nothing. And to your point,
you trade by appointment too. I mean, you don't get filled immediately. You're not getting filled mid market on most of them.
This is what I was looking at earlier before I decided not to blow up the account. Yeah. I said, do I do the 700, 750 call ratio spread at a couple dollars?
Hell no.
And that's the exact.
That would scare the hell out of me. No, I don't care.
This was marked at $2 when I was looking at that $50 diagonal spread. And I was like, you know what? I would rather lose the $1,000 over the next week on this stupid diagonal spread than risk $5,000 in the next day on some silly move to the upside. And so
I like it. Meanwhile, I just crossed 600. This thing is incredible.
Listen, you're not going to time this.
Amazing.
This trade's now. So I lost another $1 on that another $100 or so on the mark here on that $15 up move.
But see, this is similar to the gold move in a way, and follow me along with this. This is the idea. Back in October when gold was moving crazy initially, it's okay, it's just continuing to go up, but I want to be there for when it crashes, right? This is what you want. You don't mind if it goes up today. You don't mind if you want it to go another $100 tomorrow because then that almost increases the likelihood that it's going to drop $250 over a 2-day or 3-day period. That's what I would be looking for.
I don't know when. I imagine it ends at some point, but who knows? It's the only way I could really structure it, and it's too capital intensive. So,
yeah,
not for the faint of heart.
You can't sell vol in this. This is expensive. I mean, crazy expensive. I wouldn't sell a ratio upside or downside.
And you can't buy puts.
No, you can't
buy puts just naked. You're screwed.
Yeah,
and that's the only reason why the trade is still flat.
For sure.
Because of that. I will say, though, in that light, because of the way this market has been, this choppiness today, and because I have very little new trades on, and I've been taking stuff off, I'm now going over to some of these earnings trades. I did a 1x2 crab trade in GE. I did a diagonal spread in RTX. I'm getting into these trades that have junky markets that I don't care about, that I don't trade.
What about 3M?
This is when you give up money.
I know. I was thinking the same thing. That's what I was asking you.
I can just sit here and have a really great day. I've had a really great couple of weeks. It's been awesome. I could just sit here and not do anything. But I got the itchy fingers, and now I got $5,000 in freaking Avis car stock. Okay. That you got to be careful of that.
I know.
It's hard
I know.
hard to avoid it.
This is why I'm starting to close some. I literally only closed. I did one trade today. It was a closing trade.
Perfect.
And
that's what you should.
Tomorrow I'm going to do more. But I am definitely probably going to trade the bigger earnings. I looked at GE. I thought about doing calendar calls.
The markets stink.
I know. Yeah. I thought about it.
I was making markets there. I mean,
but if I were in your position, I probably would. I still have some risk on. I need to start closing out more stuff. That's the plan throughout the week. That way I can be ready for when the big earnings come and I can play more of those.
Yeah, I think those will be a welcome addition, especially if we kind of stay around here and volatility contracts. You're going to see you're going to have some opportunities.
I mean, I think earnings could be good, man. I do. I think they were.
I think that's part of this move.
Yeah.
Is that everybody's like, you know what? The earnings are still going to be, through the roof.
I mean, they're not going to use the excuses as much now, right? About the dollar, about oil. I mean, it's probably going to seep in a little bit. You got to talk about it a little bit, but they're not going to really harp on it as much, right? Like,
no.
I mean, if you beat with this current environment that we just went through this past quarter, then that's really good and your stock should go up, right? And if you say this,
and a lot of the stocks are like not at highs. Like if Microsoft beats and raises, and that's, I mean, it's down 35% from highs.
Like not to skip ahead too much, but UAL is Tuesday after the close.
Yes.
Right? So they're going to obviously say that oil has affected their price. There was a rumor about UAL and AAL rumor. It was a rumor, right? That was you? That was you, right?
Yeah, this was another one where I've been working it all day and I just randomly got filled. I sold puts in Roblox for a fast market trade. It's another trade where in the middle of last week, we sold the puts at 350.
It just jumped like a dot. Like
it
just jumped for some reason.
I just closed them at 285. Like it's not, these aren't home runs, but they're trades where you put them on in the middle of last week. They're tertiary type positions, that in terms of stocks that I trade, they're on like the third or fourth tier, and they're moving. You sell puts and they're in by 10 or 20%. In a couple days, you have to take that money and run. It's in this market where, shit can hit the fan again. And
tertiary stocks, like you should like kind of like being at the bar very late, sort of like towards the end.
Yeah. It's like the
lights.
It's like the last available.
Yeah. You know what I mean?
Yeah.
I'll get one more beer before the bar closes and then, kind of walk around a little bit, see what's going on.
You said that as if you had quite a load of experience in that.
As you know, I was in graduate school for a long time. I definitely, I was in school for a very long time.
So
I do understand.
You pull like the Goodwill Hunting, like Harvard smart guys kind of thing. Like you pull that.
You know what's funny? You mentioned that because, I went to graduate school for engineering, material science and engineering, and I did something that was very esoteric, superconductivity. That was my research. Like you pull it up.
Remember when those were going nuts?
Yeah, for sure. Those names. AMSC was one of them. AMSC, American Superconductor. Yeah, for sure. Oh, it's happened at times throughout my trading. So I would be in school, and look, I shouldn't even tell this story, but the hell with it. I would be in school, and a lot of times, went to Wisconsin. So a lot of times at the bar, people would wonder what team I was on. If I was on the football team, if I was a receiver, corner. This happened a lot, actually. I mean, even when I would go to Green Bay sometimes, my wife would make a joke. She made this joke one time. We were out eating, and she was like, don't you have to, it was like Saturday night, don't you have to get home? You got a game tomorrow. These, like, two people turned around and looked like, they were like, but no, she was like, I'm just joking. And it would happen a lot. And it would definitely happen at Wisconsin every now and again. And then I'm like, no, I'm actually in school I'm here for graduate school. Like, oh, what are you doing? Oh, material science and engineering. Oh, wow. Oh, really? What is, and then they it was just the funniest exchange every single time. It was hilarious.
I love it.
Yeah, it happened.
Roblox
Roblox is on the run, bro. What's going on here?
Which one?
Roblox.
I don't know. I good riddance. Goodbye. That's it. I mean,
not really jumping, I guess, on the chart.
Up about $1 here. I mean, we've got really not Tesla on the docket early or in the middle of this week. You have UAL tomorrow after the close. I sold the 90 strike puts there. We'll see if that pans out. I did that kind of small on the smaller end. But are there any other stocks that are like jumping off the page to you? I mean, I've got the usual suspects here. I mean, just looking at some of the stuff that's moving, like upside S&P 500 stocks, you have a bounce in some of the software names, CRM. ServiceNow is near 100. Oracle has been on a wild tear here. It's up like $30 or so. You got some of the bank stocks, JP Morgan, Goldman Sachs in there. On the downside, Intel has gone, 30 to 60 in like a month.
It's an amazing story, Intel.
Meta in there. You have Netflix looks like a dog. You got LRCX in there. Some of the chip names, AVGO, Tesla. Is there anything that like jumps out to you that you got to have a position on in?
Nothing like gotta. Netflix is an interesting story. I would if it goes lower maybe, but like right now, not really. No, actually, nothing really jumps out. When I look at the heat map, it definitely looks like this is a rotation day. I mean, it's a Christmas tree type day, as I call it. I mean, there's a lot of spread out reds and greens. There's no one specific area dominating. It's a good call out about the software names. Those are getting love today. I have wondered if that's going to be the case. If it's going to continue to be the case. I'm long some of those, Palantir and CRM and Microsoft still, so I'm in those. But no, nothing really. I feel like this has been a good area to flatten out. And that's my plan throughout the week. I'm going to flatten out more and just kind of get myself ready for anything else that comes. But I feel like what's going to happen is things are just going to calm down and we're going to chill. And then earnings are just going to earning.
Don't we have the big deadline on Wednesday? Is that tomorrow?
Ceasefire?
The ceasefire, the end of the ceasefire.
I think so. Yeah. Yeah, right.
No more extension.
Yeah, right. It's going to be extension.
Part of the deal.
Definitely extension. No more. Nope. It's not going to. Well, maybe.
Was the last
they
one.
asked me for another extension, so I gave them.
Yes,
that's how it's going to play out.
Yeah,
that's how it's going to play out.
It's so silly. ServiceNow, though, does have earnings on Wednesday after the close. I think it's really the first of the big kind of software names. From what I've been looking at my list here, I think that is probably the one.
What do you say? How do you address?
I'm leaning long on them. I think the asymmetry of risk is to the upside. Like I think you've taken out we've priced them as if they're close to being obsolete, and at this point, if you ask me where the 20-point move is, 2 or 3x the expected move, I gotta think it's to the upside, not the
I think so
with prices here, and so that's how I'm positioned for them.
Yeah, is AI eating their lunch? I got a new thing possibly coming out soon. It's coming out tomorrow. I'm starting tomorrow. I was at home and I was like, everybody's worried about AI. Is AI really coming for us? In my mind, no, because I feel like we have a certain flair of the way that we do our thing. But I was like, let me just ask it a question that I would ask another options trader. What are the best ways that I could get long Microsoft?
Trying to suss it out, as the kids would say.
Yeah, that's a good one. Yeah,
trying to suss out.
What is the best way I could get? Name me a couple of ways that I could get long Microsoft. Expecting it's going to say, well, you can buy Microsoft. It actually came out with like all this sell volatility here, and you can do it actually is pretty. It said some things that I didn't expect.
So you were worried afterwards. You were like, oh shit, turn this thing off.
A tiny bit.
Somebody regulate this thing, okay?
But then I was like, you know what would be cool? Is if we do you have a situation where you ask that question to me and the AI agent. And so we're going to start doing a series like that. I'm asking a question to myself, how we get long, and I'm going to say the things that I would say.
Human versus AI.
Human versus AI.
I like that.
We're just going to see what's what. I mean, that's kind of fun. I mean, we'll see what it does. I'm willing, and you know what? Because there's it didn't give all the things. It didn't give the idea of a diagonal, and it certainly didn't give specific strikes or anything like that. So, but it did probably give beginner ideas better than I would have, which that's fine. Dr. Jim is better at that than all of us. Anyway, it's fine.
We have some people in the chat already calling. They were like, Nick, tomorrow is Tuesday. So it's Taco Tuesday, okay? It's time for the taco. So the ceasefire will be extended.
There it is.
I think that's consensus.
I mean, how can it
market's trading like that?
It is. We're
at 7,200 or 7,150 right now. E-mini.
We got 1 minute to go, Nick. 79 points in NASDAQ. Can we do it? Can we get positive?
I don't.
Or does it count if we go positive after the close?
I call this a positive.
We're starting to jump.
Yeah,
we're trying to do it.
E-mini's only down 14 here. We've been pinned around the 7,150 mark all day today.
14 days. 14 days.
Unbelievable. It's absolutely historic. It's going to be. I mean, it's been a crazy move.
I mean, it's not often you can say you were trading when history happened. That's what I enjoy.
We've had a lot of history, I feel like, in the last 5 years, despite what I've been told about my career.
I know, right?
The last 5 years, look at my freaking hair, okay? The last 5 years, this was not a walk in the park.
I mean, I feel goated at this point. Okay, I traded in 08. I traded 2010, 2011.
You got it all.
I feel like I've had everything except the crash. The 87 crash, but, it's cool.
As we go into the close here, you're not going to get your 14th day, but E-minis will close basically at the highs of the session here, only down 13. The NASDAQ down to 82 and change. So the Dow basically unchanged. It's been actually the lagger of the group here. The Russell at the highs up 14. Oil up $4.26, gave up 50 or 60 cents into the close here. Volatility futures gave it up a little bit. They're only up 30. You got bonds down 2 ticks. Gold and silver both a little bit weaker on the session here. Bitcoin catching up a little bit towards the end of the day. A nothing day, a surprisingly nothing day. It was not what I had in my book.
I like it. I mean, I'm short Vegas, so I'm cool with it.
This was a good day.
Great day. Yeah, actually was.
We're going to take a quick little 90-second break and come back with more Tasty Live. You got Chris and Ilya up for overtime. We'll see you in the morning. Peace.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Another War Monday. It's still Monday, April 20th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak, your co-host in San Francisco. We're here to take it through the remainder of these 30 minutes as we wind down the trading session here. Another typical Monday for this war market, Ilya, where we gap open lower after a spate of weekend news that makes everyone think the war is ending. But Strait of Hormuz is open Monday through Friday, 9:30 a.m. Eastern to 4 p.m. Eastern, and sure enough, stocks over the course of the session try to cover that gap. S&P 500 only down 0.2% here. Dow's off by 0.01. The Russell's actually in positive territory, up by 0.5% right now. Oil prices did come off their highs. We did see a spike higher in the start of the day, up to 89.60, but we really weren't able to push through there. Much like last Monday when the high print for oil, low print for stocks was in the first hour of the trading session. That's the same case this week here, Ilya. Beyond there, though, with Strait of Hormuz concerns pressing on, metals take a little bit of a lick. We see that the dollar, on the other hand, is down a touch with the yen. We could talk about the rotation in this market with RSP, for example, only up 0.3%, although that is outperforming the broader ES when breadth appears to be broadening out today. Ilya, what say you as we embark upon this new trading week here?
Well, I think when we look at what's going on here, it's really interesting to note that the market had the reaction that you would think it would have. As it turns out, we don't know which Iranian regime we're negotiating with, because apparently they're speaking from very different perspectives, depending on who appears to be in charge. When the speaker is giving us something, when the finance minister, the foreign minister, when they seem to be saying things, that doesn't seem to necessarily line up with what the IRGC bigwigs have in mind. And so they appear to want to get some sort of a deal done. They appear to be sort of more pragmatic. And we get things like, oh, the Strait of Hormuz is open, says Foreign Minister Arakci. We're ready to go back to Islamabad to negotiate with the U.S., which is what Speaker Ghalibaf seems to favor. But then you actually try to send some ships through the strait. The IRGC goes, nope, not so much, and shells a bunch of Indian tankers. So it's unclear exactly what is happening and who it is happening to. And so when it turns out that we don't know who we're negotiating with exactly and who's in charge, the market's gap, they've since closed that gap. And probably the most interesting thing about it is they're not building to the downside or the upside. They're just kind of waiting, which makes you wonder if maybe as long as nothing goes very loudly bang in the night in the Middle East, we're kind of back to earnings.
Earnings are really not in focus today. Largest market cap was $20 billion, and that didn't really move the needle for anyone. In fact, it's such a quiet day that we barely get to 1.25 million contracts traded here in ES. Mm-hmm. That's been a watermark that we've seen on Futures Power Hour for most of the past month and a half. Just given the fact that this has been an active market. So slow start here as we kick off this trading week, Ilya. Volatility is up a touch. I see it's a 47.3 IVR, and that's a far cry from where we were near the 31 at the lows last week. But when I take a look at what happened with volatility today, we got a little bit of a pop at the open, and like oil and stocks, it had its relative high for the day during that first hour of trading. Since then, it's been a steady bleed out. Even the VIX, which tried to pop back towards 20, settles back under 19 today. I know that President Trump mentioned that the ceasefire announcement, that deal comes to an end on Wednesday night. Ilya, given what we've seen about how this war has been conducted so far, do you think the market isn't overreacting to this upcoming deadline because of a proclivity to, say, kick the can down the road?
I think the market isn't ready to say that it knows what's going on. And the mindset has seemingly become, fool me once, shame on you, fool me twice. The point is you can't fool me again. That seems to be kind of the framework that the market is starting to work with, where they're maybe not committing to this or that. As long as there are earnings that are still on the menu. I mean, let's not forget we have a major announcement on Wednesday. Tesla reports in the PM, and it will be probably the touchstone report for this week. Of course, we also have Intel reporting on Thursday, but that makes Wednesday a very big focal point, and it doesn't look like anybody's ready to commit in a hurry. An interesting theory to consider here may be that the administration knows they're not talking to one set of people. And if regime change was the object, the longer the Trump administration drags their feet and the longer the internal conflict between these two or maybe more parties goes on, the likelier it is that the whole thing collapses amid infighting. Now, that could be a strategy unto itself, which means a lot of reversals that are going to be with us in the coming weeks.
I don't think that we could speculate on what the Trump administration is trying to accomplish here. But what we do know, right, is that over the next 24 hours, J.D. Vance is expected to be in Islamabad alongside Steve Witkoff and Jared Kushner to help negotiate. One of Iran's conditions for the negotiations this week in Pakistan was that J.D. Vance would have to be there in person, present himself, which the White House acknowledged. Trump earlier today said that J.D. Vance wasn't going. Then within the hour, they said, no, actually plans changed. He's heading to Pakistan. So, Ilya, as long as those conditions are in place, it feels like the market's not going to try to get too out over its skis. Yeah, I'm curious, though. Are we winding up? Let's just say this is the off-ramp, right? There's, of course, the possibility that everyone flies home from Islamabad feeling, well, not Islam good. That's a terrible joke. And we go back to war. It feels
well,
like
that's
what
the
we
whole
want to
thing.
offer
I mean, the
him, so-
first time we met in Islamabad, part of the reason we didn't have a deal was we didn't know who we were talking to. There was a giant Iranian delegation, and they spent more time fighting amongst themselves than they did talking to the Americans. So who is going to Islamabad from their side? In the Ali Khamenei days, it'd be a tight group, small, punchy, with a message. And it was at least clear, for example, when the JCPOA was negotiated by the Obama administration, it was at least clear who we're negotiating with. Here, there was an assortment of something like 30, 32 officials, some of them of the Ghalibaf kind of Arakchi moderate side, others of the hardline IRGC side. And they couldn't figure out what their collective negotiating position was before any Americans were even in the room, with Pakistan trying to mediate between the Iranians. Forget it, the Americans. So, okay, J.D. Vance is going over there. Who's he talking to?
That's we have Ghalibaf and Aragachi heading over there.
Right.
But they don't seem to be in
With
charge
who?
given the weekend's events.
Everybody else that they disagree with and can't seem to figure out how not to shoot at ships in the strait, even over a 24-hour period?
Oh, yeah. 50 IVR here in oil on the other side of this all. I can't help but notice a lot of people are out there saying that we're going to get a head and shoulders pattern coming together here in oil, and we're going to get a big drop back down towards what would be a measured move if we take a look at 104 down to 84, maybe $20. Maybe if we want to be a little bit more circumspect about it, we can call it a $17 range. So $67 becomes your downside target. I find that improbable, although it does set us up into an interesting situation where if we start to get more of a meaningful technical drift to the downside here, further caps off the likelihood that we're going to see a move back to 100, 105, 110. So keeping in mind how the oil market's shaping up, how are you attacking it this week? I got a lot of different things going on here.
I mean, at this point, I don't have any exposure. I took my oil long position off when we started to have all of these developments really come together over the past week and a half, going on 2. So I have been on the side of doing nothing for now. And I'm waiting for a little bit more clarity. So if you look at the current situation, you're basically sitting at the bottom of what is the recent range. And we tried to break that last week. And of course, with the gap higher at the open of this week, we pointedly say, no, that wasn't the break. So if you look at the M6 contract, CLM6, you can kind of see that there's a sort of range bottom there right around $85 that we attempted to clear and then couldn't. And we're sitting right there. I think it's very telling that with all of this news, oil hasn't cracked or shown anything like what stocks have shown. And this has really been the essence of my skepticism about what's happening in stocks. Because when the war broke out, everything locked in, and it was very clear what the market was saying. Oil up, inflation up, so interest rates up, dollar up, so gold down, so stocks down. All of that was very clear cut. The kind of contours of what is the war trade here very quickly revealed themselves. And by the way, continues to reveal themselves because that was exactly the response at the start of this week. How did we open with bad news from the war? Exactly along those lines. Dollar gaps up, stocks gap down, gold gaps down, on and on and on we go. Yields gap up, on and on and on. The dynamic is clear and the market is clearly still there. But when you get to the unfurling of the war trade, it seems to only come for stocks. Because gold hasn't really gone anywhere. Bonds are a little bit better. if you get early enough in the yield structure, but as soon as you get out into the long end, you're not really doing it. And you start to question, well, if it works one way, why doesn't it work the other way? And are stocks then over-optimistic? Now, that doesn't mean you should be fighting the stock market. But what it does mean is there's something to question here.
When you look at earnings right now, are they leading to those questions, or are earnings being a fundamental pillar of the market's ability to sustain this move to the upside? I feel like I have a very different opinion on this than you do.
I don't think that earnings matter for earnings' sake. I think they matter almost as event risk touch points where the market goes, okay, here's a potential inflection point in sentiment. If nothing here goes wrong, good. Next. I don't think the actual substance of the earnings, and we saw this in spades with the banks, I don't think the substance of the earnings actually matters. Moreover, I don't think it has any kind of meaningful impact now for 2 quarters before this. We've seen this movie. When the Fed put the top in to the S&P, the top that we just took out last week, back in October, that was amid the Mag 7 reporting stretch. Anybody care? No. Did anybody care about the subsequent earnings season? No. So I think these are more so inflection points for where the market goes. Testing. Are we risk on or risk off? Okay, nothing changed. Back to our regularly scheduled trajectory.
I'm thinking about the oil position that I'm carrying right now, Ilya, and I'm still comfortable with how I'm operating in this market. Last week was getting a little hairy when the 79, 77 short put spreads were being tested, but the ones that I established a while back at 63, 61, I see no reason to touch or do anything with right now. I know that we're getting close to the peak decay curve on the typical selling vol trades, but at 61, 63, I feel like I could let that ride into the ground for a while because I don't think we're going to get 61 or 63 below the pre-war lows. On the other end, I'm likewise comfortable with the short call spreads that I have that are sitting up in the 110s, and I can't believe I only sold 2 call spreads when we had the opportunity at 148, 150. But I don't see a reason to adjust any of this, right? I don't think the market, given the pricing right now, I don't see us having a significant collapse below the lows that we had last week in the foreseeable future, although been wrong recently, so possibly wrong before. Not so much in oil, though, which is the good news.
Yeah.
I just also don't see the highs getting taken out recently. So I'm comfortable with continuing to plot along here and look for a lot of chop. In an ideal world, let's say we do get a head and shoulders pattern break here. If we get down below 84 again, we start to see a 7 handle. That doesn't mean I'm going to be buying the puts near 63, 64, expecting, the full expression of this view to transpire. And quite frankly, just to make a adjustment here, that's technically the head, which means, that's what we want to be looking at as our halfway point, which we're bouncing off of. You can see that pivot low here on March 23rd. Likewise, the point I'm getting at, though, is if we did see this, it would give me more confidence in selling more call spreads, right? It wouldn't necessarily be looking to sell the put spreads just yet because the thing could wash out for a little while. When we look at the technical structure as you go further out in time, like the CLU6 contract, for example, there's been no meaningful breakdown below the recent swing lows, unlike what you saw in M6 last week. So, Ilya, an end of the Iran war, that horrific demand destruction scenario that people are fearing probably doesn't come true over the next 6 months, but all the infrastructure that's destroyed probably means supply is going to stay constrained. I think that just keeps a floor under oil prices. So provided the opportunity, the further we go out in time, give me like a 68, a 67 in CLU6. I will happily sell puts underneath the pre-war lows. I just don't want to do it when we're $15 or $20 away from those pre-war lows right now, when there's a possibility we turn the corner and go into a little bit more of a inside to / lower kind of market where we're kind of just stuck at a higher level. And this is, previously.
I think you've got it spot on. I mean, this is really the thing. There is what is the reality of the oil market over time. And then there is kind of near-term volatility as linked to headlines around the war. And those don't necessarily have to be the same thing.
No.
So you can get all kinds of chop here before whatever long-term range takes hold. And the market kind of tries to benchmark what fair value feels like. Mm-hmm. So it's probably not a bad idea to be careful and watching the price action first and foremost here. I don't necessarily see a trade on the board.
Oil's feeling a little bit better now. What do you think about silver here? I mean, silver's been doing this really nice 2 steps forward, 1 step back kind of dance since the low 60s. It got a pop into 83 and change the other day, 83, 83 and a half. We're back down to 79, 79 and a half. Is this a good chance to get this before the train leaves the station? I'm personally been trying to size up and haven't been able to be filled on them yet today, but I've been trying to size up like 84, 85 call spreads that expire in 36 days to take advantage of what looks like a market that's found a base.
You know, I see the same thing here as I do in gold, and it doesn't imbue me with a tremendous amount of confidence. I'm of the same mind as you are broadly, but we had that attempt to break higher last week. We took out some swing highs in that range, and then we capitulated and came back to support from which we were ostensibly attempting to rally. So the initial attempt at an upside breakout failed. That doesn't mean that the upside breakout is going to continue to fail. But it does give me some pause. So I'm sitting here looking for what's going to happen at this support in both of them to see really how this is going to be shaped. And if it breaks support, because we're talking about higher yields and sticky oil and everything like this, I'm very open-minded to that idea. And if we're not, if we're going back to our, what ultimately all of this drills down to is, if people wanted a non-sovereign kind of store of value before, they surely want it more now as a consequence of all of this.
One would think. That's certainly
one
what
would think. So the long-term narrative should reassert itself eventually. I had a great conversation with Adrian Day of Adrian Day Asset Management earlier today. That video will be coming out soon. And he made the very good point that, look, gold was kind of agnostic to monetary and economic factors last year and for a couple of years, not really caring what the dollar is doing, not really caring what yields are doing, but just relentlessly marching higher because of this demand for a kind of non-government linked way to move value, where if governments are weaponizing their banking systems, this is a way to stand aside. And that's not going away. That hasn't changed. What we've had is a response to a kind of oil to inflation to interest rates to a dollar shock. And that will wane eventually, and it will give way to the longer term idea eventually. As ever, the question is when. So I'm open-minded to both sides of this. I just want to see the market actually show me some conviction. Because when it tried last week, it couldn't do it.
Right. Yeah, you had that close above the trend line on Friday.
Yeah.
Looked good. Started to look good, but we couldn't close above the former weekly high. And then we get pulled back in today. It's a green candle technically after the open lower, and very much like every other asset, we can go to that 1 hour candle in gold. In silver, you're going to see the same story in the first hour of trading yesterday. Thereabout, that's where we got our lows carved out by 7 Eastern Ilya, that candle. We then begin to resume our rally. Did we get a gap fill today? The close on Friday comes in at 48.49 and a half, and the highs here today are just short of that. So close, but no cigar. Either way, this orange line, October, November, February swing lows, we have not been able to crack through it. We're ensconced amongst the 1 week, the 1 month, the 50-day moving averages right now. But the way that silver and copper are behaving, you know, they look better. They look like they're perking up. They look like they're holding up. Even copper, they tried breaking down and it couldn't here so far. I do want to end this on stocks though right now, Ilya. It's an inside day.
Yeah.
I'm looking at an S&P 500 here today that gaps open lower. It finds support on its 1 week average, which it has closed above every single session since March 31st. That light blue line has effectively been the trend support in this market over the past 3 weeks now. Where do we find support today with that inside bar? Up against the former yearly high, all-time high at 70.96 set on January 28th.
Mm-hmm.
This feels like if I'm going to be a bear, this is a tough market to try to short still right now because we have the low volume. The vol is staying below 20 in the VIX. What do you do? Where do you set your stop out? If I'm a bear, do I just set it to Friday's high and like hope that I catch the all-time high within a day or two of the market?
I think if you're a bear here, and I am unrepentant in my thinking, though I am, of course, repentant in my exposure because I'm not trying to stand in front of a train.
I like that.
So, yeah. As ever, strong convictions loosely held. Just because I think something doesn't mean I'm willing to lose money over it. What am I, nuts? We're traders here. We can have all kinds of ideas. That doesn't mean that we should be down on a trade because of them. And so I look at this and I say, you know what? We're sitting at the level of resistance we just broke. We've just retested it as support. Let's see. We don't know. If you're going to look for anything here, I think you have to look for longs, unless you've been sitting in shorts, because you've just had a breakout. And so then you go, okay, well, if this breakout is real, then I've got to be long, pending a break under that range again. Now, if it breaks under that range again, then you've got to run, because what you've had is a false breakout of epic magnitude. But we don't know that. It hasn't occurred. So for now, I would say actually you're better biased on the long side if you're initiating new exposure. I'm not prepared to do that here because, again, I am seeing a divergence in the way that the markets behave around these war trade on, war trade off ideas. And that's giving me some pause. And I've got long-term exposure, longer-term exposure with still over 35 days DTE, well over, closer to like 38. And it's at max loss and at very manageable max loss, basically. A little bit better today. So I'm okay sitting on it and waiting. But if I'm initiating something new, my stop is that range, and I'm looking at the long side until proven wrong.
Until proven wrong, which maybe it'll be tomorrow because overtime's out of time for this Monday, April 20th. Can stocks get much higher? That's
Sure.
my 420 joke. We're done here. Ilya, see you tomorrow. Stick around though. Ilya's back. Packer Money up next. You're watching Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. Number 1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University.
Number 30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. Number 6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Let's celebrate, dance to the beat. Forget the walls and stomp the feet now. The fun and games and memories I love to share with my family. And everything is better when we get together. Everything is better when we are side by side. Hey, side by side. When we are side by side.
Well, it's not what we thought last week, but is it what we thought the week before? This Iran war continues to confuse and confound, and the markets are starting to show that confusion. We're going to try to figure out what it all means and where things are going. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and this is Macro Money. We're going to get into the price action first and foremost, of course, because this is where sentiment will ostensibly reveal itself. Certainly much more impactful and much more meaningful, I think, than anybody's opinion. So let's get our start and see if we can get our bearings there. And then we'll take a look at the most interesting angle, perhaps, this week on this conversation, and that is the emerging implications of what all of this is going to mean going forward for inflation, for growth, and by extension, of course, for the Fed. Because what the markets have consistently shown us all through this process is at the end of the day, it is the cost of money that matters. And so all of this ultimately drills down to what it means for that, and that is in the hands of the Fed. So let's take a look at the market as it presents itself. Of course, we start with a look at crude oil here, which has an interesting response to the news coming over the weekend, as you might expect, moving higher because what we learn is that we don't actually have what we thought was an on-ramp to ending this war. And so we get a gap higher. Now, we ended last week, of course, with tremendous enthusiasm around the idea that not only have we had a ceasefire between the U.S. and Iran, but the U.S. has strong-armed Israel into a ceasefire in the second front of this thing in Lebanon, where it's fighting the Iran-backed militia Hezbollah. We also had pronouncements, incredibly, from both Washington and Tehran saying the Strait of Hormuz is open for business. And that lasted until the close of trade on Friday, give or take. It almost looked, in fact, like crude oil was starting to break down, like it was taking out its lower end of the range that has contained it basically since the start of the conflict, but not so much. What we end up seeing, of course, is that we get a gap right back into those levels at the start of the week, because over the weekend, it turns out it's unclear which Iran we're negotiating with. Is it Speaker Ghalibaf and Foreign Minister Arakchi, or is it the IRGC hardliners that don't see the world that way and don't wish to give up any of Iran's nuclear aspirations in the way that Washington is demanding? Because what we see over the weekend is a quick walk back saying, actually, the strait's not open. And then when two Indian tankers attempted to traverse it, they got shot at by the Iranian side. And then, of course, the U.S. responded saying, actually, you can't blockade the strait. We're blockading the strait for your ships. If we can't have it and everybody else can't have it, neither can you. And the U.S. seized an Iranian tanker off of the Gulf of Oman after it exited the strait. So we're looking at a situation that has basically reset. And perhaps what's interesting here is ceasefires oftentimes fail. Ceasefires in the Middle East fail probably most of all. There was a study published in The Economist over the weekend suggesting that of the 180 plus ceasefires in recent decades, pretty much every single one failed and were just stepping stones to negotiating further, and then another ceasefire, and then further, and then another ceasefire. And rarely did they mark the true onset of a lasting peace. And also that the ceasefires between belligerents in the Middle East broke apart the fastest of the bunch. So perhaps this is not unusual. Perhaps what we're watching is the typical kind of back and forth in a negotiation. And so the markets don't really take this too harshly, at least at first. We got this very emphatic rally last week. We took out what has been the top for the S&P 500 and a kind of sentiment marker going all the way back to late October. That was when the Fed chastised markets for over extrapolating rate cut expectations, locking them under these levels basically until the war started to crack things down into those lows that we see from late March into earlier this month. And so we, at this point at least, seem to be holding the breakout. And that's despite the fact that we had a downside gap for the S&P. Of course, there it is. And we end up with essentially an inside day, and the market's seemingly circumspect about making up their mind about what is likely to come next. So perhaps the most interesting part of this equation is that while the markets were certainly willing to rally around the idea that this ceasefire will get extrapolated into something that is more of a lasting peace, they are not so willing to assume that the inverse could be the case. They are not willing to give up on the idea that actually it's possible that this whole thing is going to fail and we're going to get back into the fighting, which of course is not an implausible thing. And so the headline watching continues, but at least for now, it seems the markets are in a kind of holding pattern here. And that is maybe the most encouraging thing for sentiment at this point, is that really we could have had a bigger breakdown and haven't. It's a similar sort of inconclusive story across the major markets. We can see, of course, last week we had a big surge in the bonds, again, around this same idea that we are going to have an end to this thing. And so the inflationary aspects of the story here are going to unclench a little bit. So what you end up with is the bonds getting higher, yields coming in a bit. Of course, when we started this war, the process was straightforward. We had a spike in oil. That spike in oil was going to be a risk for inflation expectations. And those inflation expectations were going to get the Fed to be less dovish, and not just the Fed, but global central banks more generally. That would mean that higher rates would make the dollar more attractive because it would confer a higher yield to hold it, as well as, of course, US dollar denominated assets like treasuries. It would also then, by extension, be something that weighs on gold and, of course, weighs on stocks, which have been waiting breathlessly to get stimulus and have been annoyed consistently when the Fed has denied them the prospect of stimulus, hence that top in October for stocks that we just talked about when the Fed appeared to be letting markets down. So the general narrative here has been relatively easy to discern. And since the beginning of the week, we get a familiar engagement with it. Again, we saw stocks gap down, we saw oil gap up, and by extension, we end up seeing a gap in the bonds, but we ultimately don't end up going very far. And so an inside day here too, and the markets seemingly again in a familiar holding pattern at familiar congestion levels. Same thing with gold. It tries for the downside around the shock of the ceasefire seemingly coming undone and ultimately doesn't go anywhere. We still, of course, have this setup here where gold went down as a consequence of the war. It has retreated from the lows and recovered maybe about half of this move lower. But we certainly don't have the kind of exuberance here that we do in stocks. We certainly don't have the kind of exuberance in the bonds that we have in stocks. We certainly don't have the kind of exuberance in oil that we have in stocks. And so the general kind of lay of the land continues to be the markets want to believe they're not running away from the possibility that this thing is on some sort of a path to being wound down. But whereas the stock markets seem happy enough to conclude that happy days are here again and are holding on to that idea even through this test, all of the other related markets that were following that same narrative continue largely to hold on to wartime moves, albeit in a diminished way. So oil is obviously still much more elevated than it was back before the war started. Similarly, interest rates are still meaningfully higher. That is, bonds are meaningfully lower than they were when this thing started. Gold is, as we just saw, substantially lower than when this thing started, though it's come back a bit. And of course, the US dollar has had a blistering rally against the backdrop of this war. Thank you, higher yields and risk aversion. It's pulled back, again, about halfway, not unlike gold, but it's still holding these levels. And so the question continues to be, are stocks right or is everything else wrong? Because the upshot seems to be that we, in fact, still have inflation locked in at a much higher level, and that's going to impact economic conditions. And while stocks as a sentiment creature have embraced that at this point and said, well, that's going to be fine, everywhere else still seems to be at least about halfway unnerved. So, how are we going to parse this? Well, aside from feverishly watching what happens both in and around the Strait of Hormuz, as well as the negotiations that may restart in Islamabad, in Pakistan, we're going to be looking at a bit of economic data that should help to shape the story a bit. Most importantly, at the beginning of the week, we touch on U.S. consumption, which is, needless to say, a key input into what we're talking about. And what we see here is, first, the retail sales report. And the expectations here are quite impressive. We're looking for a rise of 1.4% month on month. That would be the strongest that we've seen since back here. So call it early 2025. And in any case, we can see this is not usual. Anything into these kinds of high levels month on month is relatively uncommon until we sort of get back to things like big spikes around COVID reopening and such. But for recent kind of post-COVID dynamics, you'd have to go before 2023 into 2022 to get consistent numbers near these highs. Otherwise, retail sales have fallen below this threshold. And so it'll be interesting to see if all of this this pressure on fuel prices, on other things, is starting to eat into the buying of things that aren't immediately linked. And if it's starting to have a kind of crowding out effect on consumption. Now, in general, things have held up reasonably well as far as overall dynamics. We can see mostly retail sales have been rising for the past 3 years. There are many more up bars here, just anecdotally, than down ones. And so the trend is understandably higher overall. And even so, consumer confidence has been flailing. And that is, of course, the University of Michigan Consumer Confidence Survey, the April numbers here coming in just abysmally low. And that's despite the fact that actual retail sales continue to appear like they're holding up. Now, it may be that consumers are just choosing to stomach it for now, and sentiment is not being relayed into actual consumption, but that seems like a matter of time. And we're going to get a revised set of these Michigan numbers for April at the end of the week on Friday. But even just where we sit right here, it seems like while the situation has held up, generally, the danger is that this begins to finally weigh on things and weigh on them in a more lasting way, because, of course, we can see much of what's going on here is a function of inflation expectations. It's surely no surprise that the last time we had a low in sentiment with a sharp climb down was during the inflation scare post-COVID. And when the Fed really got to hiking rates and beating that inflation back, sentiment recovered and held up near the highs until, of course, we got into 2025 and the onset of the tariffs, which started to drive inflation back up again. And so since then, sentiment has cratered and is actually lower now than it was after that inflation scare following the pandemic. And of course, this matters so gravely because consumption is overwhelmingly the most dominant component of US economic growth. So if that falters, then we have a much bigger issue than watching war headlines as such. We're starting to look at a recession on top. And of course, it hasn't faltered yet. But this is a very important thing to consider when sticky crude oil appears to be telling us that whatever we're going to do here with ceasefire, no ceasefire, deal on Hormuz, no deal on Hormuz, oil is holding in its range. That range is meaningfully higher than where oil was at the beginning of the year. We're looking at about a 30% more expensive oil, even with all this positive news that the stock market seems to be so incredibly excited about. And so it isn't the best of stage setting when we consider that given how important consumption is, given how big of a piece of the pie it has been slowing. The contribution here to overall GDP from consumption has been declining. And it's been declining basically since the beginning of last year. It certainly had a very ugly first quarter of last year. It rebounded into the second. We can see there's a lot of back and forth here with front-running the tariffs. So there's big swings in imports, big swings in inventories to try to get around those tariff costs by importing as much as possible and then stockpiling it. But as things normalize, we can see we're increasingly getting into a space where everything is getting squeezed. We can see in the fourth quarter, of course, government expenditure was hurt by the shutdown, that period's government shutdown. But much more importantly, because government spending, as we can see, not the biggest thing here to consider, but consumption, which after this rebound has been getting hemmed in. And that's probably not disconnected from the fact that inflation has been ticking higher at the core, never mind energy. And for that matter, never mind food. Take a look at what's been going on here over the past several months, especially since the beginning of the year, and you can see core services inflation, by far the biggest component of overall inflation, it's been going up. In fact, since essentially January, we've had higher inflation really across all these categories. Again, energy completely factored out. And obviously, that's not a positive sort of a scenario if the economy isn't meaningfully accelerating, because what it means is that the tariff overhang is longer. Other inflationary pressures are gathering, be it housing or core services. And then on top, you have this energy shock. Not the greatest of all news for consumption, surely. And again, raising this question of, well, if consumption is getting hemmed in as a share of GDP, and GDP needs for that not to happen in order to grow, do we now have a recessionary issue at the same time that this shock on the inflation structure has given us much more hawkish expectations for the major central banks? Note, we've had the ceasefire and stocks have rallied and the path to La La Land has apparently illuminated, except for we're not unclenching in Fed policy expectations. We were looking at 50 basis points in cuts before the war. We've erased them, haven't really put them back on the board. It's looking a little bit better for the Bank of England, where we're getting back to no rate hikes, having gone from 50 basis points in cuts to more than 50 in hikes. We're getting a little bit better for the ECB, not so much for the RBA. But the meat of the shock to prices and to policy expectations from the war, it's not going anywhere. it's still here. Much as the bonds have come back, but only maybe about 25, 30% of the way. Gold has come back, but maybe only about halfway. Dollar has come back, but maybe only about halfway. And so the markets are off the hysterical part of the inflationary narrative, but they're not off the story, and they're not off what they expect the implications to be for policy. And so with that in mind, watching these retail sales numbers and these consumer confidence numbers this week is going to be critical, because it'll tell us to what extent this thing is already hurting growth. And then, of course, we'll see if stock markets continue to be as chipper as they are, or whether what we're seeing here is more about the immediate satisfaction of the war looking for an exit rather than the substance of the consequences to follow. And so positioning-wise, what I've got on here is now a little bit of a short exposure on gold. I'm back long the US dollar. I'm balancing the exposure on gold with still holding short puts here longer term. I've had these on for quite a while, and it's still in good shape because the premium received still exceeds the losses on the trade. So it's still net a profitable position, and I'm looking for this to continue for now. I still have some time on it before I take it off, and maybe the volatility in gold will continue to contract and to feed this idea. But because we've had the kind of risk on sentiment, I've had to take off the extra short exposure in the S&P that I put on last week. I've still got 39 days left in the core position, the puts here in SPY, NASDAQ, and Russell. I'm going to have to figure out something to do with this Russell here pretty soon, roll or not. It's only 11 days to expiration, but I've also had some bullish exposure that I had to put on Bitcoin via IBIT to balance the books so that I am not overly tilted risk off. I've also kept the long end of the yield curve on here, short the bonds, looking for yields to go up because ZB has held up better than ZM, but I took off IEF, the middle of the curve, because frankly, yields have pulled back there meaningfully enough to where the trade is suspect. And then, of course, I have my longer term risk on exposure in Brazil still sitting, plenty of time left here. And so that continues to be something that's just there in the background. And that is Macro Money for today. As ever, we are here right after overtime. That's the show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.